Hey traders, it's James here from the A1 content team, and as we start today's stream, I want to share with you some exciting news from our friends over at FX2 Funding. FX2 has just launched their two-stage evaluation. The two-stage differs significantly from their one-stage, offering many benefits to traders. First of all, the profit targets are much more manageable, with 8% in the first stage and 5% in the second stage. Next, you'll get a 10% fixed overall drawdown that does not trail your account balance. You get all these perks on top of FX2's existing world-class customer service, high-performance technology, and a choice between two amazing trading platforms, CTrader and DXTrade. There's a reason FX2 Funding boasts a Trustpilot rating of 4.7 in this time of industry turmoil. They are a serious company run by seasoned business professionals and always take conservative steps to protect their traders. For traders looking to get funded, you can use promo code A1Trading15 to save 15% on all funded accounts. That's A1Trading15. The promo code can be found in the link in the description below and in the live stream chat right now. Now, on to the show.
All right. Good morning, everybody. Welcome back to another live stream. Hope you're doing well. Today's like probably the biggest day of the month because we start out the day with inflation numbers and we end out the day with just a light mic drop from Jerome Powell. It's going to be action-packed, to say the very least. And I just want to show you the caliber of today's economic data, as well as what we're expecting. It's just huge. It's just huge. So we get so many different things. The big one here this morning, and I should just go ahead and disclaim, guys, we've got 400 people. We just started the stream. We are going all day long. We're gonna be going all the way through all of this news. If you would do me a quick favor as we kick off the stream, help us start the show. If you're here with us now, you're part of the kickoff squad. The race just started. We're going for, I don't know, several hours today. We've got guests from all over the world joining. We're going to be having different show hosts come on and hang out and take over the show for a little bit. We're starting out today with a big one. We're starting with CPI. We've got CPI this morning. We'll get some reads on inflation. Later on, we'll be getting the rate decision from the Federal Reserve. They are almost certainly not going to cut rates today, but the more important factor is not whether or not they cut rates. That's a given. They're not going to cut rates today. If they do, something's gone seriously wrong, and we should all be terrified. But they're not going to cut rates today. But more important, they're going to give us projections on when they may be cutting rates. We get the economic projections today. We get the press conference today. We get the consumer price index year over year today, both core and headline. To say that today is a big day is just an understatement. It is a huge, massive, gargantuan day. Okay? What is the market going to do today? Let me be the first one to say that I don't know what this data and what the Fed is going to say. Okay. A lot of times when these streams start up, I warned you yesterday, you're going to get a lot of people here in the chat today who say, Nick, what's gold going to do? Is it going to go up? Is it going to go down? Should I sell the dollar? Should I buy the S&P? Should I sell the NASDAQ? Just wait. Just pause. Take a breather. Everybody, take a deep breath. Okay. Ready? Take a deep breath and relax for a second. We do not know what the CPI number is going to be. So let's start there. So if you're somebody saying, oh, sell gold, it's going to be easy, or buy gold, you don't know and you're gambling. We don't know what that figure is going to be. If people knew what gold was going to do on the CPI number, wouldn't it already be moving there? Okay, so we don't know. The public does not have that information. We get that information in 10 minutes. Now that we have that out of our system, we're not gambling before the news. Now what? Well, the thing here you have to understand is that the inflation figure today will have, in my opinion, most likely some very strong follow-through effects. If we get inflation cooling today, a lot of things are going to rally. If you get inflation coming out lower than anticipated, Because remember, inflation's the big bad wolf in this market right now. Inflation is the problem that won't go away. So here's the thing. If you get inflation figures today that say inflation is coming down 3.2, 3.3, if you get something better than expected, the market will be happy. And so if the market's happy, what happens? The dollar sells off. The stock market probably goes up. Specifically, you can get deeper than just the stock indices. You can go into the sectors, right? Real estate would celebrate big time. Technology would celebrate big time, go up a lot more than the others, right? But if you get the opposite, and by the way, gold would go up too, probably. But what if you get the opposite? What if today we get hot prints from the CPI report? What if we get 3.5? What if we get 3.6? The market will do the opposite. It will panic. It will freak out for a little bit. And it would probably do the exact opposite. Sensitive areas to interest rates would go down. Real estate, probably the NASDAQ, the Russell, right? Those things would go down on a scary inflation report. The market is shaky ahead of this report because everybody's wondering, what are we going to get? It's like that mystery box, moment when you're playing Call of Duty Zombies. I always liked getting the ray gun. I always thought that was awesome. Anyways, so today we get so much data from the Fed. We get so much data from the consumer price index. And so again, take a chill pill for a second. We do not know what is going to happen on the spike. In my personal opinion, if you are making a huge bet on what CPI is going to do to the market in the very short term, you're gambling. And you might say, well, Nick, how could you possibly say that when you literally have a trade on in front of us? I'm long gold right now. I'm long TLT right now. So clearly I already have a horse in this game, or a horse in this race, right? So that's where yes, you can kind of call my my bluff here. But I'm not betting, like I didn't just place this bet full margin with 8 minutes to go to CPI. I've been in these trades and I know what I'm going to do if I'm right, and I know what I'm doing if I'm wrong, and I know how much money I'm going to lose if I'm wrong. And that's the difference. A lot of times people will just full margin their account and hope for the best. Do not do it. I'm telling you, you will get caught. You will get caught at some point. Maybe not today, maybe not next time. But if you play this game like a casino, the casino always wins in the end. So why the gold longs? Well, the gold longs were not based around, oh, CPI is going to come in cool. CPI coming in cool would be helpful to my position, but it's not the only thing that I am looking for in a gold bullish setup. From a fundamental perspective, economic data recently has lightened up a little bit out of the US. We saw some PMI misses. We saw GDP misses. I'm talking about misses from the forecast. GDP missed, manufacturing PMI missed, services PMI beat. So that's strength. Remember, gold typically does a little bit better when the economies of the world are looking a little shaky, because people say, oh, they're gonna crank up the money printer and the price of gold is going to go up, right? That's the idea. Retail sales missed the last time around. We had inflation last time, did show some signs of cooling, but still in a high place. That is gold sweet spot. Employment change, unemployment rate. So jobs data came in mixed because you had a tick up in unemployment rate. The percentage of people looking for jobs that were unemployed went up. But otherwise, jobs did also get added. So some mixed sentiment there. And then interest rates have recently been falling. Let's take a look at the 10-year. Look at, let's pull that up for reference. Recently, the 10-year yield has been coming down, which is a positive factor. The 2-year yield as well has been falling. That's a positive for my gold idea. Now, let me add some context, because you might say, well, Nick, so you're saying gold long going into CPI. Well, I'm telling you to do nothing. I'm not telling you to do anything. I'm telling you what I am doing, first of all. Second of all, I could be completely reset today by the CPI report. I don't know what the CPI report is going to be. I'm trading reactive. So if the CPI report does come out and it's not great today, I've got a level just below support here that has told me, or this is my point to tell myself, okay, time to cut the trade. It didn't work out. So if that happens today, if we get a hot CPI print and the market freaks out about everything, gold's going to probably go down. Stocks are going to go down. So you might get a little bit of a reset story. And that's where I need to stop out of my trade. So please understand, nobody knows what the market's going to do. And anybody who's trying to fake guru you into thinking that, they know exactly what CPI is going to bring is full of it. Okay. Nobody knows. That being said, I know what I'm going to do based on what the CPI print is. If it's hot and gold doesn't like it, right? It could come out hot and the market could bounce. So keep me in that trade. But if it comes out hot and the market absolutely tanks and it's really a hot CPI print, I need to get out of there because gold may continue lower. But if it comes out cool, I want to stay in the trade and I want to look to trail stops. Hopefully that makes sense, but that is where I am looking out for with gold. It's one heck of a stop loss. Well, I'm a swing trader. I'm not a scalper, so I've been in this trade for a couple of days already, and I'm just watching to see what CPI brings. We're just a couple minutes out, guys. The Nasdaq racing higher, chasing the highs into this CPI print. To say that the market is confident, it's definitely an understatement. The market is really, really confident. Also, just do me a quick favor, guys. If you could, thumbs up button on the stream, help us out. Trying to get the stream rolling, get more names in here. I've got just a few minutes to go before CPI gets going. We're going to be trading the news all day long on this stream. Just a heads up. Stick around with us. If you're new here, make sure to subscribe. We'd love to have you come around for more shows. We do this every day, Monday through Friday, for all the major news events out of the U.S. And we have so many different guests who will come on and do their thing. So we invite you to hang around on the A1 Trading Show more often. Nick, I dislike you and I love you at the same moment. I don't like fundamentals, but they are so important, very important. I learned so much from fundamentals. I don't know how to take that message, but if you dislike me, but you learn something, I can take that. I'm okay with that. I'm not always likable, but if my content is helping you in some way, then I'll take it. So thoughts on the NASDAQ for me. I'm interested in a pullback, to be honest. If we get it, great. If we don't, I'll just stay on the sidelines. But today is a prospect for a pullback in the NASDAQ. If you get an inflation number that is hot, some of the excitement around the NASDAQ and the S&P might pull back. So it could be an interesting day, but otherwise, if that print comes in light, this NASDAQ will probably pop. Again, I don't know what the print is going to be. We're going to wait and see. But if we see a nice accommodative print on the NASDAQ, we'll probably see even more highs. I mean, we're already at the highs. So to say we would see new highs today is a very easy, obvious statement. But it's all dependent on what we get out of that CPI print. Nick, will you ever be an influencer boxing? No. I did box for like 5 years. I did like MMA stuff, like Muay Thai. Never really got into jiu-jitsu, but I always liked the stand-up MMA stuff. Sounds like, I don't know, my thought process was like, oh, MMA people are so like toxic and aggressive, and they are some of the nicest people, and it is such great exercise, and I just think it's an awesome thing. I think everybody should do some sort of martial arts. I didn't do that until I was in my like 20s, but it was really cool. It was a great learning experience and really good for your mental health and your fitness for sure. Guys, we are coming in about 2 minutes away from the CPI data. We're going to be reacting to it today, and just a reminder, don't go anywhere after the spike. Most people will leave after the spike because everybody wants to be a spike junkie these days. Just tune into the spike and then gamble and then walk away. Don't let that be you. I'm telling you, the real trading happens after the spike. Once you understand and dissect the fundamental story that's coming out of the spike, that's where the real action is. So we are closing in on just about 1 minute to go, guys. Let me show you what you're looking at here today on the screen. So just to keep it convenient for you, I've got all these different markets on the screen. If you are somebody who watches indices, you've got the S&P right here, the NASDAQ right here, the Dow Jones right here. If you're somebody who watches the dollar index is right here, the pound, the euro, gold is right here, and oil is on the bottom right. So I've got all of our different major markets. Just for easy access to see so we can react to all of it. And then I will be pulling up the numbers and giving you guys my take on them as soon as we have them. So smash that thumbs up button, and we're going into our breaking news here. All right, 10 seconds to go. Let's see what CPI gives us. All right, CPI should be coming out here. Euro just jumped up. Dollar dropped. The market just jumped big time. You just had the Dow Jones up, dollar index down, gold up. Very nice. Pound, euro, NASDAQ. Everything seems to be rallying off of a cool dollar. That's going to suggest probably that we just saw a cool print. And there it is, 3.3%, guys, came out on the CPI report here. That's the year-over-year figure, and that is some great improvement in terms of the inflation story. You got inflation coming down. 3.4% was the consensus. You got 3.3 here this morning. That is a beat. That is better than anticipated. And if you're somebody watching the dollar, obviously, that's not a good number. That was a very weak number for the dollar bulls here. But let's go take a look at some individual charts, see how this is all shaping up. Gold did pop initially. Wow, what a quick spike and pullback here. But look at that. Gold jumped a total of 1% in just a split second there. Let's take a look at the S&P and NASDAQ. They're up 1%, just about. The Dow Jones up 0.75%. The Russell, my goodness, I'm glad I got out of that short position. That thing really exploded here. Look at that. The Russell's up 2.5% on the day. UK 100's up. You got some foreign stock markets jumping. There's that dollar index really tanking off of that news. And look at that. The way resistance teased. Look at that. That was so teasing. Look at that. We had 2 days in a row where the dollar index looked like it wanted to break out. And it just came out with CPI and just said, nope, not actually. It is early in the day. Please remember that we have news all throughout the day. We have the Fed coming on later. I mean, this is an action-packed day. And so we'll keep tabs on this. But right now, the dollar index is starting out looking very bearish here this morning. What a move. Really big push to the downside there for the dollar index. Yields are probably dropping hard. This is great for my TLT position. So this is a good day. We've got TLT up, gold up, stocks up 0.75%, 1% for the NASDAQ. Those are great. The great pushes higher for stock market. The Dow Jones up 0.7 now. Russell is continuing to drive higher. Why the Russell? Well, remember, the Russell is very sensitive to interest rates. If interest rates are coming down, the Russell would love that, because that could suggest that borrowing costs could come down, and that, maybe some stimulus comes into the economy, and that could be good for the Russell. So we saw a little bit of a shift here in the nature of the Russell. That being said, again, I shorted the Russell, and I ended up getting trailed out for a profit. So I shorted here. I got stopped out like right here. So I took a profit, but it was very small. But I'm feeling very gracious that I did trail that stop, because otherwise it would have been a much bigger loss there. So huge move there. Gold, again, let's keep an eye on it. The daily chart seemingly holding. We're back nicely in the green on this gold trade. TLT is another trade, like I said, that I have on currently, and that's looking really good. I may sell calls against this at some point. But today, look at that. Yields are dropping. So you know what's going to be on the move today is probably things like we talked about earlier. Real estate is up 2% just about in the pre-market. That's a sign, right? You've got Bitcoin moving up. Again, Bitcoin also very sensitive to interest rates, as much as the crypto boys and girls don't want to admit it. They play at the same table as all the other markets. They are a risk asset. The S&P 500 up 0.8%, NASDAQ up 1%, really making pushes here. And again, what this is going to say for gold, by the way, this is going to be great for gold. This continues to be a +3 on the inflation department, okay? NASDAQ is going to love this too, because inflation is coming down. And inflation coming down is strong for the NASDAQ. Why? Because again, Expectations for rate cuts stay in the picture. So really interesting stuff here today. Again, I want to caution you that you don't get overly, excited about one way or the other here today, because again, later on we have Fed speak. We have Jerome Powell, his press conference. We also have interest rate projections. There's just so much data here to come out today. So I just want to caution you before you get overly sold one way or the other. CPI today is probably the story, in my opinion, but the Fed could change that if they say something more hawkish or more dovish. So something to keep in mind, to be very, very careful. So yeah. Also, I should mention this, by the way, guys. So here's our top setups for the day. You've got the TLT position that I'm in. This is part of the EDGEFINDER's bullish setups. I'm long gold because the EDGEFINDER helped me spot that. I don't have a NASDAQ position. And then let's see what else. UK 100, Aussie Swiss, Dollar Swiss, CAD Swiss. I'm not in any of these trades, but these are the three trades that I really picked up on the EDGEFINDER. And I should mention that if you aren't already using the EDGEFINDER, it is currently 25% off for today's stream. If you are not already using the EDGEFINDER and you'd like to pick up a copy, if you're a regular viewer and you'd like to pick up a copy for 25% off, here's some information on how you can do so. We're going to be dropping a link here in the chat. If you are somebody who would like to get a copy at this discount for today's CPI stream, we're doing a special sale event for you. If you want to pick up a copy of the tool, click this link and chat directly with a member of our staff. They will get you hooked up for that discount. Again, it just takes 2 seconds to head over to the chat, go to the chat and click that link that's being dropped, and that will take you right here. So check this out. When you click that link, it's going to take you right here. And then you can just click EDGEFINDER 25% off, and you will be good to go there. So it should be, there it is. I just put it in the chat. So there you go. Talk to is right there. Click that link. You can chat directly with a real person on our team. Pick up a copy of that discount before the sale ends. That will not be going for very much longer, but you can get yourself a copy of the tools that I'm using to analyze what the market is doing in terms of economic data. We will be getting updated inflation figures today. It's going to be very interesting. We'll see how it impacts all of our different scores. Right now, again, gold is going to remain a bullish setup on the EDGEFINDER because inflation figures came out accommodative. That's good news for gold longs. So again, we will see how this price action forms, but I'm confident, or not confident, but I'm willing to stay in my trade. I'm confident in my gold position as long as we don't break these lows. Okay. So something to think about. Any VIP signals discount? Yeah, message us. We'll extend that offer to you too. Dino, if anybody wants to join the Discord as well, just shoot us a message and let us know. Let my team know that you were watching the stream that I mentioned. You can get 25% off the Discord today as well. We'll just do a store-wide today for the CPI stream. So you get 25% off whatever you want if you message us today. That is today only. I have to disclaim that if you're watching this tomorrow or the next day, that's not the same offer. Just today, 25% off if you want a membership or if you want a copy of the EDGEFINDER, you can get it today at that discount. And that was only today. How do you know when to buy? I've never done Forex. Well, gold is not necessarily Forex. Gold is futures, could be Forex, could be stocks. You can trade gold wherever you want. But if you're talking about currency pairs, that's different. Speaking of currency pairs, we've got the euro and the pound. Look at this. I almost picked up a pound position yesterday, and I didn't do that. I was looking at it, but I was like, you know what? I'll wait and see if it comes down to this area. But sometimes you just miss the move. Pound is moving higher. Dollar yen dropping. Dollar Swiss dropping. This was another trade that I wanted, but didn't quite get the entry on. Dollar Swiss to a pullback there would have been really nice, but I didn't quite get it. So we'll keep tabs on it. Bear with me one second, guys. I just want to make sure Okay, let's check in again. So the S&P still up 0.75%. Really nice move. Makes a lot of sense though. You know, inflation is coming down. That again, not great for my idea. I did sell calls against my my VOO position. I'm still in the trade, but I've sold calls against VOO. So not my best move here because again, what that means is that I've sold I basically have agreed to sell my shares to someone at lower prices than where they currently are. So basically like taking profit too early, but it's okay. I'll take a profit where I can get it. And maybe this market pulls back. If we get that NASDAQ pullback, I'm very interested, but I've been saying that for a while. So just going to wait on it. The NASDAQ looks really strong today. And same thing with gold. I still have gold and TLT, which to be fair, TLT is actually up more than the S&P and the NAS. I'll pull up my positions. We can take a look at them together. So again, not a bad day. We've got gold up really nice today, and TLT, which is a smaller position than my gold position, but still up very nicely. So how will this affect interest rates? Great question, Joseph. So the thought process on this is if inflation is coming down, if inflation is no longer the big green scary monster that everybody's afraid of, I mean, it's still a problem. Don't get me wrong. We're not out of the woods by any means because inflation could theoretically go back up. But if inflation is becoming less of a problem and less likely to be one, the market's going to celebrate that because what the market's going to say is, market's going to say, oh, if inflation is cooling off, the Fed's going to cut rates because they don't need to keep rates high if inflation is already headed down. They want to cut rates if inflation's starting to come back down into the 2% target rate. So why is the market celebrating today? Think about it this way. If you're a company and you borrow money and it costs you a lot of money to borrow money right now because interest rates are high, if they talk about cutting interest rates, is that good or bad for your company? It's great. It's great for your company because you can borrow money for cheaper and grow your business more aggressively. That's the idea. And so today the market is cheering that. They're saying, yes, we've got inflation reeling it in a little bit, cooling off. We very well may see the Fed start to cut rates, which will be more accommodative to businesses and consumers, right? If inflation's coming down and you can go get a loan for cheaper, you know, if you want to go buy a house, a lot of people have been waiting to buy houses for a long time. Totally not me. It actually is me. Me and my wife, we want to buy a house at some point, but interest rates are high. So we're not in an immediate rush. So we're just kind of waiting on the sidelines. And I feel like that kind of embodies a lot of people in our generation, right? A lot of people are like, inflation is really high, prices are really expensive, and the cost of borrowing money is very expensive right now. So just wait. And so we're starting to see some optimism of, well, look, inflation is at least coming down. We had jobs numbers that were pretty strong. So jobs hot, inflation cool. Again, that is a little bit more optimistic than I have been in recent weeks. The jobs data coming in nice in terms of employment change gave us a +1 score. Unemployment rate ticked up, which is not always the most positive thing. But inflation is going to look good today. It's going to stay looking +1 on the EDGEFINDER. So the EDGEFINDER's bullish reading on the NASDAQ, I think, is pretty valid if I get a pullback, right? If I don't get a pullback, again, the EDGEFINDER is one thing, but I don't buy and sell just based on the EDGEFINDER. I look for setup still using technicals, using risk management, using all my, standard practice trading stuff. The EDGEFINDER just helps me with a directional bias based on what the economic data is telling us. You'll notice that if you're an EDGEFINDER user, you'll notice this. This columns these columns are much wider than the other ones. That's because the weighting of economic data is very heavy on the EDGEFINDER. You're rarely going to get a really strong signal on something on the EDGEFINDER if the economic data just disagrees completely. If you want to try out the EDGEFINDER again, you get 30 days here. And also, if you're somebody who has tried it in the past, or you are just would want to take advantage of the 25% off sale that we're doing, again, we just dropped the link here a moment ago, but we'll drop it one more time. And you can pick up a copy for 25% off during the live stream here today. All right, guys, we're going to take just a really short break and come right back. We're going to be hanging out with Marco in just a moment. He's going to be taking over the stream later on, and we'll be chatting with him a little bit, see what his reaction to all this volatility is. Stay tuned. We'll be right back with Marco just after this quick break.
Attention, A1 Trading Show fan. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker, Eightcap, is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we are back with Marco. Bear with me for a second, Marco. I'm hiding behind this thing.
Sure.
Oh, I've arrived.
Hello.
How's it going, man? Good to see you.
Hello, good to see you.
Hey, Marco, so we just had the CPI report. Good news on the market front. The dollar is down, and usually the theme is when the dollar is down a lot, usually it's good news for like everything else, for commodity prices, for the S&P, for the NASDAQ, for other currencies. I imagine, yeah, you take a look at the currency world, you got the Australian dollar up 1%, Kiwi dollar up 1%, and other currencies really basking in the sunlight, if you will, of the dollar's fall down today. I'm curious what your thoughts are on some of the charts that you watch, and I'd love to just see what you got for us today.
Yeah, sure. So I got slipped pretty badly just now. So I had a Aussie dollar short. It was right here. Can you see my screen?
Yeah, we'll switch it over here.
Yeah, sure. Yeah, so I saw a range right here, some ranging price action. Identified the top of the range right here, and the bottom was kind of here for me. Price went into the upper part correctively, retraced with a nice fat red candle, so I got in 10 pip stop loss, aiming for a 3-1, but unfortunately got taken out with the news candle, and it slipped me like 2.5% more than I risked. My IC markets, and like three times more on my prop firms. So not the best day, but it is what it is. I had a trade.
No, that's no fun at all. And that's the thing with some of these, like this candle, these candles are just so aggressive across the board. Everything moved in an instant, way up or way down. Especially the dollar crosses really made huge moves. And so what do you do in that situation, Marco? I mean, obviously you had a short bias going into this morning, but what are your thought processes now on some of the pairs that you're watching? Because do you flip and look for setups, or are you done for the day? How do you approach a day like that?
Yeah, sure. So usually just before news, I kind of lower my position size by 2. And since on this particular setup, I'm risking only 0.5%, I kind of left the whole trade running. But if I was risking the full 1%, I would have taken the half off. So that is how I prepare for these big news events. But now this is looking very nice for my trending entries, because usually when we get a nice fat news candle and it closes with a big body and a little wick, usually it does continue, in this example, trending up. So if that does happen, I'll look for some nice buy setups, but I need the next candle to do this, close above it, and preferably also the next one as well, continue with the bullish momentum. If the next couple of candles just kind of retrace and range around, that is a major warning sign to me. But this definitely has some potential to start some large trends. So that's Aussie US dollar. EU is going to be the same. So yeah, same story, looking really nice. EJ is doing nothing. AU we just looked at. AJ is still kind of in this whole range according to my high and low methodology, so being more patient. And GU is also having some potential. So it looks like my JPY pairs are pretty flat and range bound, while the dollar pairs are really active. And it all depends on what happens in the next, I would say, 2 to 3 hours. So I want to see the next candle definitely continue with the momentum. And there is a high probability chance that it will happen because we're not getting much of a wick on the top of this candle. So it looks like the buyers are still stepping in and that the price is not retracing too much and printing like an absolutely huge wick. So yeah, my eyes are going to be on the screen. And if a trade setup forms in the next couple of hours, I'll definitely be looking for some buys.
Yeah, it should be interesting to see. I mean, because today we just have, that's the other thing is not only do you have the CPI here in the morning, but you've got the Fed speaking in the afternoon. So it really is a news full day. And yeah, the signals would be really interesting to see. You know, if you get 2 green candles in a row for a lot of these things on today's news, or if you reverse the effects with something that the Fed says, that could also be a very interesting scenario today. You've currently got, I've got everything up on the screen here. We've got oil flying higher. We've got the pound and euro making moves. Gold is moving higher. The NAS, S&P, it's all the dollar just really dropped out of bed here today. And Marco, I was looking at this, the dollar index really surprised me. I mean, I didn't have any positions on it, but I was like fully convinced, like, okay, we're looking like we're going to push higher, because on the daily chart, I was doing my, I do my analysis videos in the morning, and both mornings when I pulled it up to do the video, the dollar looked like this and the dollar looked like this. And I was like, okay, it looks like we're actually breaking out. Looks like we might be forming a push higher. And sure enough, both days closed with wicks. And then now we have this big full-on reversal here on the dollar index. But like you said, I think that the interesting question will be, do we get some follow through? And from a daily chart perspective, just from my own point of view, can we close below this previous support level? I do have bearish positions on the dollar index, so this was not fun for a little bit there. I'm long the dollar, I'm long bonds, both of which are sensitive to the dollar. But I don't know, I'm curious, what are your thoughts on the dollar index? Is this whether it's the daily chart, the hourly chart? I'd just be curious to see what you think there.
Sure. So for the DXY, on this 1 hour, it's dropping very, very heavily, and we have 7 more minutes to close. So it looks like it's going to close with a nice clean close, which is a very good sign that the price will continue. Like if you take a look at these candles, usually the ones with a clean close, price just keeps dropping. So that's a good sign for a bearish scenario. 4 hour is kind of flat to me, so I'm gonna look at the daily, because the daily looked like it is ranging around a little bit right here. So yeah, this would be a good play for me. Let's say on the Aussie and the US dollar, I would kind of go short right here, because it rejected these levels with double wicks and then closed with a nice printed a nice bearish candle. So yeah, I would not be surprised if this reaches the bottom of this range, so somewhere around these levels. Will it break it? Well, only time will tell, and we're gonna have to wait to see that happen. On the 4 hour, it's definitely looking very, very flat. So yeah, I can see it touching these levels, but again, for it to break out of this range, it really needs to push down and give me a solid close and then continue with the next 4 hour or daily candle. It would be even better. So yeah, I can see some potential to hit the lows, but then to break out, we would definitely need a lot more evidence, because this may just continue with this sort of price action where it just ranges around, right? Goes back to the highs, drops again. That may happen as well.
Yeah. And that level that you just mentioned, that lower level of support is so important to the market too, because we've bounced a couple times off of that area, and I'm just pulling something up while we speak, because I wanted to see if expectations for rate cuts have changed at all off of this. And we do see that currently The expectation for a cut in September is now much more likely, which all this is saying for the newer fundamental people who are listening, this is just saying the probabilities or expectations for a rate cut before today, they were kind of balanced around November, and now we have some argument, in fact, favoritism for a cut in the September meeting. So very interesting to see. And how does that impact markets? Well, things that are more sensitive to interest rates are really flying here today. One of them is Bitcoin. Bitcoin found support here, it seems like. It looked really ugly here on the daily chart a moment ago. We broke out of that kind of upward trend that we were forming. Seems like we found some buyers here. Marco, what are your thoughts on Bitcoin? Is this doing anything that you like, or what are your thoughts?
Yeah, sure. Let me take a look. So on the 4-hour, let's keep it to the 4-hour because the daily is just going to be flying up. Yeah,
Yep.
so let's do the 4-hour. It's looking still pretty flat in this overall range since the 20th of May. So not really sure. I mean, I'm kind of expecting this to range a bit more. Again, when this level fails or this level is broken, then I think we're going to get some really nice action. But as long as this keeps being very flat like it is now, then I could not really make a clear decision. The daily is also ranging in an even bigger range. Again, we expected this to just drop, which it didn't. So now it's kind of consolidating. Not really, it doesn't really know if it wants to go up or down. My eyes are, of course, on this major high level and on this low right here. Currently, price is just, for me personally, very flat and range bound in this general area, both on the daily and the 4-hour.
Yeah, it's definitely a tricky chart for me too. I think if it breaks the highs, Marco, I'm probably just going to say, wow, it looks bullish. But for now, I'm kind of in the same camp with Bitcoin. It looks like it's just indecisive, and you could basically just draw one big box around the last few months of price action and just say it hasn't really made a significant break one way or the other. You started to see some of that here. I remember when we were talking about that. At this point, it looked like we might be breaking through support. And we did very briefly, but then back to consolidation. So I think the trigger for me, I almost could never open up a Bitcoin chart and just set a reminder for these two levels. And that would probably be the best thing I could do personally for watching Bitcoin. But just an interesting one there. We have a lot of requests, as always, Marco, for gold thoughts. What are your thoughts on gold? I have a long position on gold. Today obviously really helped my position. I was in some drawdown on this one. What are your thoughts on gold?
Sure. Let me open it up. So for gold, let me start with the 1-hour and then I'll just bump it up. On the 1-hour, seeing some momentum, but no established option or anything. 4-hour is kind of not telling me much. We had major bearish momentum and then now starting to see some bullish momentum print. I couldn't really make a decision according to my methodology, at least. Daily, for me, it's the same story as Bitcoin, to be honest. So if you want to buy the bottom and sell the top, then this would be a good play. But for me as a trend trader, for my trending entries, this is pretty flat and range bound. So I would wait for these crucial levels, either for this one to fail or this one to break right here. And until that happens, sure, I think a good play is just buying the bottom, selling the top. Do you have a take profit at the top of this level, or are you looking for a breakout?
No, I'm just holding on to it. I don't have a take profit order, but I just put my theoretical take profit on TradingView up there. But I just use it as a placeholder, really. I think that, for me, Marco, I know you mentioned with your own methodology, and that's something also to mention to stream viewers. Everybody who trades the markets usually has some variations to what they do specifically. So for me, I trade a lot of fundamental analysis and I stick to a lot of the daily chart and 4-hour chart. And so, for me, this level of support was one thing, but I wouldn't take that as my only signal either. Just because you're at support does not, for me, in my methodology, is not enough. I still want to see fundamentally the story makes sense. I thought this big drop, Marco, just for context, in case you didn't hear all the drama about it, was basically the Chinese government or the Chinese central bank has reportedly slowed down their buying of gold reserves, which really freaked out the demand side for gold on the day. But for me, just in my own fundamental approach, that is kind of just like bomb drop news that I pretty much don't like. I don't factor that in. I look at the data. So like today's CPI report cooling, that's something that I can be like, okay, I can study that. I can study CPI reports, but I can't study like a headline like, oh, so-and-so said something, or the Chinese bank said this, or like I can't trade that. So, but it's a good point. And I think that for anybody listening, whether you are purely fundamental, purely technical, a mix of the two, whatever you trade, I think it's really important that you understand like very specifically your triggers. Because Marco, I thought that was cool that you mentioned you're like, I couldn't see an entry here, even though I have a point of view that might be different than yours, or you might have setups that are different than mine. It's just very much knowing your setup, knowing your specific triggers. Would you agree with that?
100%. And that's why combining strategies and looking at 100 different things doesn't work.
Right.
Because
just like changing up the strategy every day. And
you need to keep it simple and not be tempted to jump into positions when you see other people are in, or you see other strategies are kind of producing entries. You need to stick to your own methodology and your own back-tested trading edge. That's the only way. And it's tough. It's tough watching positions fly without you, but that's the game.
It totally is. I'm in that camp for a long time with the NASDAQ, Mark. I've told you that many times, that my desire to be long the NASDAQ has left me behind a couple different times, and that's painful. I have caught gold really well this year, but the NASDAQ is one of my favorite things to trade, if not my favorite thing to trade. So it's left me behind a little bit, which is not always fun. But
maybe next year.
Yeah, maybe next year.
Or on the downside.
Yeah, right. Exactly. Okay, Marco, I'm going to leave you to the stream here. I think we've got you scheduled to go for a little bit here. I don't know if you've, hopefully that new stream scheduling stuff has been helpful to you, Marco. We've got this new process where James and Chandler are hopefully making it a little more convenient for everybody who wants to come on the show. So here's our lineup for the day for everybody in the audience. Also, you can find this information. It is on our website. If you just head over to a1trading.com, click the live stream schedule, and you can always keep up to date with who's coming on when. And this is, I think, just a little bit more organized for everybody. Yeah,
that's cool.
Yeah. Well, cool. Marco, you've got the show for a little bit, and I'll be listening. So if you need me, or if you need James, we are in the cloud somewhere.
Sure. And sorry, do I have 15 minutes or half an hour?
Well, let's see. Okay, Marco, you've got until 9:30, so you've got half an hour.
Okay,
so,
sure.
Yep.
Sure. Thank you.
Cool.
See you.
All right, man. See ya.
Bye. Okay, so let's continue with the stream. If anyone has any questions, make sure you put them in the chat, and we'll cover any chart requests. I am personally going to run through my watch list right here. So let's start with the 1 hour chart. So I'm only looking at the 1 hour for my personal trading, and then we can definitely look at some higher time frames for you guys. Starting with the euro and the US dollar. Again, I saw a descending channel right here, and then price going up. So now this news candle, which is very, very important for me, this news candle closed with just a little bit of a wick. So that is going to be a very bullish sign, and I want to see this price continue to the upside. I want to see the next candle also show me a bullish print. Now I may take a flag right here, possibly, if it's a very tight and small flag formation. So 2 entry patterns that I use for the trending entries are a flag and a break of the high, and then a retest of that level like this. So those are the 2 entries I will be looking at. Now this current candle looks to be dropping a little bit. If it does drop by a lot, show me a big bearish candle, then of course I'm out of the game. I'm not going to be taking anything. I am a trend trader and also a momentum trader as well. So I want to see nice, strong bullish momentum continue, or like a very quick, tight as I said, flag formation would fit my plan as well. So that's it for EU. EJ is pretty flat right here again. I'm waiting for the break of this low or this high level. I'm expecting a range bound price action right here. What I want to see for the next couple of hours or next couple of days, just for the price to clear up, give me a large impulse up or a large impulse down like this. Okay. So that is what I'm waiting for on the euro and the Japanese yen. Can I marry you, Marco? No, sorry, I'm taken. Which trade are you holding? I am not in any trades right now. I was in Aussie dollar short. So I did take a short right here with a 10 pip stop loss. And it was a loss, unfortunately. So took a loss here. And even with this news candle, got some really bad slippage on my IC markets. And then that got copied over using a trade copier to my prop firm accounts. They got slipped as well. So not the best trading day. But again, a couple of weeks ago, I had a similar scenario happen, but it went in my favor. So the news candle, just imagine that the news candle, instead of going up, it went down like this, and I had a nice winner. So it's a gamble. You can get lucky or you can get screwed by the spreads. It's just part of the game. So that was the trade I was holding right before this news. US oil, sure. Let's take a look at US oil. I should definitely put it on my watch list. Right here on this 1 hour chart, it's looking pretty bullish. I'm seeing mostly blue candles. I'm not really seeing major selling pressure, but let's bump it up to the 4 hour. I think that one is going to look even more bullish. Yeah, this is looking pretty good, pretty bullish. So I would expect more upside. Maybe it can hit all the way to this level. I think on the daily, it's going to look like a V reversal. Yeah, definitely. So I would not be surprised if we go back to this level, because that's usually how V reversals form. You have a big leg down, and then you have a big leg going all the way back up. Okay. Then what you're looking for is a bit of a range, push up, and then for some buy setups. All right. So that is what you're looking for with V reversals. My scenario for the US oil is a bullish one, as I said, and I'm expecting the price to reach all the way to here. So do something like this. And again, in this price action, it's looking pretty bullish. I'm not seeing any selling pressure, which is a good sign. That's a really good bullish sign. Okay. NAS 100, how high can it run? Okay, let's look at NAS 100. Wow, NASDAQ is looking really bullish. 1 hour, really bullish, not seeing any signs of slowing down. Signs of slowing down would be large bearish candles like this. Okay, so this is looking very clean, very bullish. 4 hour, looking even better. So I think we covered this price action right here. We covered it. And I said that this is still pretty bullish because the price went up and just started ranging around without much selling pressure. So I'm not surprised that this happened, because this was just a pause before the markets decided to continue to the upside. So that was looking very nice, still looking very bullish. This current 4 hour candle is very nice as well. How high can it go? No one knows. Okay, so usually, yes, after, right before US election, stocks usually pump and they do reach some new highs because they want to pump up the economy before the election, which makes sense. How high can it run? No one knows, because, again, let me see if there are some major levels. Yeah, this is just exploding up. This is just definitely exploding up. And in these cases, you can just keep buying. I mean, there are no signs of slowing down. Don't buy right now, but there are just no signs of the price action stopping, and we're seeing a lot of bullish pressure. So this may last all the way up until November, December, all the way up until election. I am in a gold position early. Do advise I still hold the trade or close it in profit? Okay, so you should not listen to me. You should listen to your own strategy, methodology, and trading edge. Okay, so you should do what you think is the right move. And so you're probably in a bullish position. Okay, I can just give you my analysis on gold. On this 1 hour chart, I don't see any signs of slowing down. No major selling pressure. And on the 4 hour, it's looking pretty corrective in my opinion. The daily is looking pretty corrective as well. What I am seeing on the daily is I am seeing this flat range right here. So we have these lows, we have the highs above. Okay, so we may possibly reach all the way to the upside like this. That can happen. It could happen because usually what you get in a flat range like this is price just keeps gravitating towards the extremes, and then it goes back to the middle. Then it goes to the lows, goes back to the middle, does something like this. Okay, so 1 hour bullish, 4 hour kind of flat and range bound, but yeah, it could reach these highs, and the daily definitely flat in this area. If you want to look at the overall trend, like the weekly, it's still up. It's still in a bullish uptrend. Yes, seeing some selling pressure, but overall definitely moving to the upside. So that is the analysis for gold. Definitely follow your own analysis, own experience, trade plan. Okay, I'm not sure if you're using a fixed take profit or a trailing stop loss. What is a very good way to do it with a, let's say, trailing stop loss is that price can just keep creating lows. And if you're in a position from, let's say, right here, well then, let's put the stop loss a bit smaller. You can just move the stop loss underneath these lows as they form. Okay, that's how I do it personally. With my trending entries, I just use a trailing stop loss, and I just move the stop loss underneath the lows as the price keeps trending to the upside like this. So that's it for gold. GJ, yep. Let's see what has been happening on GJ. 1 hour, pretty flat, corrective and range bound, not seeing much. 4 hour, the same story. Sure, we are reaching the highs, but we went into it very correctively and retraced. So that is not a good sign that we will go up. The daily is maybe printing sort of a cup and a handle. Okay, so that's a bullish case. That's a bullish pattern. Or you can say it's a V reversal and a range, basically the same thing. So I would need a leg up though. Okay, for me to be a buyer in this market, although I'm not personally live trading it, I would need to have a big bullish candle, and then I would look for a nice flag formation or small pullback, break of the high, and then a retest of the high. Okay, that's it for GJ. Marco, will you be trading the Dow when it opens in just under 30 minutes? I'm assuming it will be affected by the CPI report also. So I do not trade the Dow. I only live trade these currency pairs: EU, EJ, AU, AJ, pound, and NJ. Okay, so no, I won't be looking at it. But let's take a quick look at the Dow. So on the daily, kind of looks like gold. Bit of range bound price action. Just hit the lows, bounced off. Okay, so possibly a bullish scenario. But again, I could not really tell because as a trend trader, I'm really looking for those nice, strong bullish legs. This to me is just pretty flat, so I could not really call it. But yeah, I will not be looking at it. US 30. US 30. Let's take a quick look. So that's the yeah. It's the Dow. I'm not really a stock expert, so so sorry about that. But basically, yeah, pretty flat right here for me personally. Pretty flat. Okay, which trade are you holding? I'm not in any trades. I was in Aussie and US dollar, but got taken out for a loss, unfortunately. DXY, sure. Let's take a look at the dollar index. 1 hour dropping, so the dollar is weakening. Okay. Now, what is key for me when I see a news candle like this one? I need to see the price action clearly continue down. Okay. So yeah, we do have this nice leg of price action, but I would like a good scenario for me would be for this to continue dropping, print a nice big bearish candle, and then a nice flag formation or a nice break and retest for sell setups. Okay. But it is very, very important what happens in the next couple of hours, because with news, you never know. News is very likely to just fizzle out and range like this. Okay. Or in some cases, it can even reverse all the way back up like this. Okay. And then start a trend in the opposite direction. That's why I usually am more patient, and I usually want to see price continue with the initial momentum. In this case, the initial momentum was down, so I need another bearish candle. Bias for gold. So gold we just covered, but let's just quickly recap. My bias is bullish on the 1 hour. GBP AUD. Sure, GBP AUD. Pretty flat. 1 hour, pretty flat. All the JPY pairs are flat, okay? 4 hour, flat as well. The daily, yeah, just corrective and flat. I'm not seeing anything. If I look at the pairs I'm actually trading live, the JPY pairs, they're looking the same. So EJ is stuck between this high and this low, being more patient. AJ is just broke this high. Okay, just broke this major high, retraced, so that is not a good sign. I'm expecting more range-bound price action. NJ, same story as AJ. So just broke this major high, printed a large wick, started retracing. So that's a very, very corrective and range-bound case for me. Even the 4 hour look just stuck in a flat range, right? 4 hour describes it the best. See, very, very flat. If you're ICT, you would be executing a position right here. If this closes bearish, for example, and you would do something like this, maybe like a 30 pip stop loss, aiming for the bottom of this range, right? So grabbing the upper liquidity, that is an entry that I personally use on the 1 hour chart on the Euro US dollar and on the Aussie US dollar currently. It's a nice entry. Produces some nice results, especially in heavy range-bound conditions as these ones are. I haven't tested the JPY pairs though. I just tested the dollar pairs. They work pretty good. The JPY pairs tend to be a lot more volatile. They move a lot. They have more erratic price action, lots of wicks as well. So they are a bit more tricky with this liquidity sweep entry, but I think it could work. Definitely looking to test it in the future. What indicator are you using? Okay, so these highs and lows, the indicator is called this one. Okay, GT recent high low by Bong Hyun on TradingView. It's free, so make sure you give it a try. If you want to see my settings for the indicator, it's here. Settings. These are the settings. Okay, so if you want to copy the settings, here they are. GBP USD overpriced, possible reversal. The pound is on my list. I do trade that pair live. Now, for my analysis, I don't see this as being overbought or oversold. I just see a large leg of momentum. Okay, so I'm a purely price action, pure momentum, pure either trending or range bound entries. In this case, I'm interested in a trending entry, and I want to see this bullish candle continue like this. What I don't personally like with overbought or oversold, let's say, indicators or methodologies is that price can always continue going up or always continue going down. And usually, when you get a breakout of a high, especially if it's an all-time high, you usually get a lot of momentum and everyone thinks it's not going to continue. Example, NASDAQ, okay. Because the indicators were definitely overbought at this point, right? And then what happened? Price continued. Here, possibly indicators told you that the price is overbought as well. What happened? Price just continued. So I don't really like using words as overbought or oversold, because I have seen a lot of the cases where the momentum just keeps on going, just keeps on crushing. Same thing goes for, let's say, Bitcoin. If we do a quick analysis on the daily, many indicators were overbought right here. Okay, then it had a bit of a correction. Here they were overbought as well, exploded up. Here overbought again, exploded up. So yeah, just a tough game to play. That's why I just like to keep it simple. I like to identify the momentum, get in a nice area, okay, get in a nice price, and then just use the trailing stop loss, let the market take me out. If the market just wants to continue going up or continue going down, then that is what is going to happen. Do pro traders lose money? Of course. So I would say many traders have a lower win rate than 50%, which means that they lose most of the time. I have a win rate that is lower for my trending entries. It's around 30%. For my range bound entries, it's around 50, I would say. But again, most of the time, I'm actually losing a trade, and it is what it is. But what is the key? The key is to have maybe a lower win rate, but a high risk to reward. So when you win big. When you lose small. And I would say most traders have the same sort of a methodology. Let the winners run, cut the losers short, okay? And 90% of the profits come from 10% of the trades. That is a saying you're going to find in many of the Market Wizards books, because traders are looking for those big runners. For example, I had a big winning setup last year, which paid for most of my profits in that year. It's one of the trades, at least. 2023, January. This one, okay. I got it in a really good position right at the beginning of the trend. It was a bit lower like this. And then price just started dropping like crazy, okay? And this is what traders live for, at least in my opinion, and from what I gathered from, let's say, the Market Wizards books. They just live for these very strong trends that just continue for days, okay? And that is why we say that 90% of the profits at the end of the year are going to come from, let's say, 10% of the trades, because you're waiting, you're executing, taking some small winners, taking some small losses, everything is controlled, but then you hit a home run, okay? So the home runs are what actually makes the big percentage. And it's normal to lose money in trading. It is part of the game. If someone tells you they have a 95% win rate, they're lying. Run away as quickly as possible. So I would say if they tell you that they win every single trade, well, then just it's completely impossible. You cannot win every single trade consistently for years and years and years. It's absolutely not possible. That's why I highly recommend the book Market Wizards. It's going to open your eyes. It's going to show you what real trading is and how much you can actually make as a trader. So it's all in the book, and it's interviews by some of the most successful traders in the industry. And if they cannot have a 95% win rate, well, You cannot either, okay? So that's just the reality. Kindly analyze USD CAD. Okay, yep, sure. USD CAD. Dropping on the 1 hour. Let's see if it can continue. 4 hour looks a bit flat and corrective for me personally. Just very flat, to be honest. Daily, it's looking pretty flat as well. So as a trend trader, I wouldn't touch this with a stick. Maybe on the 1 hour, just a short-term move. If we can get price dropping a bit more like this, okay, if that can happen, then I would look for a sell setup. But to be honest, this is not really looking like clean and good price action. EU and GU, right? For me today on the watch list, it's EU, AU, and GU. Because of the impulse up, same thing as well. I'm looking for buy setups. Okay, that is what is on my radar for today. AUD, NZD, keep up the good work. Thank you. Let's see, AUD, NZD. 1 hour, very flat, corrective. I mean, it's not flat, but it's not printing a strong trend. So I would be a lot more patient with AUD, NZD. 4 hour. Now this is flat for me in this general area. Daily is in a downtrend. Daily is definitely in a downtrend right here. Okay. Starting to see some bullish pressure, but still my bias for this would be to continue dropping to the downside. So that is my scenario for AUD NZD. On the daily, I am forecasting more downside. Silver, yeah, let's do silver. Okay, silver. 1 hour, silver, starting to see some momentum, but it just broke out of this channel. I'm not expecting this to continue. 4 hour, very flat, corrective, and range bound. Daily, look, it was in a definite, really, really strong uptrend, but now I'm seeing some major selling pressure. Okay, where am I seeing major selling pressure? Right here. Whoop. This leg, this leg, this leg. That's not a good sign for buyers. Do you think that Forex Factory for the news is a good internet page? Any recommendations? I personally use Forex calendar. Oh, sorry. So we're back. I clicked the wrong button. Sorry about that. Yeah, basically, so I use Forex Factory for news. Okay. Let's see the next one. Okay, so we stopped at silver, but we can still do a couple of the pairs. So S&P 500, I think we haven't covered that one, so let's do that. And then we can also take a look at Bitcoin. S&P on the 1 hour. Nice big fat bullish candle. So I expect more bullish price action on the 1 hour. 4 hour, pretty bullish as well. It's looking nice. We have the first impulse right here, pullback, another impulse, kind of flat, but then we continue. So it's looking pretty bullish. I like this. I like this price action. So how can we get the book? I think that is for Market Wizards. It's on Amazon. Okay, so it's very popular. I think the writer is called Jack Swagger or something like that. But Market Wizards, one of the most popular books, if not the most popular book about trading. I highly recommend it. It's gonna open your eyes. Okay, so S&P, I'm seeing bullish price action. Daily, looking bullish as well. This was kind of like a cup and a handle pattern, which is a bullish pattern. I call it the V reversal and the range. It's just the same thing, but it's a bullish pattern expecting more upsides. So S&P 500 is looking very, very nice. Okay, it's looking very, very clean. Okay, let's take a look at, I think we have time for one more currency pair, and we still haven't done Bitcoin, so let's do Bitcoin. 1 hour, some bullish price action, not that much. 4 hour, pretty flat and range bound in this general area. So I'm expecting the price to maybe reach these highs, then possibly just bounce and continue with this ranging price action. But the daily is the most interesting one because it tells us that we're kind of in consolidation, basically. Okay, so I have my areas marked above this high and below this low as well. All right. And then I am just expecting range bound price action. I'm waiting to see how the price will react in these areas. Okay, I want to see a nice breakout of the high. I want to see price close above it, especially on the daily chart. I want to see a nice clean close above this level, or for a bearish scenario, a drop and then a close below. Then I would expect more bearish price action. Okay, so that's about it. I think we have reached the end of the stream. Yeah.
Yep. Thank you very much, Marco, for helping us out today. Guys,
No
I'm going
worries.
to drop Marco's link in the chat one more time. Go subscribe to Marco. He is a stream regular. He always comes on Thursdays, along with our next guest that's about to come on. So here is his link in the chat right there. We got 700 people watching, guys. Go bump up Marco. He's super helpful. He's awesome. Thank you so much for helping us out today, Marco. And I guess we'll see you tomorrow as well.
Yeah. Thank you for having me on, and see you tomorrow. Thank you also, guys, for watching.
All right. Thank you. Coming up next, guys, we have another stream regular. Like I just said, it is Miko. He is coming on next. But before we get to that, I'm going to run a really quick break. So don't go anywhere. In about 60 seconds, we will be right back with Miko, who's going to take over the stream for the next 30 minutes. So we will be right back with Miko right after this.
Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
Hello. What is up, people? Welcome back to the stream. Hope everyone is well. So as James said, I'll go through different markets I'm looking at, share with you ideas, what I'm looking at, and of course, any markets you want to see me analyze, let me know in the chat, and we'll discuss and see what's happening. But crazy move in the market from CPI, very, very big move. I've actually been very bullish on dollar, looking for dollar bullish opportunities ever since we had ever since we had NFP last week. I've been looking for opportunities to take dollar higher. We've just been consolidating throughout the week, so nothing has really matured yet. but a really big move to the upside, breaking structure. So the plan was to look for a pullback and look for some type of higher low to form to take price to the upside. But of course, with this momentum, that has definitely changed things. We haven't broken structure yet to the downside. Truthfully, DXY is just ranging, really. DXY is just ranging, to be honest. I've been looking for a higher low, but now that we've got an impulse up and an impulse down, not a good sign. I want to see impulse in one direction, a corrective movement in the opposite, then an impulse in the same direction. So I want to see patterns like this: impulse, correction, impulse. That tells me there's direction in the market. There's a trend at play. Right now, we're seeing an impulse up, consolidation, impulse down. The market's kind of confused what it wants to do. So for me, we've got two pivotal points here, basically the range high, more or less, and the range low. If we break through this, then that's a big, big sign that, okay, we're about to sell off. Of course, we still got news later today, so maybe that could give us the extra boost we need to actually break structure. And then, yeah, I'll be back with the bears for the remainder of the week and probably going to next week as well. If things turn around, which will be quite spectacular if that happens, and we start taking out highs again, then yeah, I'll be back bullish. But for now, I think I'll just see how things mature for the rest of the day. What's up, Rayan? Welcome to the stream, Philip. Hope you're well. We'll take a look at gold. Gold, I was looking at gold before the stream, but I said to myself, I'll just wait to see how price reacts today. I don't think I was looking to touch gold until tomorrow, and then I'll see what we have there. But of course, gold was bullish, dollar falling. We have seen a move to the upside for gold. Now, for me, gold, I'm still long-term bullish. I'm still looking for opportunities that favor upside on gold. But truthfully, price action hasn't been that great, and it's still not looking too great either. I think if you're on the lower time frames, you might be looking at maybe a retest of this area, since price is starting to form some higher lows here. So at the original low here after the big drop after NFP, now price is starting to steadily form some higher lows. So should we have a pullback, we could see a retest of this area and some continuation from that. So that idea makes some sense to me on the lower time frames. Of course, that could be blown out the window by the news later today, so have to take it by a grain of salt. But in terms of my personal opinion, I'm kind of just waiting for the news later today in terms of getting a concrete bias down, because we could come straight back down for all we know. But for now, gold is looking a little bit bullish. So intraday, I'll be looking at buying opportunities. Market's still a little bit jumpy. Silver, its partner in crime, is looking bullish as well. Nice push to the upside. I was actually looking at silver quite a lot before the news. Wasn't really seeing much. I do like the candle there. It was a nice big candle, but I like it to be a little bit bigger for me to look to take any trades off the back of that. But I am bullish on silver, and we are still just about holding this level. So as long as silver doesn't come crashing down and break through this area, I do still like silver to the upside. Silver does have a really nice trend. If I go to the daily chart, as we can see, really confident trend still on the higher time frames, daily, weekly. We're still seeing aggressive momentum to the upside. So I'm still very much a bull, expecting more upsides on silver. But yeah, in terms of the dollar pairs, it's an interesting Euro USD, massive move to the upside. My thought process coming into the week after this really big move after NFP, I said if I can see some more momentum, that would be nice. And then I'll start looking for possible retest of this low. After we did see a move to the downside, the market came a little bit, it was too corrective. I wanted to see a bit more momentum, really showing some conviction to the downside. Then I'll be looking at my pullbacks, but it was quite corrective, so I wasn't really interested. And now that we've had this big move as well, yeah, it's not great. I have to say the price action isn't particularly great. I mean, if I zoom out on the daily chart, you can look at Euro for the past year. It would be moving sideways. So there isn't a clear-cut trend on Euro USD. So the opportunities have to be really, really good for me to take a trade. Have to be really, really good. Otherwise, yeah, bullish momentum with Euro. I'm still not sold on the buys. I'm still bearish bias on Euro USD, but in terms of getting into a short, I would wait for tomorrow. like I said, we've had a break of structure here. This was our swing low, which gave us our swing high. So now we've broken structure. I am looking for a lower high to develop somewhere for a big short. Am I looking to short that bullish momentum, especially with the Fed coming out later today? No, I think it is a bit safer and a bit wiser just to wait for tomorrow. But I am looking for a lower high in here. So that remains the plan for Euro USD. But the price action has been very, very crazy. Pound USD, big move up. Aussie dollar, of course. Aussie dollar has been horrendous. Still kind of stuck in that consolidation there. I was hoping this one could break to the downside this week. It showed some signs of that with that momentum, but never really sustained, unfortunately. So, yeah, Aussie dollar back inside that range. I'm not looking to touch it whilst it's in there. Okay, so I will take a look at US 30. What's up, Feisty Tom? Welcome. It has been a long time. Hope you are well. So, yeah, with US 30... Yeah, US 30, I said earlier today, this would be a nice place for a buy. Because for me, indices are still very, very bullish. US 100 creating new highs early this morning. Yeah, that's still flying. S&P, I'd imagine the same thing. Yes, it's still flying high. So although US 30 has been pretty bearish despite its other major indices, I do think US 30 is likely to push back to the highs. It hasn't violated any major structure in the higher time frames. So for me, that push there, still looking at this as a pullback, still looking for a push to the upside. That still remains the plan. So I said a nice place for a long for US 30 would definitely be the low here. That would be a nice place for a long, but unfortunately, doesn't look like price is getting there. If you're looking to buy US 30, now's probably not the best time for that. Of course, after such a big move, and of course, we're coming back into this consolidation here, really big move to the downside. Now price is kind of correctively moving back there. There's still a possibility we could do something like this as well. So I would wait patiently to see if we can come here. If we don't go there, let's see some more upsides, and then maybe we could look for a retest for a long. Something like this could look good, but really just focusing on the longs for US 30. I think it's a matter of time before this one joins what NAS is doing, what S&P is doing in terms of coming back to their prior highs and creating new highs. So I do think US 30 will do that eventually. Now we just need to find a good opportunity to take some longs, and coming back to the low there makes a lot of sense. Or if we see some strength and see some momentum taking us higher, then we're looking at the next pullback and trying to catch that next higher low, something like this. So yeah, I'll be focusing on the buys for the indices. Everything is still really bullish for me. In terms of oil, last time I looked at oil, that was still pretty bullish. Yeah, it's still pretty bullish as well. So it looks like oil has given us a big fake out to the downside. This is the range I've been looking at. Really confident move to the downside. Originally looking for a retest there to see some more downside for oil, but oil was having none of that. Big break inside the range now, and we're looking pretty bullish. So 76.50 to me looks like a nice place for a long. I'm seeing sort of like a V-shaped pattern here, impulse down, impulse up. Typically, an impulse pattern does normally mean a reversal is at play, or most likely at play at least. So I would be looking at some pullbacks of this to buy. I suppose a short up here makes sense. You know, this is our prior resistance. It's our prior swing high, so we could probably see a bounce from there. But based on this kind of V-shaped pattern, I'd rather be looking at buys. So oil, I'll be looking at this area here for a long. Of course, we're a bit far away, but in terms of a good swing, I think you've got a decent chance there, and somewhat of a inverse head and shoulder pattern as well. So you're looking at your left over there, your head over there, and then some type of right shoulder over there. But I'm sure you guys get the play. So yeah, big fake out to the downside, looking at a pullback there for oil. But yeah, I was really surprised with the news, to be honest, because CPI, as of late, as of recent times, has been a really big, impactful news in the market, and this is a really, really big candle to the downside. No nonsense from CPI, just open up, big collapse. So yeah, I'm kind of just digesting price action right now. Of course, we still got a Fed interest rate coming out later today, so that will cause a bit more movement as well. So I'm not going to take everything in terms of concrete right now because it could change a lot. I think Thursday morning London session for me, based in the UK, that's when I'll do a lot of my kind of forming of my buys for the rest of the week and maybe going into next week as well. Okay, we'll take a look at the DAX real quick. So yeah, this one's looking bullish as well. Really, really nice buy opportunity here on the retest of 18,300, 350. Retesting some structure back here. Really nice impulsive break. We never came back for a retest. I always like it when we see big breakouts, big impulsive candles, and we don't come back for a retest. Normally, when we eventually do, there's a good opportunity. There's a good possibility for a bounce. And since the market is a very bullish market in the higher time frames, there's a good possibility this is our next higher low and price is likely to create its next higher high. So yeah, DAX, if you weren't involved at the low here, I would say the train's kind of left the station a little bit unless we come back down there again for a double bottom. Keep an eye out for that. I wouldn't rule that out completely. Yeah, next best opportunity would be if price can now break the high, and then you're looking for opportunities on the bounce of that, really. But yeah, I would be very, very bullish on this one, looking for price to eventually come back to the high here at 18,929. So yeah, DAX expecting more upside. I think indices in general, very, very bullish. Of course, dollar falling is helping that. But in terms of my focus, I was actually looking for some USD CAD long opportunities, which I'm still eyeing up. But I have to say, I don't like the way we've impulsed down now. This was a really nice impulse after NFP. So after Friday, we broke some structure to the upside. And then coming into this week, I'll be looking for longs. So I'll be looking for a higher low to form to take price higher for USD CAD, because I'm looking for us to see if we can reach this level of resistance. But yeah, now that we've impulsed down, it definitely has reduced the quality of the opportunity. It would be nice if we kind of correctively fell like this, and then yeah, I'll be expecting a push higher. There's a good chance we would do that. But now that we've impulsed down, it comes back to what I was mentioning on oil. Big impulse to the upside, big impulse to the downside. It's more of a reverse opportunity rather than a continuation. So I think I probably will stay away from USD CAD for now. I will keep an eye on it for the rest of the day. But I was looking for a higher low, but now there is a bit of a conundrum there. That big bearish candle does put a bit of a span in the works. So same with the USD. Yeah, Aussie dollar. If Aussie dollar breaks the high, if Aussie dollar breaks the high, then I'm liking Aussie dollar again, because there's a good chance we could be coming back to the high there. If Aussie dollar goes and breaks the high, does it convincingly, then I'm kind of looking at just following this uptrend along to the upside, and then that will become my next major target. So if I scale back down to the 4H, let me just draw that back in again. If I drop back to the 4H, I'm kind of just then looking at a break and retest of this basically. If it's a strong enough break, that would be my area of interest. And I'm looking to take it back into 0.68400, we'll call it. So yeah, Aussie dollar for me, I'm liking it if we continue. And I feel like it's the same situation with DXY. We're in that kind of consolidation. Is price going to continue to drop to the downside? We've got a major swing low there. Price could be looking to head towards. For me to be looking for shorts for the DXY, I need to see a strong break of the low. And then yeah, I'll be looking at those opportunities. But it has been a crazy move. Feisty, what do you see in your USD compared to the other pairs, given that you're neutral on DXY? Yeah, I'm kind of in the same situation with Euro. That's a good question. I'm kind of in the same situation with Euro as with the DXY. I mean, the plan was coming into the week. The plan was coming into the week is we had high over there, higher low, higher high. What's up, NHD? Welcome to the stream. So we had high, higher low, higher high. So we had a bullish trend at play. Then price, wrong tool. Then price broke structure, broke this low here, which made me quote unquote bearish. So the plan was to see price break structure and then have a nice pullback to then short. That was the plan for Euro USD. Now the way that the market is moving, it's not really presenting itself how I wanted it to. It's kind of correctively moving down and impulsing up. I wanted it to do the opposite. I wanted it to impulse to the downside and then correctively move up. So it's kind of doing the opposite. And again, I'm picky. I'm a very technical trader, so the characteristics and how price is moving is very important to me. So the fact that we kind of had that correct move down and impulse move up does lower the probability of the opportunity. So I'm kind of a bit neutral on Euro, really, to answer your question. Yeah, I'm not really trying to force any trades right now with the dollar pairs. I would like to see DXY just kind of continue that momentum break structure, and then I'll be bearish going forward, and then the dollar pairs will probably come a lot clearer. Breaking retest in Euro USD possibly, but the breaking retest I was looking at was this low. Now that price has broken through that, maybe a breaking retest of this area, brief consolidation, a lot of momentum spewed to the downside. I think that was after NFP. So you could see price come into this area and react. So that's not a bad place for a short. It's just the way price is moving isn't ideal. And speaking about USD as well, this one's just trying to fight higher. Again, conditions aren't particularly great. Are we pushing back to the swing high there? Possibly. The bullish trend that we've had over the past few weeks is still at large, it's still at play. It's quite corrective though. It's not the cleanest trending market in the world. As we approach the high there, there's a very good chance we could come straight back down, in all honesty. So yeah, I'm quite on the fence with a lot of these dollar pairs. Again, I would love to have a bias to be talking to you guys about, and really good opportunities to be sharing with you guys. But in truth, I'm just not seeing that right now. Hopefully after the news later today, that will kind of clear up, which is kind of what I'm banking on. But yeah, with USD, if I was intraday, I would be looking at buy opportunities because it's still bullish. But of course, as we approach this kind of area, not the best place to buy, especially after a big strong move like that. I don't really want to be following that move unless I'm already in it. So I would watch out that for New Zealand dollar. Aussie dollar coming back into major resistance, so we see what price does there. Gold, how we're looking. Gold's trying to push right back down again. Looks like gold hasn't really settled yet. Still kind of pushing up and down. Silver, likewise, hasn't really settled yet. Still kind of messing around. So yeah, waiting for things to settle, waiting for the news later today. And then hopefully things become a lot clearer. But I can understand that with all these big moves, a lot of people be a little bit anxious, nervous, feeling like they should be in the trade and they're missing out on a big move. Do not worry about that, because the market's not going to go anywhere. There'll be plenty of big moves in the near future. There'll be big moves next week, the week after, the month after that, and the year after that as well. So don't try and force anything just because you're not in a position. I'm not in any trades at the moment. Not taking a trade is just as important as taking a trade as well. So when things become clearer, then I'll formulate a bias. Keep an eye on some of the yen pairs, because they've been very interesting. They've been very, very bullish, but it looks like we are reacting reacting bearish to the news. CAD yen down, Aussie yen down a little bit, Euro yen down a little bit. Of course, dollar taking a bigger hit because of the weakness on the dollar itself. Swiss yen's taking some downside as well. So yeah, it's interesting. I don't really have any opportunities on the yen pairs either. Generally speaking, I'm looking for buys, but they need to come a lot deeper. If CAD yen can come back to this low, I will see what we can do at that low, 113, pretty much on the dot, really. So if you do come back to that low, I will investigate, see how we react, and maybe take some buys if things do look good. Pound yen, we just came back into the high. We're reacting with the high there. I need to see price kind of really rip through that, and then I'll be looking at my next pullback. I don't want price to be double topping. That's a sign that the trend is slowing down. If I'm going to get into a trend, I need to see a trend still show signs of healthiness, if that makes sense, of strong momentum. breaking highs. If it's failing at highs, it's not the best sign for the trend, of course. So I need to see evidence of us breaking higher, and then I'll look for my next pullbacks. CAD yen, I'll see what we can do at that low. Euro yen still quite choppy, but I'll see what we can do at this low here. Dollar yen, I'll see what we can do at this low. And your Swiss yen, looking at a bigger pullback to this area. At least with the yen pairs, there's a clear trend at play. Dollar pairs, I feel like a little bit all over the place. What's up, Malik? Always a joy to watch. Appreciate that, my man. USD pairs back down now. Well, dollar is bearish. Again, I'm not looking to cement a bias yet with the DXY, with dollar in general. I had a bullish bias coming into the day, but now that we've had such a strong impulse back down, it's kind of skewed things. If we had a corrective pullback back down, that would be different. But it's very, very impulsive, which is not the best at all. So yeah, I'm neutral. We'll wait for things to develop. We still got some big news events later today, so I'm hoping that can speed things up, clear things up for me. And then Thursday, London session is where I'll kind of digest everything and make a final decision of what I want to do next. But I'm not going to try and enforce anything right now. I think in terms of the clear markets, I think your indices are the clearest. Beautiful trend here on the higher time frames and the lower time frames. There's a lot of momentum in the market. We're seeing clean breaks, clean breakouts, healthy bullish candles. We've left behind a really nice range here in the market. We've broken to the upside pretty clearly there as well. Should we come back and retest this area? Although it's very far away and looking unlikely now. But a retest of this area, to me, looks like a really smart place for a long. NAS 100, same thing as well. Really nice consolidation, healthy breakout. We're seeing some really nice strength in these moves. Should we come back down and retest an area like this, the higher the consolidation, I think is a really smart buy for NAS 100 as well. So yeah, I think indices is kind of where it's at really right now. I mean, I don't trade indices personally, but in terms of just looking at the technical analysis and the market structure and the trend, they look very, very clean to me. Very, very clean. Whereas Euro USD looks atrocious. It hasn't been the best pair to trade in a while. But hopefully things can change quickly. And Pound USD, really strong move to the upside. It'll be interesting to see how the daily candle closes, because we are still trading massive levels of resistance here. And although the daily candle is looking very bullish right now, that could very much change by the end of the day. This could just be a massive, massive wick. So again, not trying to read too much into price action right now, because things could look very different. Okay, Feisty Tom, have a good one. Again, how long USD will be bearish? I can't give you the answer to that. Again, always just looking at the probabilities and making judgments based on that. In terms of finite answers and concrete answers, we won't know the answer to that. But yeah, CPI has definitely hit the market hard. Some of the cross pairs are moving quite well. Again, as a technical trader, I'm just looking for momentum. Momentum for me is great. Up or down, not really too fast, but momentum provides opportunities. So I actually do like it when we have our big events like Fed interest rate, CPI, and NFP, which we've had in such a close space of time. I like them because shortly after, it provides opportunities. I'm not looking to trade the news event, but once it's happened, once we've seen momentum and things settle, then opportunities do come around shortly after. So that's why I do like the news, because it normally means opportunities are not too far away. So yeah, definitely keep an eye. Silver, definitely keep an eye, because it's still holding a really nice level. Still definitely looking to long that one. And there is a lot of room to the upside should we come all the way back to the swing high over there at 32,411. Likewise with gold, still looking for a big push to the upside, just not really seeing good opportunity yet. We formed a major high over here and a really strong move to the downside, ripping through these lows. it's a pretty good chance we form another lower high and push back down again with gold. So I'm not quite convinced yet with the buys. And actually, if gold actually breaks the downside, I was speaking on this earlier, if gold breaks the downside again, takes out these lows, I'll actually be looking for a lower high, and I'll start looking for some shorts. If we do see price rip to the downside, maybe a retest of this area. But for me to be looking for shorts, we do need to break through this low first, and then I'll see what we do. But yeah, to summarize, I will be waiting for the news later today in terms of concrete bias. Dollar, of course, looking 100% bearish right now.
What's up, Miko? How's it going, man? Yeah, good to see you. Not a lot. I was listening on just some of your thoughts. I agree with you. A lot of the indices just moving so clean here right now. Gold gave back some of those gains here on the lower time frames. You got some volatility there, but it seems like the clear movers are the indices right now, at least. Dollar index dropped off a cliff. We'll see if that continues. It's a little chaotic, and not to mention we have more news this afternoon. So should be busy. Miko, I want to thank you for coming on and helping us out with the show here today. Of course, we're trying to whenever we do these super long streams, we definitely appreciate your commentary and you coming on. And I just want to say to everybody who's watching with us here live, if you enjoyed that segment with Miko, do us all a favor, make sure to go subscribe, go check out his content. He puts out some great stuff, and I'm sure the audience got a lot of value out of your session, Miko. So thank you very much for coming on and helping us out today.
Appreciate it. Thank you.
All right, man. Have a good rest of your day, and we will see you back on the next show. Guys, we're going to be changing gears here. And now bringing in our next guest, who is going to be Forex James, which is making his way back onto the show. So hold on, let me just share my screen here for a second, just for this. Okay. So we're going to be bringing in FX James here in just a moment. We're going to take just a quick break just to thank our sponsors and then set up the stream. We'll be right back. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with James. What's up, James? How's it going, man?
Hey, Nick. Yeah, I'm good. Thank you. How are you?
I'm good. It's good to have you back on the show. I enjoyed listening when I was out of the office. I enjoyed listening to your segment, having you on last week, which was awesome. And it's good to have you back again, especially for a day that is so crazy. CPI was wild this morning.
Yes, it was actually. I wasn't at the desk, unfortunately, to really watch it. So I'm kind of now just digesting and seeing what it is that I missed. So yeah, there's unfortunately not too much I can provide in terms of value for today's news. But yeah, I can give my opinions on what I do see at the moment.
Yeah, I'd love to get into some charts with you just to see what you're looking at, and just a precursor to you taking over the stream for a little bit. EDGEFINDER fan James is, and so is Joe, the two guys at Elite Traders. And I just want to mention, we're going to be dropping their website in the chat for anybody who'd like to check out or enjoys this segment with James. These guys are both James and Joe are top-notch stuff. So again, big moves across the market. We had the S&P up, the Dow up, the NASDAQ, Euros up. It's all just kind of on the back of this weakening in the dollar, which came off basically from a lighter than expected CPI print. Some progress in the inflation world is getting the market excited, especially stocks, which of course that means borrowing costs for companies come down, and the market cheers that. So James, I'm gonna leave the show for you for a little bit so you can just kind of walk through whatever you'd like to. So you've got the stage for a little bit. And again, guys, if you enjoy this session, I'll be back in just a bit. James is going to take over. If you enjoy this, make sure to check out their website. Again, that's www.elitetraders.io. And James, you got the segment for a little bit. Enjoy it, man.
Thank you. Thank you.
All right.
Hey guys, how you doing? So there's not too much on my watch list at the moment. So what I was doing on sort of Monday is more of planning for the long term rather than paying attention to the shorter term positions. And the reason was because of today. So I'm not too interested in actively trading news because I'm not someone that will see, for example, CPI and then form my bias around that singular result. So if you look at any institution or any type of large participants in the market, they look at trends for economics. So they'll look at the trend for CPI, what's it been doing over the past 6, 12, 18 months, and so on with unemployment and all the other aspects of data. So it's more a case of I'm watching the results, not actively trying to get into them and trade them. Having said that, actually, I do have a position on gold. It's very, very similar to Nick's. And if you guys have watched my content before, you might know that Nick and I trade in a very, very similar way. So yeah, this was very simple. We came down to the 50% fib level, which is here, off the low. We played around here in a kind of a range. I got eaten up in this range, actually. I got in and out and didn't really make any money at all. So now I'm in again with a trailed stop loss. So I moved my stop to break even this morning before the news, just in case we did see a dump. I didn't want to put capital on the line for no reason, really. So the main other thing is euro dollar. So I really, really like euro dollar, potentially to the downside, actually. And this is more from a technical aspect at the moment, rather than from an economic standpoint. Economically, I'm actually still quite bearish on the dollar. So if we take a look at euro dollar, you may see these institutional orders. And this isn't SMC. This is nothing technical based. This is real orders that have been publicly published. So these aren't, buy and sell limits. These are more options positions. The problem is we don't know if these are buys or sells. But if you look, you can see that these are key levels. Key levels are whole numbers, essentially, or psychological levels, whatever you want to call them. So, for example, we've got over 3 billion in institutional orders at the 1.09 level. And that seems to be quite a nice resistance that we can see here. So this was the peak of NFP, or just before NFP came out on Friday. So that's quite interesting to see. And we also have this sort of imbalance. I'm not a huge person on sort of imbalances and order blocks and FBGs and all that type of thing. But when we have such aggressive moves, mainly driven by news or black swan events, we do quite often see a correction of that move. And that's kind of what I'm banking on here for euro dollar. We also had a market gap here at the sort of 1.07 level. And this was due to the French politics. And if you guys aren't too clued in about what happened in France, it's essentially a political problem. I won't go into loads of detail. I don't think there's much need to. But essentially, there was a dissolving of the parliament. And the current president, I think it is, of France, basically said that, he's going to dissolve the parliament because he doesn't like that the far right government have been elected, I think is the situation. So that basically caused some pressure on the euro as well, along with the NFP. So that's where we saw the huge move to the downside. So the gap's been filled, and this was filled today by CPI. However, NFP hasn't been corrected yet, and it might not. This isn't guaranteed. It might not, but it's something that I am watching. And again, if we draw a fib, we can see that we are currently in a golden zone here. And golden zones are quite nice to find pullbacks. So price could just completely correct the CPI move and come back down to where it was. However, I'm more in favor of some further upside potential, especially when we look at the dollar index. Actually, wrong chart. Let me just pull this down here. So at the moment, we're kind of in no man's land, and that's what I like to call no man's land when price is not at any specific level. It's in sort of the middle ground between support, between resistance, or not really in a place to gauge it in a sense. So I would quite like to see the dollar index come down to at least this first support down here at the 1.4 level. In turn, that should hopefully push euro dollar a little bit higher, and then we could take a stab at a short. So again, I'm not super convinced yet to go into shorts in euro dollar, but from a technical aspect alone, I do quite like it. So I might take a very small risk position just to test the waters, really. So there's one more chart, which is the Kiwi yen, and this one was in a bank report. So if we look on the monthly time frame on Kiwi yen, we are coming up to a huge level of resistance. So we're actually already there. So we're in sort of the wick of this monthly candle now, and then the sort of the peak is around the 97.9. So I'm not saying this is going to be a huge turning point, because obviously this would involve the yen more than the New Zealand dollar, but it's definitely something to keep an eye on. How is price going to react around this monthly level? I see there's still a huge narrative, especially in retail, about going long, well, I guess short on the yen and long on the yen assets. So dollar yen, New Zealand yen, etc., which to me seems very risky considering where we are. So if you are someone that's currently selling the yen, just hold on to your hats, trail your stops quite aggressively. I would suggest, obviously not financial advice. But having said that, that was obviously the monthly chart, so there's no reason that we couldn't continue heading up on the smaller time frames and potentially collect. Let's see. Actually, not too much, around 100 pips, about 1% move. So let me just see what's on the EDGEFINDER. Let's see if there's anything here that we could plan a trade around. I'm just going to read the chat for a second. Key levels, price bounce points. Anton, yes, they tend to be, unless you get something like news. Gold will be a buy again during FOMC news. Well, I'm going to hope so, but yeah, we'll see. We can't say that with 100% certainty, unfortunately. Philip Anthony. Sorry, you're addressing someone else. New Zealand yen, 1 hour hold. Cool. Okay, so let's see. Yields. I think Nick's already in a TLT position due to this. We've got gold where, well, I'm already in gold. We've got NASDAQ. Not too much of a fan of buying NASDAQ at the moment. Actually, let me show you this position here. There was, I think it was Euro New Zealand. I actually tweeted this. Unfortunately, oh no, I didn't tweet this one. Sorry. This was in a Discord. So this was perfect for me, really. So if you guys are sort of wondering about my technical entry strategy, it's this basically. So we have market structure. We had a really nice support and we had a secondary support here. So I was looking for a break and retest. So we broke down. I was looking for a retest of one of these two levels. Either one would have been fine. And the reason either one would have been fine is because we had the fib golden zone. So I was primarily looking to enter on the 50%, which is this 0.5 level, with a stop sort of above the zone. So if price came up, then the zone would have been invalidated technically, and we would have been out. However, the reason I didn't take this was because we had CPI, and I wasn't going to place trades right before CPI just because of a technical thing. That would have been irresponsible on my part. But yeah, hindsight's great, and it would have been amazing to take that, but unfortunately I didn't. Do you trade futures? No, I don't. L3 trades. Not a futures guy. Got to say, Trading Memes is doing a perfect job marketing. Minibus, I'm not affiliated with Trading Memes. I own a meme page called Financed Memes. I own the Elite Traders Instagram page, and that's it. But yeah, no affiliation with the other meme accounts. US 30 on a 5-min golden zone. Let's take a look. 5 minutes. 5 minutes is not my favorite place to be, but yeah, let's draw it up. So the thing is with fibs as well, you need to be consistent, especially if you're on small time frames and you try and every point and every tick and every pip is very, very important. You need to be consistent with how you draw your fibs. So I always draw it from the wicks, so you can see the bottom wick to the top wick. Some people draw them from the candle bodies, but personal preference, it doesn't matter too much. Yeah, so technically this looks fine. I wouldn't take this though, because it's not just that we've had CPI and this move could be corrected. It's also that we've got news coming up in was it 4 hours, 3 hours? So yeah, technically good, but yeah, just very risky from my point of view. Do you look for entry confirmation on lower time frames? Not really, Sammy. So let's go back to let me think of a good example. Let's go back to euro dollar, and I can show you how I would go about executing that. So sometimes if there is a very clear trend, let me go back here. So if there's a very, very clear trend, so we're very easily lower highs, higher lows, and it's just typical trend. Then what I will do in those situations is let me find a place where it would potentially work. So find the fib tool, and I would draw the low to the high. I would place the order at the 50% level, so I guess it would be here. Set target, stop loss, and set a pending order, and let it run. And that's only if the market conditions are perfect, which they very rarely are. So I don't use pending orders very much. So in this more general situations, I will have an alert. So let's say I want to enter here. Let's just do this for example. I'll set a trading view alert here, or slightly below entry, and that will be my signal to then get to the charts and watch. So what I actually need to see to enter the trade is a candle confirmation. So let's say I want to go long off this level here. The doji or the hammer, whatever you want to call this candle right here, that's not enough for me. I would need to see the next candle, this bullish candle, to confirm momentum and confirm the direction. And that's my entry criteria. So I need to see the candles, just confirm where I am and what's going on. Am I in any positions? Just gold. We do have one other position actually, but I can't disclose that right now because we've just taken it in the Discord. So I don't want to upset my paying guys. It's also not my position. It's one of my traders' positions. But yeah, gold is a great example. Actually, you saw this bullish sort of engulfing candle. Entered off that, and yeah, straight off the 50% level. In euro dollar, which website will I use to see institutional orders? So I actually don't know where these come from, but I have a guy in my Discord that puts them in every day. So yeah, I honestly don't know where you get these from. It's just someone for elite traders puts them in our Discord, and I mark them up. So you can see here, euro dollar, what's the day, how much is the order worth? So I only mark it if it's worth over $1 billion, because 490 million, that's peanuts. No one cares about that much. Obviously on a retail level, that sounds like a lot, but on an institutional level, $500 million, it's not crazy really. So yeah, you can see here 1.4 billion. There was 2.1 billion here at the 1.08 level. So they're what I mark up. You've got them for euro dollar, dollar yen, pound dollar, etc., also the major pairs really. And yeah, it's sort of good. You can use them almost as support and resistance, I guess. XRP. I assume you mean XRP crypto. I can give you a technical thing, but I have no idea about the crypto space. I'm in one meme coin that is not doing so hot at all. Solar Blade. I'm sorry if I butchered your name. Saygun, can you ask a beginner question? You absolutely can. There is no stupid questions. There is just questions. XRP, you know, like, yeah, I can't really tell you too much. I'm really uninvolved in crypto. Technical wise, pretty simple support here, I guess. Actually, quite a nice support if you're, you know, on the daily time frame. Again, just from a technical aspect, I don't see any reason that there wouldn't be a higher move from here. So there's a rule I tell people is supports resistances are a lot more reliable with higher time frames. So if you're trading a 5-minute time frame on a, you know, trading supports and resistances, it's a lot less likely to hold than a daily. I think that's one of the reasons that sort of support and resistance has got a bad name in the retail industry, because people tend to trade small time frames, retail traders, and they'll draw support resistance, it'll get broken because, you know, it's such a small time frame. But it's the same with anything, really. Let me just read these. Please, is there a news feed or channel where we can see or know real-time information of FOMC report tonight? Egwim, I use Bloomberg. So if you've got a Bloomberg subscription, you can watch it there. Or, like Nick said, you can watch it here. I'll be watching it on Nick's channel. You know what's funny? Actually, I've got subscriptions to basically everything. I've got Bloomberg, I've got News Squawk, all sorts of different things to give me news. And I actually just don't use any of them. I always come to Nick's channel just to watch. I think it's nicer to be in, obviously it's digital, it's not real, but it's more of an environment with other traders, especially retail traders, and watch it all together. I find it quite nice, because it's generally quite a lonely space, really. So massive info for XRP and X News FOMC. Yeah, I mean, obviously it's XRP against the US dollar. But yeah, I don't know. I think technically no reason to move higher, but don't take my word for this. Please don't take any trades on crypto because of this. Rate cuts, no, rate cuts are not happening today. Like Nick said earlier, actually, if there is a rate cut tonight, we're in problems, and we should probably reevaluate what's going on in the US. But so far, there is no mention of a rate cut for today. The rate cuts are, as far as I'm aware, last time I checked, they're scheduled for September. Actually, this is a position I've been interested in. So again, if anyone was watching, I was on here, I think it was last week or the week before. I was talking about the USD against the NOK, to the short side. So we had a really nice resistance here. I didn't take this because I just wasn't quite ready to. I'm more waiting for the rate cuts in the September to take this. So ideally, we could enter somewhere a bit higher if the dollar continues its strength. And the reason is mainly just because the NOK is very, very undervalued. It's one of the most undervalued assets or currencies in the G10. Annie, my Discord, actually, I really hope Nick doesn't, or A1 doesn't mind me mentioning this, but we currently have a 3-day free trial. So if you want to test the Discord completely VIP, you get 100% access to everything for absolutely no cost. You can just go on the website and join it, join the Discord from there. It is a trial though, so if you don't cancel, you will be charged. So just bear that in mind if you do want to take that. But yeah, 3 days, completely free, no strings attached. Is there anything you guys want me to look at? There is nothing, I don't think, of interest to me except Eurodollar, which I've already mentioned. The USD continues to push down. Would you look at USD PLN on the daily, weekly? Absolutely, I can do that. So daily. So let's see, what do we have here? Again, this isn't something I trade, so it's going to take me just a minute to take a look and understand. Nice support on the daily. Yeah, it seems like quite a large range actually on the daily time frame. We did break out and failed. So just from price action, it kind of just looks like a range. There's nothing really here for me to tell you. But if this range was to break, and for me, ideally to the downside, let's say we could come down, and then if I was to trade this, we'd be looking for this retest right on this support, and then further downside movements. But then the same thing goes. If we break above, we look for the retest here. This is very, very important for me. And then we enter. So for example, this was quite choppy actually. So this may have caught, if I was trading this, it may have caught me out because obviously we had this bullish candle. It looked like a sort of break and retest. Potentially entered there and it would have caught me out. So just watch out for false breakouts. USD CHF. I was looking at USD CHF actually not too long ago to short it, but I missed that. I missed this train quite significantly. You can see actually I've already got my fib lined up. Oops. So yeah, I was looking to take this 50% pullback, which never really came, which is quite sad. Let's look on the 4 hours actually. So yeah, I think, to be honest, depending on FOMC and sort of just how the news is digested by the markets, Job XRP is crypto. It's yeah, basically just a crypto coin, I think. We came down. We've rejected the support twice. We didn't reach the resistance, and now we're back down at support. But we then also have CPI candle, and whether this gets corrected or not, I don't know. I can't tell you that. However, ideally, because I have a bias here, I do want to go short, and I want to go short at the highest price possible. I would like to see price come back up to this previous support and 50% pullback, and this would be just a great retest and sort of rebalance of price, I guess. And then we could potentially see price come down further. Oops. And that's my game plan. If we don't see price come any higher, I'm not getting in. It's too discounted at the minute. You know, I don't want to sell it at a discount. That would be counterintuitive. But yeah, this is what I would want to see. But whether that will happen, I don't know. Euro CHF, we can do that as well. Okay, I think I've got around 3 or 4 minutes left, so I'll try and wrap this up quite quickly. I think there might be a guest ahead of me as well, so I don't want to take up their time. Okay, so I quite like this, actually. It's not something I would take, but from a technical aspect, I like it. So again, going back to the euro problems, I think that though the initial reaction of the market was to sell the euro in regards to the political state. But I think that news is digested, it's been accepted, and now we are potentially in for a correction back to fair value price. So I could see a continuation to the upside after this. If this candle closes as it is, as a very strong bullish engulfer, I'd be more than happy to potentially take a long. We also have this gap, the same as we saw on euro dollar, this market gap here that's more than likely will be filled. So just be careful that we don't fill this gap and then continue to the downside. That would be quite tragic, actually, if you entered right at the top before a dump. But yeah, I think buy the support, sell the resistance type of thing here. We buy the support and then we close out at resistance. Okay, dollar yen. I'll cover dollar yen and then I'll leave you guys to it. You guys can enjoy the rest of the show. Dollar yen is very bullish, and to be honest, I would potentially go in long here. I'm not going to, but again, just because of the technical parts of this, I do quite like it. We're down 200 moving average. We've got the RSI that's coming to oversold. We are also, let's see if this trend line matches up. It does actually. We've got quite a nice trend line throughout here. It's not perfect actually, but it'll do. So yeah, actually looks quite nice. However, I am looking to go short. I'll say this one last time before I go, is I had a meeting with some London traders, Canary Wharf institutional guys. And no, I'm not saying that, I'm not going to start waffling here, but general word on the street is the dollar yen target is 135. So let me just mark that up. Any around here. So we've got 135. This is sort of the benchmark, and this is where it's expected to go to. And I don't know, I can't tell you when. It could be in a year, it could be in 2 years. I don't know. But I am looking to short, and the catalyst for this will be when Fed cut rates. When the Fed cuts rates, we'll start seeing an unwinding of carry trades. And that would be quite nice. We'll see some profit taking on the dollar yen, and we could potentially see some downwards movements. And then obviously we will need BOJ and MOF news to back that up. Lee, yes, let me just I'll cover your point very, very quickly. So discount and premium, it's essentially overbought and oversold in a way. So let's say I wanted to buy the market now. I wouldn't buy, well, let me put it in replay mode and just get rid of that candle. Let's say I wanted to buy the market now. Why would I buy it here? We're at the top. Well, a theoretical top. What I would like to see is a little pullback down to a support or down to the moving averages, some sort of pullback, and that's where I'll enter. I don't want to enter when price is already moving up aggressively and we're heading into a resistance, if that makes sense. But yeah, that can also relate more economically to what a currency is valued at, but I don't have enough time to cover the true value of assets here.
All right, James, thanks for all that. I enjoyed your segment there, and I'm sure a lot of people did as well. Appreciate your attentiveness to the chat and helping everybody out with all these different charts we threw at you today. So
yeah, no problem.
Thanks for that. And also, totally fine to share your website if you guys want to check out James and their Discord offer. I think that you mentioned a 3-day free trial, which is awesome. We'll drop the link to both your YouTube channel, but also if we could just drop the link again to elitetraders.com or elitetraders.io, you guys can check it out there. James, thank you very much for coming on today, man.
Yeah, thank you, Nick. Thanks for having me. Chat, it's been great talking to you guys. Have a good day. I'll talk to you all later.
All right. See you, James. Thanks for coming on.
Bye-bye.
All right, guys, we're going to transition here and move on to our next guest. You guys know him and love him already. Kenzo's coming back on. So we're going to take just a quick break, reset the stream, and Kenzo will be taking over. And Kenzo, he can hear me right now, but I'm going to leave the show to him. Kenzo, you can go for as long as you want. We have you scheduled for anywhere in the next hour. You can finish. Whenever you're done, just let us know, and we will we'll take over from there. All right, guys, quick break, and then Kenzo's taking over the show. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good evening, guys. I hope you are doing great. Yeah, we were just waiting for CPI and the release. It's actually good. It seems like inflation is going a little bit lower, but later on we left with FOMC or interest rates, and on our forecast it seems like they're not gonna cut the rates, but we will see. That is not really the final figure. They might still cut the rates, and I'm actually expecting them to cut the rates. So anyways, guys, on the comment sections, let me know which pairs do you want me to go through, as we have enough time. So I will be going through those pairs, right? So at the moment, you can see on the screen, we are on DXY or dollar index, or the best thing maybe is to show you the symbol so that you don't really have to guess. Let me show you the symbol. Yeah, I think that it's much clearer. So on the comment section, I see US 30. Okay. US 35 minutes chart. No, I don't think I will do it, but I'll try to check that. But I don't really use 5 minutes time frame as something that I go through. I will just check that just for you. So if you can check on my watch list there, you can see that everything is actually green. That shows that any pair that is going against the dollar, it's gaining some momentum because CPI actually just went lower. That is actually good. Once we see CPI going down, that is actually good for inflation because it shows us that the inflation is cooling down. And that is the figure that we want, or an indicator that we like to use actually if maybe we are referring to interest rates. So, and later on we're going to have interest rates. So the question is, since we have a very nice number from CPI, will they cut the rates or not? I think they might cut the rates. I might be wrong. But I think they might cut the rates. Why? The reason behind that is other major economies, they already did that. So we saw Canada cutting their rates. We saw Europe cutting their rates. So we left with the US, which is tonight, and also British or Britain and the other ones. So there is enough chance that they might cut the rates. And what we see on our DXY, it shows us that the dollar actually just lost the momentum there. The market was around this level yesterday, or not yesterday, a week ago, because of NFP. We started seeing the market going up, but it was because of NFP. It was quite stronger, and we saw dollar index going a little bit higher. Do you see that? But today with CPI, which is just cooled off, at least we see the market or the dollar losing some of the strength there, which is good. So I'm expecting to see if maybe we're going to break that support area. You can see that this support area is quite strong. The market has been struggling to break out of that. So I think around that time where they release the rates, maybe that will be a good thing. And I don't think the most important thing is going to be the rates. I think even if they don't really cut the rates, but the next move, if they tell us that, you know what, we're not going to cut the rates, but our next expectation is to cut the rates, that will also be good. Because now slowly we can see that inflation is going down. And if they say that, I think we are going to see the market even breaking the support area, trying to go down. So on my side, I did not really participate much on this type of moves. So I'm just waiting for a Federal Reserve to release their interest rates. Then after that, I will be listening to the speech or the conference. Then from there, it's where we're going to start to take the trades. But at the moment, I like what I see. The market is losing. The US is losing that move, that bullish move, which is good because other pairs can breathe a little. You see. So as I said, Michael, how are you, man? Please, can you please let me know which pairs do you want me to check on the comment section? Let me know, please. At the moment, I'm still on DXY. I will jump straight to maybe GBP USD, and from there I will be going to Euro USD, Gold, US 30, Nasdaq, S&P 500, and also US oil. While you're still telling me which pairs do you want me to check, I can see that someone said, Kenzo, check US 30. I will check that. I will definitely check that. So now we are actually on GBP USD. I think this is very, very, very good because it shows us that the market is continuing with our trend. So we have something like this. It's actually something like that. So we can easily see that we are coming from a very nice downtrend structure on GBP USD. So the market was going down. After that, we had a very, very proper breakout. At the moment, you can see that the market is slowly going to the upside. So we have something like that. And on my side, this is quite obvious because the market is no longer on that downtrend structure. So we're expecting the market to continue going to the upside, and that is very good because the market is actually been going down, which means the dollar is been quite stronger. But what we have here is on Friday, last Friday, the dollar was also quite stronger because of NFP, but it seems like, let me just remove that. It seems like that was not really enough to break our structure. So now at the moment, it's like we're going to have something like this. So don't panic and think maybe you missed a lot there. Nope, the market can still go down. We still have enough time to buy, actually. If we are on an uptrend like that, the market can still reverse, but we're still going to have something like that because we are on that uptrend structure. So I'm expecting to see the dollar losing some momentum quite slower and going further. But where we are now, I can say, yes, this is a little bit higher area. So it's better to wait for the market to reverse. Around the support area, we can still get those buy positions. So at the moment, just wait for the market. Maybe the market will give us some certain structure that we can use there. But at the moment, I can say we have an overbought. The market is already on overbought. Not saying that maybe the market is not on an uptrend. But where it is, I think we need a smaller reversal before we jump to the upside again. I hope that makes sense. So USD CHF, AUD CAD, yeah, I will actually check that. I see gold there. I will also check that. So now we are on Euro USD. So Euro USD actually showed us some crazy structures a few days ago. But besides that, we can easily see that we are coming from a very nice structure, which it was actually a downtrend structure. Then from there, the market actually showed us that, you know what, we're no longer on that downtrend structure. We're breaking out. And if you can check here, we can easily see that the market was just consolidating. So which means the market did not really know which direction to take. And from there, we saw NFP breaking the support area. It seems like now the market is wants to go or to push the upside again because we saw CPI. It was actually cool. So this makes the dollar to lose some of the strength of the momentum. But the question is, are we going to have maybe the market respecting this area or breaking out? It's up to the market. So at the moment, we just need to relax and see what will happen. But what I like is, whether maybe you did not really take advantage of that move, it's still fine. This is the early stages of this trend. If this trend wants to continue with this uptrend structure, you can see we're coming from a downtrend structure. So at the moment, we expect the market to do what? To continue maybe going up because we expect an uptrend. So where we are, I can say we are at the early stages of this uptrend. So at the end of the day, let's say if they cut the rates, we're still going to get those entries very nice. So you're not missing anything. Don't just jump on the market during the news, unless if maybe you understand what you're doing or maybe you know the direction of the market. But it's not like it's knowing, it's just guessing because not everyone knew that CPI was going to go down. Not everyone know that maybe they will cut the rates or not. Even now, we don't really know if they're going to cut the rates or not. But we expect them to cut the rates because inflation went, it's cooler than before. And that will be a good thing for the market, but we will see. We will see. So from Euro USD, yes, I'm expecting to see maybe the market continue. But at the moment, just because we expect the news, I think in less than 3 hours or less than 4 hours, we will see. At the moment, we can have a conclusion and say, now we are on a downtrend structure, or maybe now we're concluding that we are going to go to the upside. No, we're just going to wait for FOMC. Then after the results, we will combine what we have. So already CPI, it's negative. If maybe FOMC is going to go down, or let's say they cut the rates, maybe with 25 basis points, that will be good. If they leave them where they are, I think we will see a nice reversal. That will happen, you see. So, but it's up to them what will happen actually after that. So now we are on gold. We are on gold. So gold seems like it's still going to try to go to that upside structure. We are coming from a very nice uptrend structure. Actually, on a bigger time frame, we are still on a very aggressive bullish move. You can see that. But since I am a day trader, I will actually consider this a nice breakout. maybe the market will be continuing like that. But if you check, I think, let's go closer. If you check closer, you will see that the market is trying to actually go or to change the trend. The market is coming from a very nice uptrend structure. From this area, we have a breakout around this level. So we were expecting a continuation of this downtrend structure, but it seems like the market is starting to struggle. But it's understandable. We had enough push because of NFP. This is not really enough, but this is because of CPI. Do you see that? So all this actually have enough factors on the market. So we will actually wait and see, because at the end of the day, maybe if they cut the rates, we will see gold trying to go to the upside. We see tensions all over the place still continuing. But if maybe the tensions are going to cool off, that's going to be way much better, because we will actually see the dollar actually going down. But if maybe things are not really good, we might start to see gold going even higher. I hope that makes sense. I hope that makes sense. So let's push to the next one. US30. I saw someone said, Kenzo, check US30. I will check that. So on US30, on my side here, we are still coming from a very aggressive bullish move. So from that aggressive bullish move, you can see that the market broke out. So it's a breakout where the market created. Now it seems like we're going to have this consolidation structure. I think that CPI did not really have enough effect on US30. So, but it's not like maybe it's all bad. I think it's good. If you missed NASDAQ, this can be a very good structure to actually try to jump at once we have FOMC. Let's say maybe if FOMC, they cut the rates, I think there's going to be a very nice buy for us to reach this level, or maybe we can even break that level. I think it's 40K there on US30. I think we can reach this level and even break that if they are going to cut the rates. But if they don't really cut the rates, it means we are going to follow what we have at the moment. You can see that we were going up as an uptrend. We had a breakout, but at the moment, the market is just consolidating. And after this consolidation, we might start to see a continuation of that sell. Yes, I will be checking those comments. I'm just trying to go through this major pairs that we have at the moment before we go to each comment on the comment section. But now, as we are on USD, I'm expecting a nice consolidation here. But whatever that we have is very important. But what's more important is the FOMC or the news later on. I think we're going to have a clear picture of what is going to happen after that. But at the moment, it seems like the market is still going to just consolidate. If maybe the market moves higher, it will move higher because CPI on the other side went lower. You see. So let's check NASDAQ. I think NASDAQ, it was still flying. The reason behind this is it's not actually about the CPI. Yes, CPI went out very nice. It's quite lower. But the reason behind this is we have Apple, which is performing very well. They did just introduce their Apple Intelligent, or let's say AI. And we have NVIDIA, which is also performing very well. We have AMD, we have Intel, we have Qualcomm. They're all approaching AI in an aggressive way. And whatever that they're trying to approach, I think they can actually make those products very quick. I saw Qualcomm, it's Qualcomm. They are already manufacturing their CPUs that they will be available, I think, second half of the year. Already now, I think maybe this month end, we are going to have those laptops with NPUs and stuff like that. So it means those AI, it's easier to make money than other stuff that it's actually in the market. So which means it's not only a hype, it's not actually AI hype, it's actually happening. We can already see OpenAI robots or OpenAI AI, the way they work. We can see a Gemini, whatever from Google. They actually working. So which means they can actually make those products as soon as possible. And if maybe at the moment you are watching all those companies, if you make some investment in there or buy some shares, you can easily make some cash within 12 months or maybe let's say within short period of time. You see, I hope that it's the technology that we have currently that can actually boost the market. And once we see inflation going down, it makes their job very easy because they've been performing very well. But the problem is we had this cloud of CPI or interest or interest rates or maybe inflation being higher. But once we start to see those inflations going down, then it's actually good. So that's why at the same time, those companies are performing very well. And at the end of the day, we will see Nasdaq starting to perform very well. So on Nasdaq, I think this move is quite way too small. If they cut the rates, it's where we're gonna see some very nice moves. I think we're gonna have like some serious moves after they cut, if they cut the rates. If they don't cut, I think that is gonna be a burden for now. Maybe we might see the market maybe trying to reverse on Nasdaq. So I don't think if maybe you did not really jump on this buy or whatever, I don't think anyone missed. But after that, once we know what will happen, I think we might have some serious moves after that. But if they don't, I think we're going to have some serious reversals. And maybe if that happens, we're going to just consider waiting for the market to reach the support area. It will depend if maybe the market will be reaching the support area or maybe the lowest one before we look for another buys. Maybe around that time, we will have some new updates, maybe new economic news. Maybe the month will be ending, then we will know what will happen next on the next interest rates. Then maybe the market will also be recovering. So yeah, that is enough for Nasdaq. I think at the moment, yeah, we are still on a very nice bullish move, but after the news, we can just jump on that. So thoughts on USDJPY currently and during FOMC. So now let me just go through your comments, guys. Let me just go through your comments. Maybe we can learn. We can hear something from you guys. All previous streams here on Trader Nick's channel, he explained what. Okay, that's thanks, Sibusiso Dlamini. USDJPY, I will check that. Currently and during FOMC, I will check that. Thanks. Check out USDXN MXN. Which one is that? It's Mexico, maybe. I don't know. AUD CAD, USD CHF, gold. I think I did that. So let me check USD. This other pairs. Very quick. AUD what? It's AUD. Let me check. Look at Europe. I will check Europe. USDJPY. Let me start with USDJPY. Okay. So on USDJPY, this is what we have at the moment. The market was actually on a very nice uptrend structure, but it doesn't really start now. It's been on this nice uptrend structure. Even if we go back, you will see that the structure has been actually going up. You can see here. You can see that. So we've been on this nice uptrend for quite some time. The market is coming from those areas. So we've been actually on a very nice uptrend. So, but the reason behind USD and JPY is because JPY, it was quite weaker. Their interest rates or their interest, they were like on negative. So it makes the dollar to be quite stronger because at the moment, US rates, I think it's 5.5 basis points. And JPY, I think it was 0. I don't know, maybe 10 or something like that. So they were, before they were on negative. Yes, they were on negative, for those maybe who understand that. So now what we have here is we still have the same bullish momentum or uptrend structure, but now we have a reversal. So if you check nicely, this reversal is not really enough to say now the market is on a downtrend. No, we are still on this nice uptrend structure. So the question is, will the market actually try to break the support area? It seems like it's going to be a tough one, unless if maybe they cut the rates. Even if they cut the rates with 25 basis points for JPY, that is still not really enough because their rates is quite lower. Because sometimes when we trade these pairs, we can even check their rates. If maybe US cut their rates, it means we are going to be around actually 5.25 basis points. JPY is just going to be way too lower. I don't know what let's say 0.10, something like that. So even if they cut, you can see we are still going to stay around 5.25 basis points, which means this is still very stronger comparing to JPY. So that might not really be a bigger move. We might still see a nice reversal because at the moment, remember the news. This is how the news works. We've been seeing that they're not going to cut the rates. So if they don't really cut the rates, there is not going to be much of a negative because we already knew that they're not going to cut the rates. So it's not going to be a surprise. So we might not really see some bigger moves. Do you see that? Unless if they increase the rates. But if they don't really increase the rates, it means if they just stay where they are, it's not going to be a problem for the market. It's not really surprising that much. Yes, we want them to cut, but if they don't really cut, already we know that, oh, we saw that they're not going to cut the rate. So which means we might not really get some bigger moves. And that will make the market to do what? Maybe to respect this level and start to push the upside again. Because it will make the dollar to be quite stronger for longer or rates higher for longer. So which means if they stay higher for longer, then we might start to see another reversal. And that reversal might happen exactly on our support area. Do you see that? On USD JPY, you can see that the market will be on this support area. So if maybe the market is going to respect this area, to me or to us, we can say, yeah, that was quite obvious because it's the support that we have. Plus, we've been on this uptrend for quite some time. And I think JPY, I think they're going to, this Friday, I think they're going to have an event about their rates this Friday. I think I forgot, but I think it's this Friday. So it will be up to them whether they increase or cut the rate. So we don't know what will happen. But at the moment, I think if maybe it doesn't really matter. If they cut the rates, it's where maybe we might see the market breaking that support. If they don't really cut, I think we might see crazy moves, but at the end of the day, we might see the market reversing again. But remember, we also have a resistance around that level. So yeah, I think maybe I did answer that question. I think I did answer that question. Euro USD, I think I did check Euro USD. So let me go through this question. I will go on Euro USD also and AUD CAD. I think it's AUD CAD. I will also go on AUD CAD. Sorry. So Kenzo, do you think the Fed is under pressure due to elections coming in November? I think if they do cut their statements, it's likely to be dovish today. Yeah, there is a bit. It's 50-50 on that. If we say they have any pressure from let's say from politics, sometimes it's like that. But what we know is reserve banks, most likely they tend to be staying away from politics. And they will also specify that we don't really have any pressure from politics or whatever. So which means they are just going to look what's really happening, specifically on the economy. If the economy is performing very well, or maybe if the inflation is slowly going down, they don't really have any choice but to cut the rates. But if things are not really going nice, maybe inflation doesn't really reach where they want it to reach, they still don't really have any choice. They need to leave the rates where they are, or maybe at the end of the day, they might even increase those rates. So I don't think maybe that will help. Yes, maybe there are some few influence here and there, but we can't just actually rely on that, because at the moment, even if they don't really cut the rates, it's not like maybe it's something that we don't really understand, because we can see NFP, it was going up. Maybe last month CPI was also higher. So so much stuff was actually showed us that inflation is still very high. So if they don't really cut, it's not really a surprise. So maybe we can say, maybe the pressure might come from other economies or other countries. If maybe we are peers, like let's say it's Europe, it's US, I will just say USD, it's Canada. If they both cut their rates, so this makes the dollar like to be separate, like it separate it from these other boys, because this one their rates are very lower, so it makes the dollar not to be attractive that much. Why? Because it means that if you want to make business for that specific time in the US, it's mostly expensive because the rates are higher. Let's say maybe if you take in if you take in a loan, it's actually difficult at this time because the rates are higher. So it's better to do it in a different country. So if maybe I'm a business person, I will likely to go to Europe or Canada or any other country which the rates are quite lower. So that is actually a bigger pressure. We can then say, yeah, maybe they might cut the rates because already Europe they did cut the rates. Canada they did cut the rates. Maybe Britain they might cut their rates maybe next week or something like that. So obviously they don't really want to be there alone. So they will also try to cut the rates. They will explain whatever they want to explain, or maybe they might pause the rate and cut the rates maybe on the next session. I hope that makes sense. So let's check AUD CAD. I saw someone said check AUD CAD. AUD Canada. Where is AUD Canada? I don't think I have it here. Let me check what I have before I add something. I will check some of your comments, guys. Euro USD. Before I do Euro USD, let me check AUD CAD, guys. Someone said check AUD CAD first, then I will check the other ones after. Whoa, this thing is flying, eh? So AUD Canada. It seems like Canada not Canada. It seems like AUD it's flying. Let's check the reasons behind this. What do we have here? Let's go on a daily time frame and try to understand what we have here. Oh, this is like aggressively bullish move. This is an aggressive bullish move. But what I see here is the market is giving us, let me remove that. I think 4 hours time frame is still fine. I still see the same thing that I saw on a daily. So yeah, the market is actually on a very nice uptrend, but I think I can't draw a proper trend here. This is what I see. I see this level here. I see another one somewhere here. So yeah, this is what I have. I don't think we're gonna have a proper support area here, but we don't really have to force it. We can just throw it like that. As long as you can understand that we are on a very nice uptrend, then we can have something like that. But this trend is not controlled by what we have as a support area like that. It's just giving us some aggressive push to the upside. That's why we don't really have enough touch to this resistant line, so this support line. So the market creates moves like this, push up, moves like that. That's why we can easily draw our support and resistance inside. I think this is the only thing that you should check, this support resistance. At the moment, the market broke out. Obviously, once the market breaks out, you should have something like that, maybe if you were following AUD CAD. But I think this move here, it's a complement actually from if you checked Canada. Canada already did cut their rates, and now we see that CPI is going down on the other side of US. This makes AUD to be quite stronger because their rate is still very high. They did not really cut their rates, so it makes them to be very high. for those who don't really understand, again, is even though these countries are different, but remember, Canada is quite closer to US, so some other events, they do have some impact to each other. So that's why when we see CPI going down, on the other side, CPI also loses some momentum. That is also true. So we might still see the nice push. Also, Canada, they have lower rates at the moment comparing to AUD. That is something also. But at the moment, beside the news, we can easily see that the market is actually on a very nice uptrend. And you saw that also on a daily time frame. The market has been actually trying to push to the upside. The market is going higher. So let me check. I saw a question. I hope maybe that makes sense. Hey Kenzo, hope you're good. Yeah, I'm good, man. I'm very good. Please, what's your thought process before taking a trade, and what's the main confluent you look for before pulling the trigger? Okay. So I think I think that question, to answer that question, I think it's easier when you say, I can just easily say, I have a strategy that I follow. Most likely on my side, I will actually buy, or I look for buy positions only on an uptrend, and I look for sell positions on downtrend. So which means if I have an uptrend like this, if maybe the market was going up like that, it doesn't really mean I will just buy anywhere. I'll have to know that, okay, we are on an uptrend, which means the market is going up. So since I know that this is an uptrend and I'm supposed to look for buy positions only, the question will be, where is the right place for me to buy, as I already know that the market is actually going higher. So from there, it's where I will start to point out the areas that I will be looking for those buy positions. And that it will come straight to entry strategies and stuff like that. I think on this channel, for me to go through that is going to be way too longer, because we're just going through the market, and that will be the whole day, or maybe another 2 hours just to explain that. But the main thing that I follow, as I follow the trends, it means most likely I will follow the trend. If it's an uptrend, I will look for buy positions. If it's a downtrend, I will look for sell positions. Simple as that. Can you briefly explain what will happen to the dollar if they don't cut the rates? If they don't cut the rates, it means the rates are still going to stay where they are, and which means the rates, they're going to stay higher for longer. Most likely, if they don't really change or don't cut the rates, or let's say when we talk about the news, if they're not going to cut the rates, most likely it might look like a bad thing. The dollar might go a little bit lower before we see enough push to the upside, because it's not going to be a surprise. So the market likes a surprise, whether up or down. So if it's just the same, it doesn't really look good. But with the rates, it's a different one. With the rates, it means if they don't cut the rates and they stay on 5.5 basis points, it means they are higher for another 2 months or 3 months. So which means that is not really good. The dollar will end up gaining the momentum again. You see, and with this type of a structure, we are on a dollar index at the moment. We are going towards this support area. It seems like the dollar will be doing the same thing. If they don't really cut, we might see the market trying to go even higher again. You see, I think if maybe it doesn't really break that, maybe this is trying to tell us something that, okay, we might find another support here, and maybe if they don't cut, we might see the market going up again, and we might start to see another continuation of that. But if maybe they specify that they're gonna cut the rates, I don't know if maybe the next FOMC rates is gonna be July or September or August. I don't know. But if they specify that, you know what, this time we are sure we're going to cut the rates on the coming event, that will also be a good news, even if they don't really cut the rates. If they say we are sure, because now it seems like the inflation is going down aggressively, They will say, okay, maybe we're not gonna cut now, but we are sure that we're gonna cut maybe next month or whatever. That can also be some very nice move that they can do, and we can start selling up to when they start to cut those rates. I think that's what we like, especially now US is going down and the rates are inflation is going down. That is also a good thing that is happening in the market. Even if they don't really cut, I think it's also a good thing because inflation is still going down. So they're not going to have enough pressure. The pressure might come from these other countries which are already cutting, you see. So that is something that I see. So another question is, let's see. Kenzie. It's not Kenzie, it's Kenzo. Okay, but it's fine. What if the rates comes out unchanged? Any significant effect? Yes. If they don't really change the rates, it's like, let's say, for example, nah? Let's say, for example, you have $100, nah? You have $100. And they say, this later on, it's either we're going to take something. Let's say maybe we're going to take, it's either we're going to take $50 or maybe we're going to leave your account like that. So obviously, if they cut the rates, that is going to be not good for the dollar. We might see it going down. But if they leave it like that, it's like, yeah, that is the same amount that we had before. So it's not really much of a problem. So we still have the same amount or the same rate. So that might make the dollar to be stronger a little bit later on. But the most important thing is going to be the conference that they have after they release the news, because they might not really cut the rates now. They can, let's not cut the rates, but maybe we see enough change in the coming month and we are going to cut. This time we're going to be sure that we're going to cut. That will also be a good thing. I think most likely on the interest rates or rates, the most important thing is what next? What will happen next? Because if for example, they might cut now, let's say maybe they cut to 25 basis points and say, you know what, things are not really looking good. We might cut now, but next month we might increase again. That is also not good. They did cut, but if maybe we are going to go back again, that is not going to be good. So mostly we focus on what will happen next, because NASDAQ or maybe let's say US30, SP500, these are stocks, these are companies. So which means we don't really care much about what happens now. We care much what will happen next month, 6 months, 12 months, whatever, something like that. You see, that's what we expect for at the moment. So maybe we might have a crazy move on gold, because gold is not a shares. Gold is not really shares. So which means gold, if maybe gold it's not performing very well, it means that dollar most likely it will be performing very well. But on gold, it's a different story, because it's focused on geopolitics. It's a safe haven. So if maybe there is wars and stuff like that, it's better to buy gold and relax. That's why sometimes it doesn't really care if maybe DXY is going up or down. It's because the situation that we live in now, it's way too complicated, and it's better sometimes to just buy something that is going to be stable for longer. I hope I answered your question. So next question, let's see. Next question is going to be my question. Why will the Fed want to cut rates further, since the NFP job numbers were higher, indicating future inflation, and a further cutting of the rates also indicates perceived devalue? Okay, let's see a continuation of that question. Of the US, in my opinion, increasing rates should stabilize the economy by mopping up excessive cash in circulation. Yeah, I think this is something that we can argue about. I might be wrong, you might be right. So it's not like maybe whatever that I'm saying here, it's a fact. Maybe they're gonna cut the rates or not. But according to what I see, according to what's really happening at the moment, if they don't really cut the rates, it doesn't really mean it's good, because there are other companies, let's say there are banks which are suffering because of higher rates. They can't pay some of their bonds and stuff like that. And we had the same issue last year when the rates were quite higher and other banks were closed. So it means they need to lower their rates as soon as possible. Yes, sometimes at times like this, we need economy to function. And for the economy to function, it means employment. We should have enough employment, you see. But we know very well that employment, you can say NFP, we know that employment, it means that there will be enough people who are working. And if maybe there is enough people who are working, it means one way or another, these people, they're going to spend. Let's say maybe this last month, it was 10 people. Then this month, we hired 100 people. So it means we're going to have enough sales. That will mean enough, or let's say higher retail sales, because now we have extra pockets to spend, right? So these people, they're going to spend more, or maybe we have extra people to spend, which means automatically that will raise retail sales. Well, retail sales, they will go up. At the end of the day, we are still going to see CPI trying to go higher. All these things, it's not like it's bad when we see economy, because sometimes we can see so many companies cutting employers. Like they say they are retrenching, they are cutting employees. Why? Because they can't keep up with the higher rates. So they have to cut the rate so that these companies, they can survive. We see Microsoft, they actually laying off some jobs, like 10,000. 10% of their workforce, they're cutting those. Why? Because the rates are higher. So maybe just to explain few, or maybe just to make people to understand on that, remember, if you have a bigger business, like maybe, let's say, for example, you have maybe you own Ford. If maybe you are a Ford now, obviously you have debt, right? So if you have debt like that, it means you have to pay with interest rates. For you, or for this company to operate, you need to have actually enough money, and that enough money comes from debt, right? And you have to pay this amount with interest rates. But if these rates are higher, if maybe your profit is 200 million, for example, it means if you have to pay, let's say maybe your loan was 200 million, maybe let's say you made 400 million as profit, right? For example. So now, just because the rates are higher, you have to pay maybe 300 million to the banks, 300 million. Now you're left with 100 million. Remember, you have shareholders, you have your stockholders. So what will happen with this? It means we have to split this. We have to pay your bills, you have to pay your workforce, your employees, and stuff like that, you see? So at the end of the day, if the rates are higher, instead of making pure 100 million, it means now you can still make the same amount, but just because you're going to split with that interest rates, at the end of the day, your pure profit might be actually 5 million. You see, that is not really good. If we compare what these companies were making like now and maybe 4 years ago, it's quite different, because now they have to pay extra rates. And for them to make enough profits to keep the company running, it means they have to lay off some jobs. And at the end of the day, that is not really good. So when we see the numbers going up, it's not really that bad, because there were people who lost their job along the way, you see. So if maybe we have enough people actually going back to work, and maybe the rates going down, that is also a good thing, because economies can actually survive. Companies, they can actually survive. But I think it's a long story. Economies or economics sometimes can confuse here and there, but that is something that you can go out there and try to learn. If I try to explain it here, I don't think it's going to be the whole day. So Okay, thanks. But please, can you do a video relating to that? Your entry criteria, your channel, since there isn't enough time to explain. Okay. So USD CHF, let's check USD CHF. I hope I'm not eating enough time here. We've been here. So USD CHF, let's see what's really happening on USD CHF. USD CHF. On USD CHF, let's see this. So on a daily time frame, firstly, let's see what's really happening. I think we can easily see that the market is been actually on a very nice downtrend structure. Yeah, and I think it will end up continuing going that way. We see that the market, it's actually on a downtrend structure. We had a sort of a fake breakout move there, but the market it's already continuing to go down again, which is great. So on a on USD CHF, I think it's quite straightforward. We are on a downtrend structure. We are, let me remove that. We are moving below. Let me remove this so that the chart can be clean. Yeah, we are on a downtrend structure. I'm expecting a continuation of that move to continue to go down. You can see that now the market is moving below my resistance area, so which means I'm still expecting to see a very nice sell to go going down. So you skipped my question. Man, let me check. Sorry if I skipped your question. Maybe I did not really see that. What's your question, my brother? Let's see. Euro USD, please. Bearish or bullish after FOMC? Bearish or bullish? Okay. It depends what will FOMC actually tell us, or what is going to be released. If maybe on Euro USD, or before we go on Euro USD, on USD CHF, guys, I think the market might just continue going down as the market is it's moving below our resistance area. We had this smaller break out there, but it did not really keep up with that. It seems like the market will end up going down, but anything can change. Remember, we have the news in a few hours. Let's say in less than 3 hours. So if they cut the rates, we might start to see the market continuing with that downtrend. But if they don't, we might start to see the market reversing. Simple as that. So on Euro USD, let's see. Euro USD, let's go on Euro USD. And I want to answer the question. Guys, and unfortunately, I don't think I will able to answer every question. So let me just go through that question. Will we see any bearish or bullish after FOF? It depends. If FOMC cut the rates, that will be good for Europe. That will be good for Europe for that time. I think we will see a continuation of a bullish move. But if they don't cut, I think we will see the dollar getting stronger because their rates, it means they are still quite higher. But what I know is we can't just be sure and say if they don't cut or if they cut, it will go like this. Why? Because there's a conference. So on top of that conference, they will actually say whatever they say. So whether they're going to be dovish or it's dovish and whatever the name. So it means that they're going to be bullish on their statement or maybe bearish. So it's dovish and hawkish. Yeah, something like that. So it's going to depend on their statement. What will happen next? Are they thinking about cutting the rates? But now it's no longer about thinking, are they going to cut the rates or not? If they're going to cut, that is going to be a good thing, even if they don't really cut at the moment. So which means we are not really sure. The best thing is let's try to listen to those to that conference and just to understand what will happen. From there, I think even the market, it will just show itself to us. We will see when the market start to reverse after the conference, or you will see the move. And from there, if you did not really watch the move, you'll end up understanding, oh, maybe things were not good, or maybe things that were positive. I hope I did not, I hope I answered your question. So yeah, inflation. You see bearish bias to move. You see now. Okay, I think maybe that's enough for now. So Let me check. I think maybe I did not really check much on oil. Oil, I saw US oil trying to go even higher. But the overall move at the moment, yes, we are coming from this nice uptrend structure. But I think if I can clear, you will see a very new structure now that the market has been going up. You can see we had this bearish move uptrend. At the moment, we are here. Do you see that? Now on US oil, we expect the market to continue going down. Let's see. We expect it to continue going down, but it seems like the market is trying to go back towards that resistance area. You see that? So I'm expecting the market to respect that level. It seems like it's a little bit higher. So I think this can be something very nice on US. But I saw some OPEC countries, they were trying to cut their oil production, which means we might see this move breaking that level. But at the moment, I think we are still on a very nice downtrend structure. I think for now, I think that is enough. Thanks.
All right, Kenzo, thank you very much for taking over the show here for a little bit. And again, I'm sure everybody appreciated your thoughts on all these different markets and all this crazy volatility. And I just wanted to also mention, you know, you reiterated that we have the FOMC event happening this afternoon, our time, which
Yes.
of course is just a couple hours from here. And I just want to also touch on the fact that, you know, the dot plot that we get today will it'll do one of two things. It will cause the market to really cheer and say, hey, we might
Yes.
have actually, you know, beaten this inflation thing, or at least the Fed thinks so. And so the market will rally, or it might throw a little cold water on what we've seen today in terms of these ginormous moves on the NASDAQ, the S&P, the Russell, and just about everything else. So it's a really big day. And so, Kenzo, I want to thank you for helping us to continue on the show. Everybody who's listening, please do us a quick favor. If you have not already subscribed to Kenzo's YouTube channel, make sure to hit him up. Here's his link. If you click this link, you can find at Extra Hot Forex. Keep up with Kenzo's analysis each week. So if that is something that you're interested in, please do so. Take a second to subscribe. You'll also be helping out the A1 show when you do that, because, you know, when we bring on these guests, they're not getting paid to do so. They're coming on out of, you know, trying to help out the community and also to grow their own exposure. So we definitely want to honor that and you know, have them keep coming back. So Kenzo, thank you very much for coming on the show, man. And we will see you back on Friday.
Yes, thank you very much. And also your viewers. I'll see you on Friday.
All right. See you, Kenzo. All
Thank
right,
you.
guys. And yes, we are continuing on here, pressing on. We've got more stuff lined up for you. And my goodness, this market is volatile. A little bit surprised by the move in gold. I was telling Frank about this earlier. We saw a real kind of intraday reversal where I thought that it would, you know, to be honest, I thought it would keep up or continue to keep up with the NASDAQ and the S&P today, as the TLT position that I am in is flying. We're really seeing some nice moves on TLT right now. That is, of course, the idea that yields are falling. But what's weird to me, to be honest, is why yields falling this much is not more positively impacting gold. Take a look at the 15-minute chart. You are seeing a positive day, don't get me wrong, but my guess would have been, if you told me that yields were down by 3% plus today, I would have told you, okay, that means a 1% plus day for gold. And so I could be very off base with that, or this pullback could totally just be a pullback and gold rips higher. We will see. But I really want to reiterate what Kenzo was pointing out. With the Fed event later today, we get the dot plot. The dot plot is basically a voting system for when and how much rate cuts or rates are expected to be at into the future, right? So are rates going to go down? Are they going to kind of flatten out? We get something that looks like this, and it will cause pandemonium in the market one way or the other. If things look really good for the markets, meaning that rate cuts are expected and maybe more rate cuts than previously thought, or, there's a confirmation that rate cuts are on the way, this market could keep going higher. And I'm not just talking about the S&P, not just talking about the NASDAQ, but I'm talking about, gold and other things. Look at this, by the way. Dow Jones almost completely reversing the gains of the CPI lower than expected print. So very interesting moves here happening today. You're seeing the S&P and the NASDAQ up. I mean, no question, NVIDIA is flying high, right? There's NVIDIA up 3.9%, let's call it. You've got Apple. And we are going to be doing a stock talk later. Oh, look at this. Apple's up another 5%. Congratulations to anybody who is an Apple shareholder. You are having one heck of a week. Apple is up since Tuesday morning, 13.8%. Guys, that's the second biggest company in the world having a almost 14% week. That's insane. Really, really crazy stuff. And, it's about time for Apple. Apple had been doing nothing for a long time. Is this move justified? You guys know I'm not the biggest Apple stock super fan. I love the products, but I'm kind of so-so on the recent hype for Apple. I think that Apple is a game changer company, but at the end of the day, they still have this problem to prove, which is, or this problem to overcome, which is, take a look at the annual earnings for this company, and you just have not seen much growth in terms of revenues. Now you might say, well, they make $1 bajillion, but that's not quite how stocks get priced. Stocks get priced based on their earnings and the growth or lack of growth that their earnings are expected to do. If I told you that this company is worth, let's just say that I own a small business, and in order to purchase my small business, it's going to cost you, let's just say $50,000, right? So if that's the price of the business, but then I tell you that in the future, this price of $50,000 is the price of my company with expected gains. We expect to grow at a 20% growth per year. The earnings of this company are expected to grow at 20% per year. But what if I told you that something changed in our business model, and now the expected growth is 5% per year? Is the company still worth $50,000 to buy? And the answer is no, because the initial offer was $50,000 for the company with the current setup that looks like it's going to grow at 20% per year. But if something changes in the business model, or in Apple's case, the lack of new products and upgrade cycles that are incredibly, in Apple's history, they've grown their revenues massively by introducing new products and upgrading the iPhones, and people would have to go buy those new iPhones because they were just so much better than the other ones. But there's criticism for Apple that I've talked about and been vocal on the show for a long time. Apple's lack of new straight up products. Yes, they've launched some cool new features with their recent developers conference, but Apple is the second biggest company in the world. They have the best talent in the entire world working for them. And there's a difference in, hey, these new features, these new services that are helpful within Apple's ecosystem. There's a difference between that pitch and the pitch that was made back in the day when Apple brought out the iPods or iPads or Macs and new massive upgrades to the iPhone cycle. That's a different Apple than we live in today. Right now, Apple doesn't drop a brand new, product like that. They have all these existing products that they have added features to, but it's just a different growth, in my opinion. Anyways, I could rant on that all the time, and I do it kind of frequently, so I apologize for that. Apple's still a company I think you shouldn't hate on. It's still a very incredibly innovative company over the last few decades. But when you're trying to pick stocks or you're trying to buy markets, you have to understand that you want to buy something that has way more growth ahead of it, not unclear growth ahead of it. Because then, if growth becomes unclear, this market could, you could see more periods like this where there's just consolidation. And why do that when you could go to, admittedly, even though I don't own NVIDIA, why would I want to buy companies that are experiencing just really steady, strong revenue and sales growth and net profit growth, right? You have to think about that when you're talking about companies. And how do you price them? There's a whole different ways. You can look at price to earnings, so on and so forth. But we'll do that at a later point. Let's talk a little bit about some of the indices here and their moves following this CPI report. The Dow Jones and gold are seeing kind of this pop and drop, at least right now. Perhaps you could chalk that up as just consolidation ahead of the FOMC meeting. Do you guys say, I'm just curious, do you guys say FOMC like I do, or do you say FOMC? I've heard people say FOMC. I think that sounds very weird, but that's just me. FOMC or FOMC? You guys let me know in the chat. Also, if you guys are enjoying the show, if you've enjoyed all of our different guests and the work we've been putting in to make the show today, do us a quick favor, smash that thumbs up button. It really would help out just what we're trying to do here. We're trying to grow a community of real trading, no nonsense, no BS, just real stuff. If you support us in that venture and want to help out the show, free thing you can do, just take half a second, smash that thumbs up button. Again, it really does help out. All right. So the dollar index, let's have a look at here on the 4-hour chart. Well, let's keep it on the daily. I don't even think I need to go lower than the daily for this. This chart is so clearly stuck between these two levels. Support here around the 104 level and resistance around the 105. I was just doing a podcast just before this. I had to jump off and do a podcast session for the Market Pulse Market Insights podcast that I do. And I was talking about the dollar index, and I just warned on the podcast that with FOMC right ahead of us, just be aware that you're talking about like a pivotal moment for the dollar index. If you get a dot plot or press conference that is very bearish for the dollar index, we could pop right through the lows. Hold on. Do I have my sound? Hold on, guys. I need my soundboard. So let me just reshare the screen. Give me a second here. Don't go anywhere. All right. We need some sounds here. All right, let's pop it back in. Mystery box. What sound are you going to get next?
You can trade down.
Okay. That's the dollar. This is the dollar. If you get a dot plot that looks super dovish, it could happen today. This actually, so let me, you guys ready for my game plan today? I got my game plan. Off air, I was discussing my positions with my good buddy Frank. You guys might know him. It's a white dude, kind of looks like me. People think we're brothers. So Frank and I were talking about it. And first of all, this is a perfect candle here today for the
perfect candle. That green candle.
TLT position that I'm in. That's a perfect candle. We will take perfect candles when we can get them. So here's my game plan. You guys ready for my game plan? Look at that. TLT is a monster today, and gold is coming back to life. Where the heck did oh, there it is. Okay. Game plan today. I'm stuck in the middle. Okay. I'm stuck in the middle.
Instant pain.
Because here's the pause. Here's the positions that I'm dealing with. Okay. I'm going to be very transparent with you guys here. Okay. So hit the thumbs up button. Nick looks tired. I'm actually not tired. What I think you hear is when I stream for long enough, I just did a podcast. When I stream for long enough, my voice gets a little softer. So I'm actually purposefully softening my voice so I can make it through the end of the day. So I am okay, but thank you very much for that. I'm playing with my soundboard today. Okay, so that's how we're going to get through this today.
You what?
All right, so here's the game plan. You guys ready? XLK, VOO. Collectively, those two are bigger than my gold position. Actually, they're about the same size as my gold position. I am long gold. I am long technology. I am long the S&P 500. And I'm long TLT. I have 4 trades right now. But what I'm dealing with is that I also sold calls against my technology and S&P 500 positions, which ended up being not the right call. Get it? I mean, that was just a bad joke, but not the right call. Literally not the right call. Legitimately, verbatim, word for word, these were not the right calls to sell because the S&P 500 and the technology ETF XLK had, you guessed it,
Perfect candle.
perfect
Green
candles.
candle right there.
Okay. So perfect candles are great since I'm long the shares, but this is the frustrating part sometimes of selling options. And most of the time when I sell options, I just make steady gains, which is awesome. What's not fun is sometimes I sell calls against existing positions and those positions rocket higher. And I've put myself in a position in which case I have capped my upside. Why? Well, because I'm long the shares. I have 1,000 shares of XLK and VOO, which are screaming higher today. But because I've sold calls on those same charts, I've capped some of my upside. So what's the game plan today? Well, inflation figures today were great. They were really good. And so here I am with my XLK and VOO S&P positions. I have a game plan for today. Here's the game plan. Ready? I wrote it out off screen so I could talk about it with you guys because I know you would never judge me. I know the public would never judge my thoughts here. It's never happened before. Let me make this bigger so you guys can read with me. All right, let's go here. We'll go 24. There you go. So today we have FOMC this afternoon. We have 2 scenarios. The Fed could come out very dovish with their dot plot and press conference. I'm talking about Jerome Powell, but I'm also talking about the dot plot, which is more than just Jerome Powell. But here's the thing. FOMC, if it comes out dovish, remember, I have 4 positions. If FOMC is dovish and this thing continues to push higher, because remember what would happen if the Fed comes out dovish today, yields are going to drop off a cliff as if they already haven't, right? They already have. Yields are down big today, down bad today. And that's great for my TLT position. It's great for my gold position. It's great for stocks. But then the question becomes, do I sell calls against my TLT position? The answer is yes. I know what I'm supposed to do with my strategy. If you get something that breaks out big time today, I am going to, again, cap my upside. So again, you might say, Nick, why are you capping your upside again? Well, it's because most of the time selling calls is actually a very profitable way to generate income on my positions. And I want to get out of TLT at some point. This is not my standard momentum trading strategy. When I sell calls and puts, it's a different strategy than my standard momentum strategy. So if scenario 1 today, we get something where things are really dovish and yields fall, I'm going to be watching yields today. If yields fall, gold, TLT, stocks, they're going to jump and they're going to keep going. That's my expectation. Could be wrong, but probably will not be. If yields drop big today on the Fed dot plot and the Fed press conference, we probably see the markets continue to explode higher. In that case, I'll be looking to sell TLT calls, and I'll probably sell like a 20 delta. If you know what that means, you know. If you don't worry about it. Basically, I'll sell calls at a higher strike price, probably around the 20 delta before the end of the day, if we get a dovish FOMC. By the way, if I share that trade, all of my trades get sent in our Discord VIP group. If you're not in the Discord VIP group, let me just do a quick shout out. If you guys would like to join the Discord group and get access to the trades being shared each and every day by myself, Frank, Ivan, all the good fellas over at A1, if you guys are not already in the VIP room, we're going to do something really quick. We're going to do 25% off. We're doing this for the EDGEFINDER today, but I'm going to extend it to Discord members. If you would like to get the trade alerts shared to you, I shorted the Russell this week and made some money on that. I'm long gold, long TLT. I share all of my positions. Every trade that I take gets shared inside of Discord. If you would like to get those notified to you throughout the week, or Frank's trades, who also shares his, here's what you can do. We're going to drop the link in the chat. Click this link, take 2 seconds, chat with a rep, and let them know that you'd like to get 25% off the Discord. We'll honor that today only. That is right now, today only. Any trades that I make go right there. So there's that. So scenario one today is I already have positions open on TLT. So if bond yields drop and this TLT jumps, I'm going to sell calls if it's making a big move up, basically. I'll be looking to sell probably the 20 deltas. That's what I'm going to look for. If FOMC is hawkish, meaning the dot plot doesn't show a bunch of rate cuts in it, or perhaps they push back the idea of rate cuts, or maybe during the press conference, we hear from Jerome Powell and it's not very exciting in terms of rate cuts this year. Maybe they're not super impressed with the inflation figures. Maybe they were hoping for more by now. If we hear any of that, if you get a hawkish reversal, this would be the big hawkish reversal on the day. Again, I don't know what's going to happen. I'm telling you what I will do in any scenario. This is how real trading goes. Real trading is not, oh, I'm going to, fire from the hip and I know where everything's going to go, right? This is trading is all about being reactive and knowing what you're going to do in both scenarios. If the Fed comes in hawkish today, also let me add one thing before I move on to hawkish. If the Fed is dovish today, I'm just going to get called away from my positions, and that's okay. Most likely. These are monthlies that I've sold calls on my positions. So I'm selling, what was out of the money calls, but now they're in the money. If the market rips higher today on the FOMC meeting, I'm probably just going to get called away and I will take profits. These are huge profitable trades for me. So I will take a profit if I need to. We're up collectively between these two swing trades, $21,000 here, $14,000 here. These were massive winners. I bought these in April and then I sold calls too early. That's what's happened. So game plan is, again, I should add a layer to this, except that I will probably be taking profits on VOO and XOK via covered calls. And I should say probably here, I can't italicize that one specific piece, but probably because again, if it explodes much higher, if the stock market's up another 2% or 1%, it's unlikely that it will come all the way back by the end of the month. It could, but probably won't. So I would just accept that I'm going to just take profits on my positions. So if FOMC is hawkish, this is the other side. If FOMC is hawkish, press conference, etc., the stock market, gold, NASDAQ, TLT, all of them will probably see stark reversals if you get a hawkish view, right? If that happens, let's pull up TLT where the game plan's at. I will close my sell calls on XLK and VOO. Why? Because if the market drops, those calls will significantly lose their premium, which as a short seller of those calls, that would be good for my position. So if these calls normalize a little bit, like if we get back to, we're probably not going to get back to break even, but I would take a smaller loss on XLK and VOO calls that I've sold if and only if today we see a sharp reversal due to the Fed meeting. Does that make sense? I don't know if this type of game plan run through was helpful to you, but if it was, do me a quick favor. Just type yes in the chat, just so I know that made sense. I know I tried to go at a slow enough pace that we could really dissect the game plan here. I already have long positions on gold, TLT, the NASDAQ, and the S&P essentially. What I do with them today is very much dependent on what happens. So we'll see. Which one would I make more money on? This one, definitely, because my TLT and gold positions would move higher. With the side caveat, which would be not as fun, which is I'd get taken out of my S&P and technology ETF positions through the covered calls that I sold. So not ideal in either scenario, but the first one I'd make more money. So it is what it is. There's 675 people watching here. If you're enjoying the show, do me a quick favor. Hit the thumbs up button also. Really would just help to continue to support the stream. Appreciate you guys. And make sure to subscribe. Subscribe if you're new here. Again, I mentioned this a second ago, but I just want to reiterate, if you guys would like to join the VIP Discord, we're doing a 25% off sale today for the EDGEFINDER during this event. But we also just extended it to the Discord memberships as well. If you would like to get a membership with us and come trade alongside the team, Frank and I and all the gang here at A1 are sharing our stuff inside of the Discord. You can sign up using this link here. And if you do want if you want a EDGEFINDER too, you can bundle the two things. Just chat with a rep. Someone from our team will help you out. What that looks like, by the way, is just click this and click the top two. Just let us know you'd like to get access to the VIP Discord or the EDGEFINDER. And again, we will honor this 25% off sale for the Discord as well today only. So just chat with us if that's something that you're interested in. We'd love to have you. It is not a get rich quick scheme by any means. Real trading is difficult. It's not easy. I'm going to keep this up, by the way. I'm going to make this a little bit smaller so we can just keep it on the radar, but that is the game plan for me on TLT today. The S&P 500, take a look at the 15-minute chart. Consolidating a little bit, but man, this thing has really just exploded today. And the Russell also saw a huge move. This one ended up being, I'm really glad that I ended up trailing that stop. Yesterday, I was short the Russell, which is the RTY or IWM. I shorted the Russell at this level here. Let me change that color. I shorted the Russell here, and when it dipped like that, I trailed a stop like right here. And so I didn't make very much, but definitely more importantly today, I saved myself from taking the full stop loss. So sometimes it's not really about like making a profit on every trade. Sometimes it's just about taking a smaller loss or locking in a profit or something like that. I'm ignoring my subscribers. No, I'm not. I had a lot of stuff that I had to get through and discuss. So I am also not always the greatest at reading chat, so I apologize. Stop loss to the rescue? Absolutely, yes. In this case, it really saved me for sure. Still holding the Russell? No. Just took profits on it yesterday. I'll show you what I did there. here was the thought process. So the Russell entry looked beautiful. I was a little frustrated on the way out of the office yesterday. I was telling this to Frank and James that so this Russell position looked so good. It was so crisp. Like the entry, boom, dropped. And then I trailed my stop. You can see it right there. I trailed my stop, and sure enough, right by the end of the day. And at the moment, again, I was like, dang, I just keep having these like first base hits, is kind of how they feel like. I've been having a lot of first base hits in my trades, meaning I'm making a profit, but they're very small. They look really good, and then they come back. I've been having a lot of those recently, and it's part of the game. And to be honest, it's better than a loss. So I really shouldn't complain. But again, I'm feeling especially thankful that I didn't, try and get fancy with it yesterday, because again, I would have ended up taking the full loss had I not, made that move. Which has more volatility, FOMC or CPI? Just depends, whichever has more unexpected outcomes. So today's CPI, I would say, was very unexpected. We had a lower than anticipated print, even though, you take a look at the jobs data that came out on Friday. This was why I was saying this to Frank earlier. The reason CPI today was so volatile was because look at what we had on Friday. Wage growth on a year-over-year basis ticked up. So that's where everybody got freaked out about CPI. Everybody said, or consensus was, well, look, wage growth is rising. That's going to indicate that inflation is going to come out hot on Wednesday. What also contributed to that thought process was jobs came in really strong, higher than expected. So jobs added were strong, wage growth was strong. Those things suggest that maybe CPI could come in hotter. So today's number was a surprise because the market said, oh yeah, we're probably not going to see any progress on the inflation story. Let's also see, do we have inflation? Yes, we do. So people didn't think inflation was going to make any progress. They thought we were going to stay flat on inflation, but instead we actually came down. So inflation made some progress. And so that was the surprise. So news, economic data, if you're looking at trying to understand fundamentals better, it's always about how surprising is the news actually to the market. So today's CPI, I would say, was very surprising. And today's FOMC, I don't know how surprising it will be, but if it has big surprises, it has the potential to move just as much, more, or significantly less than what happened with CPI. We don't know. I would say, though, that volatility is expected to be very high. You can actually see that in the options market. Options is like the land of volatility. And the land of volatility, expected volatility is very, very high. Nick predicted 3.3. I don't think I did. I would love to claim credit for that, but I don't think I did. I said it could be 3.3. It also could be 3.5, but I don't try and predict what CPI is going to be. I don't think they'll cut rates today, but that's not saying anything controversial because absolutely no chance of them cutting rates today. If they do, if they decided to spontaneously cut rates today, things would go crazy. Like it would be a violent reaction. I don't really even know what the reaction would be, to be honest. Look at that. Gold is recovering here nicely. Nice little pushback. Again, I am long gold myself. So we got a position on gold, which is going pretty well. Also, let me check the schedule here today. Just want to see. The reason is I gotta go pee. So give me a second. By the way, guys, I mentioned this earlier. If you guys ever want to check in on what the live streams are going to look like for the days ahead, the producers here at A1 keep a nice little tidy ship here with the stream lineups for the days and weeks ahead. So today you can see we are at, we have our next slot. Kenzo came on, and then we have Frank and James coming on next. I think, James, is that in 2 minutes or is that, I don't see the timestamp. Is that in 2 minutes or later than that? So we'll see. But anyways, should be interesting. James just responded whenever you want. Okay. Let's see. We have Chris coming on at 1:30. So today's 12. Yeah, let's do this. No other guest, still Chris. Okay. Yeah, so I have to pee really quick. So James, if you want to just come in here and play around with some charts, welcome to do that just for a minute, and then I can keep going. I just need to run really quick. We do have stock talks coming too. That's going to be fun. James and Frank are going to chat some stocks, which will be cool. Should be a good time. All right, James is going to fill in for a minute. I'll be right back, guys.
I'm in the big chair now. All right, guys. So this is the fun part, and the stressful part about planning a 6-hour stream is, for a while, everything goes really smoothly. Thank you to all the guests that were streaming with us earlier. We had Marco up first, and then Miko, Forex James, Kenzo. We have Chris Pulver coming on later. Nick has obviously been going for a while, but until we really start ramping up to FOMC, we're just kind of chilling, hanging out for the rest of the day. Appreciate you guys watching. 700 people watching right now. That's awesome. But yeah, let's see. Will you be streaming on FOMC today too? Yep, that's the plan. So we actually started this morning at 8:15, 15 minutes before CPI. We watched the CPI reaction live. And the plan is to stream all the way through FOMC. The FOMC press conference starts at 2:30. So we'll watch and react to that live as well. So yeah, 6+ hour stream today. These are always fun days here in the office doing cool stuff like this. But sometimes you got to kill a little bit of time, because 6+ hours is a lot to schedule for. So Juan says more likes, please. We got 700 people watching right now. If you haven't liked the stream already, please do so. Thank you very much. But yeah, if you guys want, I can pull up the EDGEFINDER here. Look at our top setups really quick. Bonds, gold, Euro CAD, NASDAQ, Pound CAD, bullish. CAD JPY, Euro CHF, platinum. A lot of Swiss franc pairs. Swiss franc is selling off dramatically over the last week or so. Did they have big news this past week or last week? Swiss. CPI came out as expected. I don't know what's causing such a huge sell-off on the Swiss franc. But anyway, send us the copy while Nick is gone. Yeah, so Nick said that right now the EDGEFINDER is 25% off. But while I'm on stream, if you can find... No, I'm not going to say. I was going to make a joke about if you can find us in the office, we'll give it to you for free. But we're not going to do that, so please don't do that. That was a joke. That was a dumb joke. 2:30 New York time. Yes, so FOMC actually drops at 2, and then the press conference is at 2:30. Nick got back just in time. I almost gave out the EDGEFINDER for free. All right, Nick is back.
Bye, James.
You want to do like 30 more minutes?
I can do 30. Yeah. Hey guys, I heard you guys wanted some free edge finders. I want a free edge finder too, but unfortunately, the edge finder does not pay for itself. It is costly. Send us the copy while Nick is gone. Nice try. I gotta be the bad guy. I'm like in high school and stuff, I was like usually the kid that was more messing around than paying attention. It's weird to be on the other side where I have to like reprimand and be the school teacher of this live stream, but we're back and the stock market's still up. It's a great day. Okay. So let's do a little round robin check in on everything. So I'm going to switch over to the hourly charts just so we can see. Get the S&P 500 up 1%, 1.1%. The Nasdaq's up 1.37. Dow Jones up just 0.3. The Russell is a huge winner on the day, up just shy of 3%, 2.8% today. That's big. The FTSE is up 0.8%. The German DAX is up 1.3. The Nikkei, the Japanese stock market's up 0.7. The VIX is actually down pretty big on the day. This makes sense because, again, the VIX trades based on expected volatility in the financial markets. So today with CPI behind us and coming in light, the VIX said, oh, probably not going to see as much volatility. The dollar index is still taking a big beating here today. And if we keep going, gold is up, silver's up 2.7%. Silver's making a good bounce here today. Oil's back to flat on the day. Look at this. Oil reversed big time at 10 o'clock. Did we have some? We must have had some sort of inventories or something here. Hold on. All right, let's see. Maybe we didn't. Hold on. No, maybe we didn't. Do we have something at 10 a.m.? I feel we might have had some sort of oil inventories that are not showing up, but tomorrow we do have PPI. That should be also pretty volatile. Let's see what else. So oil's up just 0.12% today. It was up a lot more than that. Yields are really, really dropping today. The 2-year yield is down 3%. The 10-year yield is down 3% as well. And the 20-year yield is down 2.5% as well. That is a nice thing for my TLT long position. If you're long bonds, you are wanting the yields offered by bonds to actually go down because they make the bonds that you own more attractive, right? If everybody can go get the same yield on a bond, then the bond you have is not very attractive. But if nobody can get that yield because you bought it before the yields dropped, it becomes more attractive. So I do own a position in TLT, which truthfully, I was super early on this. I sold puts, got into the position over here, and then I did sell some calls while I waited, which has been a nice little income kind of way to make some money while I wait, I suppose, on this one. But then now I'm back in the position, or now I'm back in the green on this position. And the question is, what do I do with it? Well, I mentioned earlier that my goal with this is to, if it continues, if it breaks through this resistance, like if we make a big push here today, further from this, I'll probably sell calls again and just accept that I could get taken out of this position for a profit, or, if something happens with the Fed today and we see more of a dovish reaction, could get the opposite effect. Nick, are there any books on trading you'd recommend to get a deeper understanding of fundamentals, technicals? Not really. I'm not really much of a reader, to be honest. I would say that if you really want to learn fundamentals, just I don't really know of any shortcut. You just have to be constantly reading and learning, reading articles, watching shows like this one, watching, YouTube channels that mine as well as others that cover fundamental analysis and economics. And I would say, to be honest, if you really want to get into fundamentals, you could probably take like a intro to economics course. That would honestly be helpful. I remember I took economics in college, and at the time, I didn't really pay a lot of attention to fundamentals when I was trading. I was trading at the time, but I would have taken that class so much more seriously if I were to take it again now, because now I stare at this stuff every day, all day long, and it's really important stuff. Could you charge a monthly subscription for the EDGEFINDER instead of selling it? For small investors like me, it is impossible to buy it for now. Juan, we do offer payment installments. If that's something you're interested in, you can, we'll drop the link here to the chat. You can speak with someone on our team who can hook you up with a copy on a payment plan. If you're interested in payment plans, please take a second to chat with us on the website. That is something that we offer, but it is done on a manual basis. Someone from our staff will speak with you about it and set you up. We do have a 25% off discount going on right now. So payment plan plus 25% off discount is a pretty crazy good offer right now. Speaking of the tool, let's have a look and see what's going on here. Let's see, inflation data. So today, again, we've got May's inflation reading, which came in at 3.3%. The US or Europe, which cut their rates already, right? The ECB already cut their rates. So ECB already cut their rates. The idea is the Fed going to do so now sooner or later? And the inflation number today was promising because it is in the direction that the Fed wants to see, down. But look where the ECB cut rates. The ECB cut rates with inflation readings at 2.4, 2.4, 2.6, 2.6, 2.9. That's the last 5 or 6 months of CPI data. Let's cross that with the dollar. So again, keep in mind, they're not the same central bank. They have different, logistical inputs. They're two different countries, right? Or Europe is many countries, but it's two different economies. So for the US, the inflation readings are 3.1, 3.4, 3.1, 3.2, 3.5, 3.4, 3.3. We haven't been in a 2 handle in a long time. So inflation for the US has remained elevated. Now today's report was good progress for the inflation because it's in the right direction. We went from 3.4 to 3.3. This is a lot better than 3.4 to 3.5, right? It's a lot better than 3.4 to 3.4. So we did get some progress. So today was a positive for the story. But the question is, are they going to really cut rates soon off of that? And the answer is probably not. Nick, will you get a haircut if the Fed cuts today? Yes, I'll get a haircut if the Fed cuts today. But they won't cut. So yeah, the idea is basically inflation there was some progress, but we're still a ways off. That being said, look at that. TLT just keeps going. Gold is making a stab higher. Look at this volatility for gold. Gold is not messing around today either. Look at yields, man. Yields are just making their move. So yeah, game plan with TLT. Someone asked me what my entry for TLT was. My entry for TLT is $91.93 per share. I have 1,000 shares on that. AI is a nice tool. I've used it, but never thought you could create bands out of it like Nick or COT data. That's sick. Data is super cool, man. Data is super cool. Have you always traded futures? I don't trade futures. I trade mostly like ETFs. I trade, like gold and SPY and QQQ, and I do trade options as well. Were you ever into options? I have options right now. Not the greatest ones because I've sold calls against the market where I'm also long. So they're covered calls. But yeah, I trade a lot of options. A lot of options and a lot of ETFs. Nick, I was away from the chart and did not realize you're doing a marathon as well. Yeah, my wife and I trained for a marathon for, I think we trained for like 4 months to do it. And I've always loved running, but my wife has always wanted to do a marathon. And we did a marathon in Ireland when we were there for my sister-in-law's wedding. So we had a really fun trip. It was a lot of fun. What's gold's ETF? GLD. And by the way, guys, if you are looking for a brokerage, if you want to trade ETFs yourself, especially if you're someone in the US watching, let's do a quick thing. James, if you don't mind dropping the link here for our Webull sign up affiliate link. If you guys would like to sign up with Webull, you get 12 free shares if you use this link for US, UK, Philippines, and Singapore. Those are the countries I know you can do it in. I think you can get up to 12 free shares when you sign up with Webull using our affiliate link there. And again, it's what I use to trade. Webull's just so slept on. I think a lot of day traders use it. A lot of day traders use it because it's got so many technical chart features. I'm not really a day trader, but I love all the features. And for active trading and swing trading, it is the best platform for it, especially for options. I find it so easy to use. So if you don't already trade with Webull and you're interested in doing so, again, click that link. You can check out Webull for yourself. Gold ETF, it tracks commodities or just gold? Just gold. GLD just tracks the price of gold. If you're to take this and then look at gold, you can see they move the same. But as a US trader, I have limited options on trading gold. I could trade it on the futures market, but I can't trade CFDs in the US. That is illegal. And I can't, if I want to trade it, I either have to trade the futures version or the ETF version. And I just like Webull so much, and keeping it all in one account is just the most convenient for me. So I keep it all in ETFs. I could trade it on futures, but because I'm a swing trader, I don't need like constant live execution for like pre-market stuff. I can still I do all my trading during the, New York Open anyways. So ETFs work just fine for my purposes, but you can trade futures. That's the other way to trade gold in the US, etc. You seem to use higher time frames. Yeah, I do. I focus the higher time frames just because I am a, I use like a predominantly like economic data and fundamentals to make decisions. And I find that to be a lot less useful on like the 5-minute chart. I like to use the fundamentals, which keeps me like magnetized more to like the 4-hour daily chart, and sometimes the 1 hour for technicals. Look at yields. Yields just keep dropping here. We're at a fresh low for the day. fresh low for the day on the 20-year yield, 10-year yield as well, 2-year, and TLT is still flying. I mentioned this earlier, but if we do continue to see TLT explode higher, I will probably be selling covered calls against my position. What are the chances gold could melt? I don't know. I don't know what the Fed will say and what their dot plot will look like. But here's my game plan on gold really quick. I have a long position on gold. Actually, let me double check that my... Oh, by the way, guys, we just hit 433,000 subscribers on the YouTube channel. That's awesome. Thank you guys for the new subscribers who are just tuning in today. Hope you're doing well. And I hope this show is helping you in some way. Okay, so give you guys a quick breakdown on gold. 2269, 2269. I'm sorry, I have to adjust my... I'm not actually changing my stop loss. My stop hasn't changed, but I think I accidentally dragged this box to the wrong spot. So I'm still in my gold position. My game plan for gold today is that if you get a... Well, let's consult the game plan really quick. Let me add to my game plan what I'm going to do with gold. Okay, 20 delta calls. All right, if FOMC or FOMC is dovish, if FOMC is hawkish. Goes out of gold if price breaks support, hits my stop. Let's make this bigger. All right, so game plan for gold. I already have trades on gold, so I'm not looking to take any new trades. But my position, my long trade on gold, if today we get something really hawkish from the Fed, I will look to close out of my gold position in the event that we break support here. Is that likely to happen on the day? No, but it could. I mean, look at this. You had a 3% drop over here. So if we were to see a 3% drop over here again, 3.5% would put us well below our stop loss. Is that what's going to happen? I don't know, right? I don't try and predict what the Fed is going to put in their dot plot or the CPI. I just react to it. So if that dot plot looks really hawkish and the prospect of rate cuts is really challenged, gold could go lower, and in which case I will stay in the trade as long as we don't hit stops. So stops for me are below structure lows. What about if we get the Fed being very dovish? Okay, so if we see the Fed come out very dovish today during the press conference or the dot plot, if we get a Fed that is looking very dovish, my game plan will be to look to trail stops and lock further profits in on gold. So I really have my bases covered here today in either scenario. If the Fed is dovish, I'll do these things. If the Fed is hawkish, I'll do these things. No new entries from here. I'm not looking to make bets ahead of the event. I just have trade management plans based on what happens. Hey, Nick, I'd like to thank you for your channel. I'm going to receive my first payout, and this definitely was because of you sharing your fundamental understanding and explanations. Thank you very much for the positive words, Creepy Blaziken. That's a cool name. My cat's name is Blaze, and sometimes I call him Blaziken, so that's awesome. But also, happy to share my fundamental analysis, but shout out to you for putting in the work, for putting in the hours to get to a place where you can receive a payout. So that's on you. Congratulations. Good stuff. Nick, before you have added, have you lost confidence? No, I actually could very well add to positions that are winning. Like I could add to my gold trade if we see a dovish move today, but I'm not going to add ahead of a news event that I don't know is going to happen in. So if we see something like this, I'll give you an example. I could add to gold if we saw this. I add to winners very frequently. So if we get a really good trade going on gold, then I very well may add to the position. But there's a lot of factors at play. There's also like available balance in my account. So like if the account has freed up positions, I may add. And if it doesn't, I may not, just simply because if I have, no available cash in the account to purchase more shares or sell calls or buy whatever's, I won't do anything. But sometimes I will if I have freed up positions and I want to add to a winner. Dark Sight had a question. Why is there fundamentals even on USD? All the pairs gets affected. I mean, CJ got a huge drop, GA as well, because it's all about risk sentiment. So the CAD yen is going to drop on, let's see. So CAD yen is going to drop if, sentiment changes, right? So on and so forth. Also, I think CAD yen moved because of oil. Because oil dropped, CAD yen dropped. Oh, but it also dropped at 830, so you're right. The yen itself got stronger today. Why did the yen get stronger today on a day that the dollar got weaker? Well, it might be because expectations are for the Fed to cut rates, and that makes the yen look more relatively attractive than the dollar. The dollar's weakness can mean other currencies like the yen could step in and be more strong. We see that directly in the dollar against the Japanese yen, right? So today with the Fed or with the CPI data coming in cool, the dollar is looking a little bit weak. And that weakness also equates to strength in other areas. It's kind of like if, let's just say that Coca-Cola gets hit with a ginormous lawsuit that's very specific to Coca-Cola. Like, let's say, I don't know, there was something inappropriate that happened in Coca-Cola headquarters, and it was going to be a huge, costly thing, and maybe the CEO is going to have to get fired. Let's take that as our example, and bear with me. It'll make sense in a second. So if Coca-Cola has a huge stock drop because the CEO or something changes. Let's say that a big partner of Coca-Cola cuts ties with Coca-Cola because they don't like the CEO. Something like that really negatively impacts Coca-Cola. Well, how does that impact Pepsi, Coca-Cola's number one competitor? That would be positive. So it's kind of weird. Markets are like that. Same thing with currencies. So when something not good happens to a competitor, it can be kind of a positive thing for its counterparties, right? It's kind of weird, but it's like if you were running a race against somebody and that person tripped and fell, like you don't want them to trip and get hurt, but now you're going to win the race. See what I mean? That's so cutthroat, but I'm trying to give you a quick example. When the dollar is looking a lot weaker, other currencies, especially in the yen's case, the safe haven alternative, the yen starts to look a little bit more attractive. Nick, thanks so much. I wrote a message on Twitter also earlier. I just passed the FTMO $10,000 account challenge. Your fundamental teachings is what guided me. Thank you very much for the kind words again. I appreciate it. And again, that is mostly on you though. Shout out to you for putting in the work, and more power to you. Keep going. Russell seeing a little bit of a reversal. Look at this, guys. The Dow Jones absolutely not having the same party. These two are not having the same party today. The Nas and the Dow are having two different stories. We got James who just joined in. Hey, James.
Hey, did you add me in here?
No, I didn't. I think something changed with StreamYard because that was happening earlier when I was accidentally joining with Miko. I was like turning on my camera and then it would add me into the stream.
I did notice that happen earlier with Miko. Yeah, I didn't mean to join quite yet, but I'm in here now. Frank is getting himself set up in the other room right now. We'll take over for a little bit and give you a break. We're going to talk some stocks, I think.
I'm going to kick you guys off with some stocks that I sold my PayPal. I only had 2 stocks, so I sold 1/2 of my stock holdings. I sold PayPal, and I have Starbucks still, but I don't have a lot of individual stocks, but there's many that I want to own. Salesforce is a big one that I want to own, and I'm just waiting for, the old broken record. I'm waiting for a drop in the market, and if it happens, then I'll buy some shares. If it doesn't, I'll keep waiting. But I also want to own some Google. I want to own Palantir, American Express coming down. James, I always talk about this, but an area of the market that I really like is medical device companies like Intuitive Surgical. I think that's a company I'd like to own some of. Medtronic, which is where my wife works. Medtronic. What else? Abbott Laboratories. Some of them are actually giving you some decent pullbacks. Another one that's interesting is, so James, this is kind of an interesting story. I told Frank a little bit about this, but I'm going to pull up an ETF really quick, which is IGV. So IGV is the iShares Expanded Tech Software Sector ETF. It really specializes or it really consolidates a lot of software companies like Palo Alto, CrowdStrike, Salesforce, Adobe, companies that specialize in offering like software. And it's an area of the market that I really like. It's actually taken a little bit of a beating simply because all this tech money from big giants is going into things like chips, like NVIDIA. So it's like almost like NVIDIA and AMD and Qualcomm, they're like soaking up the spending of these big companies. And what's getting left behind in some ways is some of the software companies. So this is my favorite area of the market, is on a dip looking to buy some software names. If it happens, if it doesn't, I'll just wait till it happens, but we'll see. But I think Frank is ready to go. James, if you want to just run a quick break here in between, you guys can get set up and then take over the show for a little bit.
Yep. Let's see.
Attention, A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
All right. What's going on, Frank?
What's up?
You got any so are you holding any stocks at the moment?
Yeah. So I hold very little right now of individual stocks, but I've kind of increased my stake in this little company called Palantir. That's more of a speculative play though. and this has got to be over the long term. But yeah, I've been building my position slowly on this just because right now where the company is at, they have their valuation doesn't necessarily justify the price. So here is still looking overvalued, but in the long term, hopefully years from now, this will be one of the big players in the market. But I think at first we got to see some price decline in the meantime, like under 20s, and then I think under 10s would be a steal. So that's one of my my potentially big investments in the future. But yeah.
Is that the only one that you're holding at the moment?
No. Let me look at other stuff that I have. I do have SoFi. SoFi is another speculative play, but it's just a small holding that I am looking to over time see growth in, because right now it's going to be tough. SoFi's looking better. You can tell they reacted really well today, which is in part because they're dependent on earnings, or not earnings, but interest rates. So if we're looking at lower interest rates over time, stocks do well, but also banks. And this is like a kind of the new age of banking. And so, it's going to be more sensitive to things like that. So if we start seeing, more talks of that September rate cut, if it does happen, or if, today's message from the FOMC is very dovish, it's going to be good for stocks like this. But I'm not trying to trade it here for swing higher. I'm just trying to hold on to this just because it's probably 80% off of its highs. It's just been, decimated. So I think, over time, something like this is going to be a good play. But yeah, I got SoFi. I've been holding Tesla for a long time, and this one's hurting me. I've had this since like early last year or something. I don't quite remember the price that I've owned it at, but let me look it up. I don't want to remember because it's painful. But yeah, give me a second to find it. I owned it at 194. 194 and 44 cents. So that's a tough drawdown to be in, especially April. It was like in the 140s. That was a tough wave, but yeah, holding on to this one for the long term too. So I can't really complain right now. I haven't realized any loss, but anything can
Tesla's
happen.
an interesting one because it just got so hyped up and the price went so high that I think it was only natural for it to come down a bit, but they're still the industry leader when it comes to electronic vehicles. And I think that is where in the next 10 to 15 years, I think that's going to be the majority of the automotive industry will be electric. So in the long term, I definitely do see Tesla as a pretty safe play, but it is interesting to see it go so high and then drop so far for so long. But
let's
hopefully not too
think about it this way. You talk about the EV market getting so hyped up, and there was so much demand at first, and now everything's kind of collapsed. It's not just Tesla; it's pretty much every EV company is suffering. But if we look at NVIDIA, we look at the AI trade. I mean, Palantir is a part of the AI trade too. So what we've seen so far this year alone has been pretty crazy on a week-to-week basis. Let's just go from January of this year. So we're up 148% on NVIDIA. NVIDIA, Apple, Microsoft, Google, those are like our big AI plays too. You got TSM, Taiwan Semis. You got what else? You got Super Micro. So all of these companies are doing very well because of this AI sentiment. On top of CPI and businesses and inflation looking like it's going to be cooler than we expected, which is nice. So we're anticipating that September cut. So this is extra sentiment of optimism towards stocks. But if we're talking about hype, this seems like the perfect example of being overhyped in the short run. So if we're looking at Nvidia, people want to keep buying it up here, but is it necessarily a good choice, or should you wait for some sort of pullback? I've asked other people this, but I'm curious to see what you think about Nvidia.
So I actually was talking with Nick about this after the Nvidia earnings, and my theory on Nvidia, but more so AI in general, is that we're in like the second wave of AI right now. It was like when AI first started getting integrated into everything, it was cool and it was interesting. And now it's kind of become a part of everyday life, and it's improved a lot since it was first introduced, and we get new AI stuff all the time. But I think that it's going to take even the next wave of AI advancement, whatever that may be, for it to really have another big move like this. My guess is that Nvidia and other AI stuff will begin to slow down in the next 6 months to a year. And it won't be until something really shakes up the AI market that we see a big move like that. Because if you take a look at Apple had their press conference thing the other day where they were showing off all of their new Apple technology and products. And one of the really big selling points on this new wave of Apple stuff was all of their new AI integrations. There was like new Siri stuff, and there was the smart math calculator thing, which I thought was really cool. But more so than ever, Apple is starting to employ AI stuff into their own products and apps and technology and whatnot, which caused a big spike because people are hyped and excited over AI stuff. But once that initial AI hype cools down, I don't think it'll be until, again, that next generation of AI, whatever that might look like, that really shakes things up and changes things for the market for you to see a huge pop again like this.
Yeah, and Apple is now, I think, the largest company by market cap. They reclaimed it after Nvidia, and it's all due to that one conference they had. Was it yesterday?
It was, I think it was Monday afternoon.
Okay.
It was Monday afternoon.
So a few days ago, and the day before that, it had dropped. So what's crazy is that this one little reason, I guess it's not little, but it's also not, it's not necessarily something that I think Apple's going to be very good at. I think there are companies that are leagues ahead of them in terms of AI, but you slap the name on there and all of a sudden there's value. So
I'm actually curious because I think that this pop on Apple specifically, I think is directly contributed to the AI announcements. And so to kind of test that theory, I actually looked up the dates of their press conference last year, which was June 5th through June 9th. And I'm sure that they, whenever, I'm sure that they introduced some new stuff or whatever. But if we actually go back to June 3rd through June 9th, 2023, this is what that looked like at that same time. So the day of the start, it actually traded lower. And then through the 9th, if anything, Apple did. It came lower during their last press, the exact same thing, their WWDC press conference last year. Apple traded lower. I'm sure their products were great, but it traded lower. This year, off the same press conference, they announced AI stuff, and we see this out of Apple. So, yeah, I think it all comes back to AI, but until something crazy happens, I don't think that we're going to see huge moves like we have been seeing. But Apple introducing all of this AI stuff into their products, I think, is big news for Apple specifically, not necessarily just AI in general, but Apple specifically. But yeah.
Yeah. I'm not even quite sure what they were talking about. They said Apple Intelligence, but I don't really know what that could mean.
I saw two things. I know that they said that they were upgrading Siri in some way. I think that where Siri kind of always has been AI, but more so just to kind of direct you to other things. You can ask Siri a question and it just kind of Googles the answer for you, basically. I assume now it's going to be more so like ChatGPT, where it's going to give you, extended answers and thoughts and whatnot. One thing that they showed off that was actually really, really cool. I was talking about it in the office yesterday, actually. I don't know if you heard me talking about it, but there's this new feature that they have that's like part of the calculator feature, and it might only be on iPad, but you can write equations, and as soon as you put the equal sign, it will solve the equation. And if you add stuff to the equation afterwards, even after it's solved, it'll update in real time, and even do cool stuff like match your handwriting. Apple AI calculator iPad. So yeah, so this right here. So you can see the stuff in orange here is the AI generated results. So you write out the equation, you put equals, and then it will, one, match your handwriting, but two, answer any math problem that you write down. And you can add to it afterwards. So if I were to put, an exponent or whatever on this, 18 here, it would then update that equation to match. So stuff like that is pretty interesting. Let's talk inflation for a second, because I have a thought, or I'm curious to know what your thoughts are on this. If we go into the EDGEFINDER here, I'm going to pull up the CPI data for the US. And our last two CPI reports have showed cooling inflation after a pretty surprise, like a big hike here in March. So January was the lowest that we've seen it so far this year at 3.1, and people were excited, and people were saying rate cuts coming this year, probably 2-3 rate cuts, who knows. And then inflation said, see you later. We had a little bit of an uptick in February, but then a big jump from 3.2 all the way up to 3.5% from February to March. Since then, though, we have ticked lower, which I think, if I remember correctly, I think that you said we would see a tick lower yesterday while we were, or maybe that was on Monday, one of the days that we were walking out of the office. I think I asked you, and you said that you thought it would tick lower. So you were right about that. But do you think that there's a certain point that the Fed wants to see? Do you think that it has to reach a certain level? Do we need to get back down to 3.1? Do we need to get to 3 or below 3? Or do you think as long as it's cooling, even if it's at 3.3, 3.2, as long as it's not going up and it's still cooling, do you think we see rate cuts, or do you think that we need to hit a certain level before we see rate cuts?
That's a good question. I'm not the Fed. I can't say what they want to do, but I don't see a reason to cut because year over year ticked down 0.1%. I think we need to see something along the lines of going underneath 3, going into the 2s, and establishing a direction, as in a trend that is moving towards the 2% goal, to where it looks steady enough that in the next few months or maybe a couple quarters it will hit 2%. I think right now we're still elevated above 3. It's good news when you see inflation come down. It's good news, especially with what we saw in the jobs market, which was very concerning. Would be slowdown in jolts. Private payrolls were pretty bad, and then NFP is all over the place. You don't really know what that number is going to be. There's no trend really, and it gets revised to last month's revision was like 100,000 lower than what it actually was. So who knows what this month is going to be revised to. But looking at, say we have, in this case, it looks like slower jobs. ADP was slower. It's a clear decline. JOLTS is slower. And at the same time, with lower labor numbers, we got higher wages, which is kind of concerning for the inflation side of things, as in people thought higher wages could indicate higher inflation. But seeing this 0.1% decrease on the year over year, and then a 0.3 decrease on the month, and then 0.1 decrease on the core CPI, which is what the Fed likes to look at, I think is a huge sign of relief. And I think the market's going to continue to react positively in the short run. I don't think that it's a sure sign that we're going to see rate cuts, but I think it's relief. And so the market was very tense, looking for any signs of potential stagflation or higher inflation rates would just be bad for a cooling jobs market. So seeing cooler inflation rates along with cooler labor is tolerable, and it's a sign of relief. So I guess that didn't really answer your question.
No, you did. Because I asked if you thought that we need to hit a certain level or if we just need to see continued cooling inflation, which you answered. Blink here asked FOMC results hasn't come out yet. That's going to be at 2:00, which we will be live for. Christopher Bate is asking for GameStop and AMC. I can't imagine GameStop is doing anything.
They're not.
Yeah, GameStop's not doing anything.
Let's not cover GameStop or AMC.
No, I just looked at it. It's not doing anything. GameStop's not going anywhere, and we're not going to talk about it. So going back to the jobs market, we had higher than expected jobs every month this year until last month. January came out higher than forecast. February came out higher than forecast. March, April came out higher than forecast. And then May, you can actually see the forecast here is kind of interesting. It almost looks like, a straight line up. It's like angled upwards, where each month the forecast was a little bit more, and then it actually exceeded those expectations. And except for the last month, which was it was a big miss, forecasted at 238,000. The actual came out at 175,000, and then the revision even lower than that at 165,000. But this month, just a couple days ago, this was on Friday, I believe, of last week. Is that correct? Yeah, Friday of last week, we had NFP that came out again, well above expectations. So overall, it seems like 2024 has been a pretty solid year for the labor market.
Yeah, I think despite that one hiccup, things seem steady. I don't think that investors want to see growth necessarily. I mean, they would love to, but I think they're just happy with a steady labor market, and that's what's being shown. And we'll just have to hope that they're not fudging these numbers, and we're gonna get a revision of, like, say we come back next month and the revision is 100,000 instead of 270.
That would
Then
be pretty wild.
I mean, it can happen. Like, we've had some wild revisions in the past, so anything can happen on MFP.
Some of the revisions have been way off of the reported number, but recently, at least, it seems like the revisions are fairly close to what the reported number was. Maybe not January. January was pretty far off. You know what? Actually, the revisions have been kind of wild. This one was only a 10K change, but that one, well, 12K, that was only 5K. The line and the gap here makes it look like a little bit. Oh, well, you know what? I was looking at the red dot and the yellow line. Sorry. I get confused easily.
I mean, it's not super easy to read, but
when you hover over it, it's a lot easier to look at the actual numbers than just try and go off just a picture of the chart.
Yeah. Well, if we're talking about inflation, let's talk about gold, because I wanted to cover some of that. I'm still in my gold position too, but it's not really moving as much as you would think for cooler inflation numbers. So I was a little confused, and I was thinking about this too, but because of lower CPI, it seems like the risk on trade is back, and it's probably going to stay there until we see something that tells us otherwise. So gold made its move higher, but it's not really moving like how stocks had moved today. And I think it's because gold is kind of a risk-off play. It's also a hedge against the dollar and even small caps. But I think because there's more demand in that risk play, that gold kind of is out of favor. It'll still be bullish, but it's not quite as optimistic as say stocks are.
Mm-hmm.
But yeah, so I'm still holding gold. I'm holding GDX, which is the gold miners ETF. But see, I bought up here at 35.66 and have been riding this leg down. But hopefully, what I was hoping for was a retest at 37. So if that happens, I'd be happy. But I'm also just kind of looking at a continuation of the uptrend overall in gold. But I'm not too worried about it. I'm just I was just a little confused about why it wasn't moving, and I think I found the answer, but I'm not sure.
Yeah. I'm gonna call this guy out here for a second. This guy, go back like an hour in the live stream. Nick had his open positions open live on the live stream. So literally just go back, do your own research. You can figure it out for yourself. Nobody's scamming here. It's all open positions. It's all real trades, real money. Nick posts YouTube videos. He also posted on his Twitter, his Instagram. None of this stuff is fake. We're on a live stream. We're literally reacting to your comments as they come in. So yeah, nothing to fake here. Gold went on a crazy rally before it started consolidating around these all-time highs. And do you think that if CPI has already done what gold bulls want it to do, if FOMC, I'm talking a little bit later on down the line, not today, because I don't expect rate cuts or anything today, but in the next coming months, quarter 3, quarter 4, if CPI and potentially FOMC do what gold bulls want it to do, and we actually break clear through these highs here, which I know are all-time highs, but if we break clear through these all-time highs,
What highs
and
are you
economic
looking at?
data is pointing towards gold bullishness, do you think it's possible to even see maybe not a move like this, but like at least half of a move like this, another huge run to the upside?
I can't really see what you're pointing towards
Oh,
on your screen.
sorry. I forgot to share that. Yeah, so what I was saying was this move was like a huge historic move for gold, just an absolutely crazy move. And we've been consolidating here around these all-time highs. This was the all-time high, and then it came down and pushed lower and then came back up, formed a new all-time high, and now we're back down here at this level of support. But in the upcoming months, if, again, I'm talking 5-6 months down the road, if we see CPI and FOMC and things like that come out in favor of gold bulls, do you think that if we break through these highs, clear through these highs, that there's potential for another move like this, or we're just going to have to see?
You know, I couldn't really tell you, but if you're saying CPI moves in favor of gold bulls, are you saying that inflation goes up or down? What would be your interpretation of moving in favor?
Inflation continues to go down, and then maybe sometime in Q4 we see a rate cut. I get a little confused about this sometimes because I'm much newer to this stuff than you guys are. Would interest rates being cut be bullish or bearish for gold?
In either case, I think it would be bullish. You just interest rate cuts mean weaker dollar, so lower yields. Gold is kind of trading directly against the dollar, so a weaker dollar is going to be good for gold. I think the scenario that would be best for gold is if inflation came in hotter. And I say that because if inflation came in hotter this morning, and its initial reaction would probably be negative, but come FOMC, Powell says stuff like, yeah, we're talking about keeping interest rates higher for longer, which, although isn't good for gold, there's a rise in CPI. And if that trend keeps continuing with slower jobs growth, slower economy, that stagflation issue is the perfect scenario for gold. So maybe at that point you'd see a run as heavy as you were talking about. But right now, this is kind of just lower inflation it's only a good sign for gold now because we're looking at potential rate cuts. But gold likes high inflation. It performs better when inflation is running hot and the economy isn't doing as well. But now that we have a kind of a worse off economy and it's coming down with inflation, so it looks like it's coming down right now. It's kind of bullish. I don't think it's going to be as monumental as what we saw earlier this year. I think it's just going to could be a steady uptrend, but I don't think we're going to see a run like that as long as inflation's falling.
I'm going to do this again really quickly because it'll be really easy. Matthew says, why don't you show live P&L or something we can accept? Here's the live stream. This is the live stream. We've been live for almost 5 hours at this point. Here you go. Look, I just went back in the live stream. Here's Nick's live open Webull account with his live P&L. Open P&L. Just go back in the live stream. Just watch it. It's right there. It's right in front of your eyes.
We're watching a stream within a stream.
Yeah, I know. Streamception.
Streamception.
So there you go. Everything that you say that we're not doing, we've already done. So
what should we What should we cover next, James?
I don't know. We do have Chris Pulver joining the show in about 25 minutes. So I think Nick will probably hop back on here soon. So we can probably cover one more thing. And then he may be ready to hop back in here. If you guys have any stocks that aren't GameStop or AMC that you would like us to check out, we'd be more than happy to do so. If not, we can go over some EDGEFINDER top setups or COT data. Here you go. You got a question here, Frank. It says, Frank, are you more fundamental than technical?
Not really. I'm kind of equal. I use a lot of fundamentals for, I guess, picking a direction. But say I think gold is going to go up, but it's at this level right here, which is what I have drawn is a upwards trend line, which is basically resistance. So if I think gold is going up and say I'm not in it already, I would kind of establish that direction, and then I'd look at this and say, well, maybe I'll wait for it to break and close above this level and potentially test this, or I'll wait for it to pull back here, or I'll wait for it to pull back here before entering, because a trade isn't going to last me for years down the line. So I'm trying to get a good entry. So I use technicals to help find that entry. And yeah, I start with the fundamentals, why something should move a certain way. And then I go with the technicals to tell me when to get in. But in the case of the S&P yesterday, I did all my analysis, all of my fundamental biases as to why the market should go down. And then I bought. I just did the opposite of what I thought would happen and ended up working out. So I don't really understand the markets sometimes, but I do know that sometimes you think one thing, do the opposite, and it works. Just kidding. That's terrible advice, but
I mean, Marco started off the stream today, and he said he was talking about the winning percentage of trades versus losing percent of trades, and he said that oh gosh, I'm forgetting what he said. He was talking about how he has more losing trades than he does winning trades because the market can be so volatile and hard to predict. But as long as your risk to reward ratio is set at something that works for you, those winning trades can carry you through your losing trades, which is something that I've learned. Before, starting here with no prior knowledge to the markets, I would have assumed that, you need to win more trades than you lose, but that's really not the case as long as your risk to reward ratio is set up in a way that's profitable for you. I also think, going off what you were saying with the fundamentals and technicals, I think that, again, as someone who's newer to this stuff and learning more about it every day, I think a balance between the two definitely seems like the smartest way to go, because if you're trading purely off technical and you don't focus on anything fundamental, then you just don't understand what's going on with an economy, which is like, almost directly correlated to the strength or the direction of a currency. But at the same time, entries and exits and trends and whatnot that are all technical are all incredibly important as well. So a mix of both definitely seems to be the best way to go. But if you can be profitable just doing one or the other, then more power to you, because markets are hard.
Yeah, no, it's a tough place to be in, and there's highs and lows. But if you can manage correctly, then the highs won't be so high and the lows won't be so low. So you can stay in the market for longer. You can stand for the long term and really kind of hone your craft and figure things out. And the risk part is very important. A lot of people are good at entering trades. I think I'm pretty good at finding the entry, but the exit is a whole other story too. It's all part of the trade. I've held things that have gone way wildly in my favor, only to continue to hold them and watch it come all the way back or worse. So it's about kind of establishing your feel in the market and then getting a good risk reward going on, because you don't want to over leverage. And then when you are right, you've leveraged less and you feel like you're missing out, so you leverage more and more, and you just get deeper into a hole. Just figure out something you're comfortable with, and if you're right, that's great. If you're wrong, it's whatever. You live another day. Over time, if you're trading the S&P or the NASDAQ or the US 30, the Dow, whatever, you're going to see that stocks tend to just trend upward over time. There might be a few months where it goes down or a few years where it goes down, but if you scroll out, the market just goes up. So I would say that if you're looking to just, trade, I would say manage well. But if you're trying to buy and hold, and you'll probably find a 100% success rate if you never let go of the market. So I don't know.
Rafi here said that he had a question for Frank Kabibi, but then never asked the question. So Rafi, if you're watching, you can ask your question. Gijima, FX trader, said, how does recent news impact U.S. oil? Oil, I believe, went up today off CPI, correct? No, it traded down.
Let me see. Had a negative
Or
reaction.
it went up initially. No.
I can't tell if oil is
I think it went up initially, but it's given back a little bit of those gains.
I can't tell if it's tanking because of an election year. You know how they try to drive prices lower, and it's just another way to, I guess, promote themselves as in politicians. But I think what's weird is higher CPI, higher inflation is usually good for oil prices. So, well, it's not weird. It's just it just tends to move with the dollar in that sense. Though it's not the dollar, it kind of trades against it. But higher inflation is just like a leading indicator of higher prices. So if CPI came in hotter, oil would probably be higher. But because it came in softer or cooler than expected, it's I don't really see why it should move higher, to be honest.
At market open, it did actually gap higher, and then almost immediately gave back all those, came all the way back down to where it closed yesterday. And since then is trading higher. I'm looking at the 15-minute chart here. But you're right. That makes sense that with higher inflation and prices of stuff being higher, it would make sense for the price of oil to be higher. But yeah, so that was kind of a weird move from oil today, which goes back to what we were saying a little bit earlier. Markets can just sometimes be unpredictable. And, the more educated you are, the easier it can be. But every once in a while, stuff just happens. Stuff sometimes just happens.
I guess it could move up on a weaker dollar, but
that's true as well.
Everything trades against the dollar pretty much, so it's entirely possible, but I think you'd have to see more demand. I don't really follow what's happening right now with oil in terms of production, but I do think demand is going up. A while ago, I did some research on it, and somewhere in the Middle East, they're cutting their production by like 1 million barrels a day or something. I don't want to mix things up, but I heard something along those lines. So supply's going down, or if production's going up, could be a driver of higher demand. But yeah.
Oh, okay. So actually, I remember Nick mentioning something about this earlier. He was looking for it on Forex Factory, but couldn't find it. So he thought maybe they just hadn't listed something. But apparently there was some sort of oil news that happened today, which was not listed on Forex Factory, but I think that may have also been the case. He says check Forex Factory.
Was it barrels or something? Crude oil inventories?
Oh yes, crude oil inventories came in way over expected. If I'm reading this correctly, it was forecasted at a negative 1.2 million, but came out at 3.7 million.
That
change in the number of barrels of crude oil held in inventory by commercial firms during the past week. So there you go. We got
that's different. That sounds like it would be weaker or like bearish for what's going on. But
crude oil inventories. Oh, Rafi asked his question. How might a potentially unfavorable outcome from the Federal Reserve meeting impact gold prices?
How might it potentially unfavorable outcome? Unfavorable for gold prices is what you're asking. I think if you're asking what the Fed could say, that would be, I guess, bearish for gold would be if they don't talk about rate cuts. If they say that we're going to stay here as long as we need to, like how they have been saying, instead of giving their giving it a direction, which by the way they have the dot plot today, so there's more. You're going to see where the Fed members are voting on where projected interest rates will be this year and next year and the year after that. So we will see on the Fed dot plot, if you're familiar with that just the updated direction on where they think it's going to be. So if the dot plot doesn't really move, or if it's higher, that's pretty unfavorable for gold. But I think it's going to be lower. So
I want to say really quickly too, guys, we have just officially passed the 5-hour mark. We have been live streaming for over 5 hours straight at this point, and we are not done yet because we do have Chris Pulver joining us in about 15 minutes, and then FOMC drops at 2, and the press conference afterwards at 2:30. So we are nowhere close to being done. We've been going for 5 hours, but we still got a ways to go. So thank you so much we have right now, we're streaming across 4 different platforms. So if you ever hear us shout out how many people are watching and you look and you're like, these guys are just straight up lying, we are streaming to Nick's YouTube channel, the A1 channel, as well as both Twitters. So between the 4 different platforms, we've got over 700 people watching right now. Thank you guys for watching. Again, over 5 hours strong. And yeah, we still got FOMC, the press conference. We got another guest coming up. Show's not finished, so don't go anywhere. Appreciate you guys watching. If you haven't already, you can like the stream and subscribe. But yeah, let's see. I think Nick will be back in just a couple minutes. So if you guys have been wondering what we're doing here, like I just said, we've been streaming for a long time. So Nick's taking a little bit of a break, but he will be back in a couple minutes, again, with Chris Pulver. And we'll go straight into FOMC from there. So we still got a lot of big news ahead. Don't go anywhere because the best part is still yet to come.
Until Nick gets back on, I wanted to talk about Bitcoin. I'm going to pull this chart up real quick. First of all, what are your thoughts? What do you think of Bitcoin? Where do you think it's heading? Is it going to 100,000 like they say in the next couple minutes?
In the next couple of minutes, I'm going to say no. But like we'll touch on it for the third time. Markets are volatile, and sometimes things just happen. So Bitcoin to 100,000 15 minutes from now is not off the table completely, but most likely no. Bitcoin to me is so interesting because it's hard. It's still hard for me to imagine it as like a real viable currency that is widely accepted. I know that there are places around the world that accept Bitcoin, but it's not mainstream. So I think if and when Bitcoin becomes more mainstream and you can actually, and you know what may help with this actually? If AI and AI software can help make Bitcoin into a more viable everyday mainstream payment option, then I think the sky is the limit for Bitcoin. If someone can come up with a software, because the problem with Bitcoin is, the price of it is constantly moving day by day. So if I try and buy a cup of coffee with Bitcoin on Monday, and then I try and buy a cup of coffee with Bitcoin on Tuesday, the price is probably going to be different. But if AI and software advancements can, help make it so that it's easier to pay an equal amount, if you want coffee to cost $5, but for Bitcoin, it's on one day it's this and on another day it's that. If there's a software AI that can help balance that out a little bit so that it's a little bit more consistent, even if the price of Bitcoin is going up, then I think the sky's the limit for Bitcoin. But until we see that happen, I think it's just hopeful. It's just hopeful theories and speculation. But
that was a great answer. I was going to ask you. I was going to ask you what AI could potentially do for crypto, but
I think once AI gets fast enough that on one end it's tracking the live price of Bitcoin, and on the other end it's taking your transaction and it can make it into a seamless transition where you don't have to jump through as many hoops to pay with Bitcoin stuff. I do think that AI could make Bitcoin more of a mainstream payment service, and when that happens, I think that Bitcoin could explode even more than it already has.
Yeah, and if we narrow it down some too, time frame wise, so we got FOMC coming up. We just saw lower CPI. That was obviously good news for Bitcoin because it's up 3% on the day. We got FOMC coming up this afternoon. What should we be looking for in terms of, what the Fed's going to say? And I think what we should be looking for is, that the talk of cuts, the graph, the dot plot showing us that there's going to be cuts, stuff like that. Anything. It's kind of like gold in the sense that it's trading directly against the dollar. So you see any signs of weakness in the dollar, this is time for Bitcoin to retest the highs. So that's all I was going to say.
Is that 73,592? Is that that's the all-time high for Bitcoin? Is that correct? Or no?
Yeah.
That is
73,000. but sources say that 100,000 is in the near future, which is.
Does your source wear a red headband and cat t-shirts?
You might as well. I don't necessarily think this, but I talked about this guy too, I think yesterday. But there's this mega bull out there. His name is Tom Lee, and I mean he's smarter than me.
Tommy Lee?
Not Tommy Lee Jones, but Tom Lee.
I was thinking of the other
guy.
Wow, there's a lot of Tommy Lees. I was thinking of the Motley Crue drummer.
Oh yeah. But this guy, I mean, he's in his position for a reason. Like he knows more than me, but he said 5,500 on the S&P by the end of this month, which I thought was ridiculous. But I mean, if he says it's going to happen, then I mean it could come close or it could happen.
He's not far off. He's really not far off at all. The only thing that would kind of prevent him is if there was like a pullback towards the end of the month because it's been rocketing so high. I mean, you know, that's just natural for markets to pull back after big moves like this. And so he's only $70 off of 5,500, but you know, you should be prepared for a pullback after big moves like that.
Yeah. Here is I guess that'll be a 4% month gain. But we're 7 points away on the SPY from hitting 55, which is quite a feat for 1 month. But you know, at first I thought it wasn't going to happen, and then I mean now I think it can. So
CPI today definitely helped out a lot, and we'll see. Maybe FOMC will help out even more. Do you think that we'll see any sort of move if markets come out as expected? Because I personally am expecting, I think the overall majority sentiment is unchanged rate cuts, no change, no cuts, no rate hikes. Do you think that markets, on a scale of 1 to 10, if you had to guess, and this is just a total guess speculation, on a scale of 1 to 10, if markets come out unchanged, how volatile do you think S&P, gold, dollar, oil, do you think those things will be?
We know it's going to be unchanged. I mean, you can't say for sure, but the highest probability is that they don't do anything. And I mean, the Fed would hint at doing something before they did it, unless something was wildly out of control, which it's not. So we're not expecting anything to happen on the interest rate side.
Right.
That's not what's going to move them. What's going to move them is the projections. And those are coming in regardless. We're going to see what they think, what they're projecting in the next quarter, year, 2 years, where interest rates are heading. So if we see that dot plot hit, you know, lower, the majority of the dots are lower interest rates in the third quarter, fourth quarter, then we're expecting those rate cuts. And that's ultimately going to move these things. But, you know, if the dot plot's kind of still, then I don't think we're going to see much of anything. May even see a sell-off in risky assets like SPY or NASDAQ. But
and remember, guys, the news itself may not be big for the markets, but 30 minutes afterwards, there will be the press conference with Jerome Powell. He will take the stage and he will give him and the Fed's, outlook for the foreseeable future. And that likely will be market moving, and we will still be live for all of that. So We're coming up here about 30 minutes until FOMC, so still a lot to get to. But yeah, it'll be exciting. It'll be really interesting to see what he has to say, especially with CPI ticking lower today, which we know that the Fed wants to see. Their overall interest rate goal still is 2%. We haven't really gotten close to that since they made that their goal. But you know, it'll be interesting to see what he has to say after a lower inflation reading today.
I think signs of that we're getting closer is enough to push the markets. But yeah, we're pricing in lower interest rates before they even happen. So if any signs of relief, the dot plot comes in lower, but the market's going to price it in. So, but I think Nick's ready to get back on here. So we might.
Yeah, he's been
we might just hand it back over to him.
All right, I'm gonna run a quick little break here while we get Nick set up. So don't go anywhere. Again, we've got nearly 800 people watching, and the biggest event is still yet to come. We got Chris Pulver joining us here in a minute too. So I'm going to run this really quick break, and then afterwards, Nick will be back, and we will run through FOMC. So we will be back in just a second. Thanks for helping out today, Frank.
Yeah, thanks for y'all for staying on this long. It's a great amount of people for how long we've been on. So thank you.
Run this, and we'll be right back. Hey traders, it's James here from the A1 content team, and as we start today's stream, I want to share with you some exciting news from our friends over at FX2 Funding. FX2 has just launched their two-stage evaluation. The two-stage differs significantly from their one-stage, offering many benefits to traders. First of all, the profit targets are much more manageable, with 8% in the first stage and 5% in the second stage. Next, you'll get a 10% fixed overall drawdown that does not trail your account balance. You get all these perks on top of FX2's existing world-class customer service, high-performance technology, and a choice between two amazing trading platforms, CTrader and DXTrade. There's a reason FX2 Funding boasts a Trustpilot rating of 4.7 in this time of industry turmoil. They are a serious company run by seasoned business professionals and always take conservative steps to protect their traders. For traders looking to get funded, you can use promo code A1Trading15 to save 15% on all funded accounts. That's A1Trading15. The promo code can be found in the link in the description below and in the live stream chat right now. Now, on to the show.
All right, guys, and we are back for the final stretch here, coming in to our FOMC, the big event of the day. Is it the big event? I don't know. It could be, it could be not. Somebody asked a question earlier. They said, Nick, is CPI bigger or is FOMC bigger? And the answer that I gave them was a little bit tongue-in-cheek, but it is honestly the right answer, I think. The bigger event is going to be the one that surprises the most, right? The one that is the most different than what people were expecting. So was CPI different than expected? Yes. That is why you got movement this morning. Remember that markets move on surprises and excitement and unexpected stuff happening. The market doesn't move on exactly what is expected. James and Frank did an awesome job there for the last 30 minutes or so, hanging out, talking markets here for a little bit. I wanted to add a little bit of context too. They were discussing during their conversation that what happens if things come out exactly as expected, meaning the Fed funds rate remains unchanged. And the answer is a whole lot of nothing. Because the market fully expects, fully expects that they're not going to cut rates today. If they did cut rates today, there's not even a 1% chance, at least according to, I don't think there is on the FedWatch tool. Expectations are no rate cuts today. If there was, there would be a dramatic surge in markets. But for the last several years, the Fed has not done that. They've not massively surprised expectations. They've been rather transparent with what they're going to do next. That's up for debate, of course, but historically speaking, they've been pretty transparent. This Fed committee has been very much as expected in terms of what they are set to do. That being said, what are they expected to do today? Not cut rates, but more importantly, we hear from them on what their dot plot is indicating is coming next for the markets. Today we have the S&P 500 up 1%, the NASDAQ up 1.3%, and the Dow, which we're going to be joined in just a moment by Chris Pulver to discuss some of this stuff. We need to talk about what is going on with the Dow Jones. The Dow Jones, I was having a look myself at the heat map today, and we've got another like U shape on the chart. It's like the ugliest U. It's not an L. This shape. It's not an L. It's a backwards L. We have like a backwards L, ignoring auto manufacturers and home improvement, which is like real estate and, spending related. A lot of red in pockets of this area. And it just so happens that a lot of that happens to be the Dow. The darling of the Dow and the darling of the whole S&P 500 right now is Apple and Tesla. But for the most part, there is some divergence, some continued divergence. This is a theme that's been going on. Divergence in the stocks and companies that are performing well today versus the ones that are not. Now, REITs are up today. That would make sense with inflation coming down. Tesla, Home Depot, some financial companies, but not all. Interestingly enough, asset management, that makes sense. And all the technology is up. So it's an interesting kind of divergence in terms of what we're seeing here today. So we're going to be getting into all of that. We have, again, on our radar here today, we're going to be taking a look at many different charts in preparation for the FOMC meeting minutes. I'm sorry, not meeting minutes. The press conference, as well as the dot plot, which gets dropped at 2 o'clock. So just to reiterate that at 2 o'clock, we get the economic projections, which means that 2 o'clock is actually really important too. Sometimes you see 2 o'clock come out and nothing really happens, but 2 o'clock today is going to be important. 2 o'clock, we get the Fed funds rate, which is not going to be the surprising part. Everybody knows it's going to come out at 5.5. What's going to be the important part is this right here. The statement and the economic projections. And then, of course, the 2:30 press conference will also be important. But it is setting up to be an incredibly volatile next few hours because this dot plot or this press conference will give us truly the thought process of the Fed. What I love about the dot plot is that it gives you votes and numerical values almost that can show you what the Fed is voting on, what they think is going to happen next with interest rates. None of this, jargon from Jerome Powell that can be taken different ways. That game can be played every single month. We talk about how it seems like the Fed chair always kind of has something to say for both sides. We don't want to cut rates too soon because we want to keep inflation under control. But at the same time, we don't want unemployment to spike and we want the economy to stay strong. So we'll be looking to cut rates. And it just gives you this nothing burger. But today we get the projections. That is where things get interesting today. And where either this rally that we saw today is going to explode higher from here, or if we see some sort of pullback or reversal due to the material that we get. So going to be a crazy next hour. So we're going to be Chris Pulver in on the conversation as we count down to FOMC. So we'll go ahead and say hello to Chris and bring him in here now. We'll skip the ad because we just did one recently. But what's up, Chris? How's it going, man?
Good, Nick. Happy, crazy CPI FOMC day as we expected.
Yes, today is absolutely crazy. We had this morning, things were wild with the CPI report. CPI came in cooler than expected, to many people's surprise. I think Frank and I were talking about this. You had a lot of things that would have suggested that inflation could have come out hot today, like wage growth and jobs data that was higher than anticipated. So I think that's what we got, kind of such a wound up high volatility day, is simply because the market expected CPI to come in kind of hotter than anticipated. Again, wage growth, hot jobs, there were some indicators there, and this shrugged off that concern, and inflation came in light, dollar dropped, everything against the dollar is up today, and stocks, of course, are flying up over 1% for the S&P. But Chris, help me out with this. The Dow flat on the day on what should be an incredible day for the Dow, I would have guessed. What's going on here?
It is a really interesting, index divergence. SPY's up, Qs are up, Dow, but as you know, I mean, Dow is price weighted, not market cap weighted. And what is carrying the load? It's market cap. Did you notice that Apple the last 2 days is now number one in market cap? It's bigger than Microsoft, and it's bigger than Nvidia again. So we're jostling for leadership on who reigns supreme. But it's still the Fab Four. It's still the Mag 7. And the Dow is not priced that way. The Dow is a price weighted index, and some argue that that's an old school way, an archaic way to do it. But the Dow is kind of more of a reality check for, it doesn't matter if you're Apple or Microsoft, it's price weighted. It has nothing to do with market cap weighted when it's a $3 trillion company, where right now you have about 5 stocks that are concentrated about 30+% of the S&P. NASDAQ, same thing. So it's highly concentrated, as we know. I think this inflation data today gives the broader market a chance to step up and carry the torch a little bit to continue with what the Mag 7 Fab 4 has already done. Now, I don't know if that's going to happen. It's possible, but price action today, I saw a question in the chat, fundamentally, does it matter for intraday trading? I mean, look, I think that if I go to my charts today, we're already up, $7 roughly from the close yesterday to the high today, just shy of 544. So we have a $7 move from, let me use my little drawing tool here. So I'll just have to redo it. You can see my crosshair. So 537 was a close yesterday. We have a peak today around 544. That's a $7 move. The average move for the S&P is around $4. So we've already stretched nearly 2x what's expected. And I think that with 2 o'clock rolling in here in 20 minutes, Powell's press conference, this gives the market an opportunity to, one, come back and test the open of the day and see if this is going to stay bullish, or two, come back and fill the entire gap and be a big disappointment. But I truly don't know how Powell is going to be super disappointing, other than saying, we don't want to cut rates. I just don't think he's going to say anything like that. And I think the market's going to continue to push higher. This is path least resistance. Another thing, we talked about this yesterday. Let me get my drawing tool back up here. If we close higher or we breach last week's high, the highest probability is that it stays higher for the week. We may hold, we may not take out last week's low, but I would imagine that with this momentum and this 1% push, unless we absolutely smoke that gap all the way back down, we're going to close higher for this week, and it's just going to be another melt up.
Yeah. I mean, that's like it does seem like it's in frenzy mode. And when you're in frenzy mode, it just goes a lot longer than people think it will, myself included. I just want to run you real quick through this thought process I have. This is my game plan for the day. Chris, I have some things that are working out great, some things that are not working out as well. So this is just my loose game plan, and maybe you can follow up with yours after if you'd like. Yeah. If we get a dovish FOMC today, meaning whether it's the press conference, dot plot, if the market takes this as a very dovish FOMC event, which is, as you just mentioned, kind of the consensus to a degree. Inflation just came down, jobs are looking okay. That's the question. So I have a TLT position that if it does jump, if we get a clean breakout here, I'm probably going to sell the 20 deltas, 20 delta calls against my TLT position, which is officially in the green, Chris. I've waited, just like 100 years. It's officially green. And yeah, so I might be selling calls against that if we start to get a bit overextended, but right now I'm just going to let it do its thing. In terms of other things that I've got going on, I am long VOO and XLK, but I have covered calls. but I no longer want the calls with the cool inflation data. I like the charts. I like them long, but I still have calls to deal with. So if we get a dovish, if we get this thing that just comes out super dovish and we just explode higher in the indices, looks like I'm probably just going to be taking profits via covered calls on my positions, which is fine. I'll just look for a chance to re-enter. And then I'm also looking I have a gold position. I'll be looking to trail stops on gold. If we get more upside, basically, if we squeeze higher today, I'm going to be trailing on some of my positions and selling covered calls against my TLT trade as well. So that's that. If we get a hawkish FOMC, if we get a surprise, if we get a little bit of a reversal day, I'll be looking to sell those calls that I have on XLK and VOO for a smaller loss. I'm floating some red on those. I'll show you those now. This is the P&L. So I've got calls that I've sold that have kind of locked me in on some of my positions here, capped my upside. If those drastically change today, I might just close them out for those specific calls for a loss, just so I can stay in the positions, because I like the scenario. I think we have more upside, even though, yes, we've been on, squeeze higher for some time. This inflation figure could excite the markets, and any hiccups in the Fed, jargon, I'd be potentially trying to hold on to my positions. And then finally, if gold completely reverses on a hawkish kind of spiel today, if that happens, then my stop loss is in place below the lows. I'll take a loss on that. So that's my game plan. I just wanted to run that through for anybody who is just tuning in, and also to share with you, Chris. That's kind of my game plan. I'm curious to hear what is on the radar for you as we about 15 minutes out from the dot plot getting dropped.
Yeah. So the thing I'm really focused on for the next couple of hours, I'm just going into the SPY. I'm going to try to look at some price action today. I'm just going to let the 2 p.m. kind of rattle the markets a little bit. I'm probably looking to trade. If I trade anything, it's going to be from 2:30 to 4 o'clock. I'm going to try to get a read on price action during Jerome Powell's press conference. It really has nothing to do with what he says. It has everything to do with what price is doing. An easy way to do that intraday. I mean, I've got my drawing tool back up here. So, this is the open of the day. We had our, gap open with a CPI data 8:30. I could see price getting retested and then ripping higher, and then even through the press conference, possibly going higher. A number that might stand out today might be 550. I just haven't seen it pop up on my platform yet. Right now it's kind of maxed out around 545, but if I start to see some more gamma levels print to the upside, it might give me the opportunity to buy an at the money call, even a 1 to 2 strike out of the money call, and pay a little bit less for it for a 0 DTE, and see if there's some fireworks day to get like a $3, $4, $5 move during FOMC. That would be if I'm going to the upside. If we break this low right here, and we're going to try to have a gap fill today, I would probably do just an at the money or 1 strike out and see if we can get a movement back down.
Okay.
That's probably plan B. If I'm looking for a bearish move, that's probably plan B. I would imagine that the market's going to try to get back to the highs again, maybe stretch a little bit higher towards this 545, which gives me an opportunity. Let's say I'm correct and price comes down here, a little bit of noise during the rate decision, Powell's press conference, and all of a sudden price is pushing back up here. If I can get like a 541 call, and this trades up to 544, 545, that's a $3 to $4 move. I could probably pay less than $1 for a call option and maybe turn it into a couple bucks of profit. The flip side of that is if we break and try to close today's gap, then I'll probably do something at the money. But long story short is I want to see confirmation. This is how the trades went this week. I'm already up almost $8 of credit to start off the week from Monday per contract. I was long and short the SPY. I was long and short the Qs. And I also had an Oracle trade for earnings that I did with actually Frank. I think we did it yesterday. And all 3 of those trades were winners today, and I went ahead and protected profit. So I don't have to really deal with any of the drama of FOMC, but I'm looking for a potential trade for a 0 DTE or maybe going out to tomorrow. The one thing I didn't like though is I was looking at if I did like a long strangle where I want to go both directions, it's gonna ask you to pay too much money for it. So even tomorrow or Friday, it's asking you to pay like $3 or $4. No thanks. So I'll take my chances with maybe just a quick 0 DTE trade and see if there's some price action I can read and get a good vibe for. Otherwise, I'm up, $7.50 to $8 for the week already. I don't really need to do much. I mean, the account is doing pretty solid. You had mentioned TLT. I'm up about 80 cents per contract on TLT as well, which
nice.
is good. And we'll see if there's more to run, because I do have, I'm kind of uncapped to the upside as long as TLT gets some legs. I also had one of these accounts that I took in and absorbed had some pretty rough positions, but a couple of those actually got out for break even or better.
Nice.
Robinhood, for example, for 600 shares of Robinhood that was upside down thousands of dollars, came back to break even. So there's been some good things happen in the last 3-4 weeks, and melt up wise, I mean, we will see, dude. I mean, 550, 555 is reachable to the upside. One interesting trade that I have is it's a fancy little trade with options. It's a call condor, which just means I'm risking about $400. I'm going to try to see if this is an SPX trade, but I'll show you right here. So SPX trade here. If this trade, let me go into the trade section. This is out to June 21st. Let me try here. Yeah, June 21st. So you can see it where it is right now on my chart. So this is a bull call spread, which means that price is going to max out here around $5 of profit. And then this is a bear call spread for a $10 risk. And so I collected about 40 cents on the trade plus my max profit of $5. So there's a sweet spot in here, Nick, that if somehow price starts to fade back down just a little bit, not a ton, but maybe 10, 20 points on the SPX, then this ideally finishes with a winning bear call spread and a positive bull call spread, which gives me maybe $2 to $3 net profit. So that could be a lucky trade. I set this one like 30 plus days ago, but we'll see. It was actually interesting, a 15 delta when I started, and now it's sitting here at the money at a 50 delta. So clearly the price has been drifting high enough that this position is threatened. But one thing I always kind of rest on with option trading is about 70% of options finish out of the money, which is why it's better to be a seller than it is to be a buyer.
Right. And again, we'll see how that plays out. I think that as you get closer here, just a reminder to everybody who is tuned in, we've done these FOMC events on stream for years now, really. But we have always talked about, at the 2 o'clock mark, if it's a Fed meeting minutes or something like that, you may see some volatility, but to wait till the press conference. Today, I don't think it's just that. I think 2 o'clock is a big event and 2:30 is a big event, because today we get the dot plot, which is not always released, but that dot plot will give us key insights into what the Fed's voting for in terms of rate cuts or not rate cuts. And so again, I mean, as we count down the minutes, you are talking about an event that has the potential to either completely reverse what we saw this morning, or completely continue, or just go in every direction. I mean, it really can do whatever it wants in the next hour or two. So just expect volatility, and you'll at least be aware that it could move violently in either direction. Chris, I was also kind of just thinking up in terms of where I'd like to, for me personally, with my VOO calls and XLK calls, if I do want to try and get out of them, what am I going to do? How am I going to, when am I going to take those losses? I think right now what I'm leaning towards is if we do get some sort of reversal of the day, which may happen, may not happen. If we do get that, then I might look to go ahead and realize those losses at a much less loss than what it's currently sitting at. That way I can stay in the trades, because I like, my thesis on the indices has changed a little bit since this morning with that inflation number coming out cool. I don't want to fight the thing. And if it wants to give me a chance to exit those calls, then great. And if it doesn't want to give me a chance to exit those calls and this market just rips through, then I am just going to be locking in profits from my buys in April. And I'll just accept that, hey, you know what? I missed some of the upside, but still a great trade. XLK, VOO, I will take those all day long. So ideally, we'll get some volatility here in the next few hours that would allow me to exit some of those positions. I know also, of course, a lot of traders out there asking about gold here. What are we thinking for the dollar index? What are we looking at for gold? For me, this morning was a nice, kind of confirmation that, at least for now, support has been found on gold. You've got the 2,300 mark holding well for spot price. This is going to be, if we get a green candle today, that's going to be our third green day after this big sell-off on the fears that Chinese central bank or the Chinese central bank might be slowing its buying or reportedly has slowed its buying. That caused a lot of fear in the gold market, but I picked it up on that pullback. We'll see where gold goes from here. Silver's also up 2.2%. Chris, do you still have a position on silver or gold? Are you trading these ones at all?
I'm long in both, man.
Oh,
I
nice.
am in, yeah. So GLD, I'm maintaining. My first tranche was right here around 212, and I'm
Okay.
just hanging on to that right now. And I'm willing to throw a little bit more at it, but a couple things I'm watching. So we have talked about gold at length, and I want to also get your opinion on the dollar index, because today was probably the clearest day that I've had in weeks about, okay, these levels actually were already on my chart, but it just was so much noise around the dollar that today I'm right back to the same levels. And I think the dollar is, it hasn't shown us a true direction yet, but we'll get to the dollar in a second. If we go to gold, one thing I'm a little cautious on gold is I think that, yes, we can have indecision on gold. We've had this nice run. This could be a bull flag in the making that continues to go higher. That would make some sense to me. But just in case this is a double top, or just in case this is a very kind of deep right head and shoulders, if we break this neckline and head lower, gold could be projected down to about, I need to go to XAU, but gold could be projected to around 2120 or so. So right here, because we have a little bit higher high, so left shoulder, head to neckline. If we have a neckline right here that's setting up that right shoulder to drop, I'm going to show you how. There's two ways. I can either look at this as a double top because we didn't close above that high. So if this is a double top, there's my low. And then if we break that low again, get that right there. So we break that low again, that would project us down to around 2130 to 2120. If we have a head and shoulders trade, we break that neckline. We do the same type of thing, probably around 2120 to 2130. Also, that's trend line support on gold. Now, all I'm saying is that's my second level to buy gold. I am still liking support at 2300 or so. I'm long on GLD at 212, but I would be looking at that level to kind of finish out a move if we're going to see a downside at all on gold, 2130, 2120, and whatever that translates into to GLD, I'll just pick up another chunk of shares and I'll dollar cost average in and see what gold is. But I still like silver better. I truly think silver is a better technical trade. Silver is not looking like a reversal pattern, but more so just a little bit of a pause. Maybe this is just a bull flag in the making. There's very strong support here at 26. I don't necessarily think we're coming back to find it. I think that we could be looking at a trend line support here and just consolidate on silver until hopefully another chunk higher. So I like silver better. And part of that is still able to catch up and maybe outperform. But the nice thing is I'm switching from option contracts to now ownership. So I don't want to be as time sensitive on gold or time sensitive on silver like I was with my kind of leaps with the option trades. Now I'm just looking to own SLV, own GLD, and then sell covered calls against it to lower the cost basis. Keep it simple. Yeah. Dollar index, dude. What do you think? So I've had these levels on my charts for probably the last month or two. And today is kind of the first indication that this market does not want to get above 105.60, nor does it want to get below 103.90. So I still think I'm torn with any type of clear direction on the dollar outside of range trading. And look, it's summer trading, Nick, so we might see range trading still on the dollar, but holy volatility, man. I mean, we had a huge move up last week on the dollar that today is pretty much taking it all back and found some efficiencies. So to me, there's really not a lot of longer term decision making or direction or momentum on the dollar index. It's just pick your battles, see it be choppy, and be careful on those dollar crosses because they're all different. It's like not every dollar pair is great. I know we looked at euro dollar this week. Now it doesn't look nearly as good. There's some it's ugly stuff.
There's some real divergence on the dollar kind of different options that you have out there, because you have like the euro stories muddled a little bit with the parliamentary stuff that went on, and then you have just kind of unique components to each one of these. The Bank of England, I think they also have elections going on, and they're talking about rate cuts. They have their own politics, and that's the thing about the dollar index itself, which if you trade ETFs, you can trade things like UUP. That's an option. It's pretty thinly traded, but if you want to avoid selecting an individual currency to go against, that is an option. The other option that I prefer is just to trade TLT, because then you can kind of get generally, and I like the yield story a little bit more, focusing on the central bank and the U.S. isolated, if I can, a little bit more with the yields. But regardless, in terms of the dollar index,
Yeah, it's at an interesting level. You've got 104 right here. If that breaks, I mean, if we get more dovish confirmation today, to me that could lead to a slide in the dollar that takes us down to 102.5. You're talking about a retest of these lows of is that the yearly low? No, not quite. I think no, it is. Yearly low is right around here at 102.5, 102.2. I think that if you get a really cool inflation print today and some confirmation from the Fed that rate cuts are still on as we approach this, well, we are in the middle of the year, you're talking about the potential to really get that breakout. Now, again, that's not what I'm saying I think is going to happen. For everybody listening, please understand, I'm not saying that's what's going to happen. I'm saying let's wait and see. If you get something like that, I'd probably be a seller on rallies of the dollar. That would be my take on it. And then, like you said earlier, until it does that, there's nothing to do for me and the dollar right now because we're still stuck in this range. You could also, I could make a point where if they say something incredibly hawkish the other way, right? Just depends if what happens with this range and if it's coupled with what I believe would be a strong conviction from the Fed or some data that just really screams in your face. But guys, we are just 1 minute out. Let me not miss the news here. This is a big one. So let me switch over to the all markets view just so we can all keep an eye on this one. We've got indices up here, S&P, NASDAQ, the Dow, which completely erased all of its gains. The dollar index down big, pound, euro, gold is up here in the top right, and oil is in the bottom right, guys. We're about 30 seconds to go until we get the dot plot, which could be interesting here. And yeah, we can go ahead and we'll go ahead and roll our quick breaking news here, if you don't mind, James. All right. Coming in here very soon.
Coming in hot. And again, no rate decision. But did you notice that when we talked on Monday, the market has shifted from a 50% rate cut probability in September to now like 60 plus, almost 70%. So that was a big jump from Monday to today.
Yep, I did notice that.
First reaction down in the indexes. What do you see there, Nick? You got the whole thing up.
Oh my goodness. Yep. So Dow just took out its lows for the day, which is so weird to me. S&P 500 down just slightly. NASDAQ down just slightly. Gold is giving back some gains here for sure. Euro down slightly. Pound down just a little bit. Dollar is rounding out. I mean, these are not massive moves, but there is a bit of a correction to the rally that we've seen today forming. Are you seeing anything, Chris, on your end, news-wise?
I am only watching the SPY, and so like I said, I'm not surprised it came back to retest today's open. So we're still not pushing into that gap yet. I'm just going to sit tight for right now. Again, there's no real rate decision change. There could be some noise here. It's literally minute 0 of the news announcement. So I'm just going to try to get a feel for the day. It could be a very volatile session. I don't know. I mean, at this point, I would think if let me see something. I'm going to price something out right here. If I just did a 0 DTE, because we've gone another couple of hours since my live session this morning, let's go 0 DTE. Let's take a look at, let me bring this price back up here. So get this back out of the way. If I did a 543 call, it's going to cost me $1. If I do a 540, it's going to cost me about 80 cents. So I could kind of strangle this for the day, see if price wants to go somewhere, pay $1.82, and fingers crossed that I get a move that, we drop another $3-4 or we go up another $3-4. Nick, just for fun, I'm going to take the trade. I'm just going to do this in my account here. I'm going to take this trade for about $1.80. Let me see what this is trading for right now. So if I do a 540 to the downside, and then the upside, if we get back up, the highs at 544, possibly breaching new highs at 455. I'd have to go out here. I get $1.40. I'm going to go in for $1.50. $1.50 debit. See if I can get in here for the day. I got filled at $1.48. So I'm in. Right. I'm willing to take the trade live and just see, if we have some wild and crazy direction, I'll be watching very closely, obviously, but it's a 0 DTE trade. And right now, this is all I have in. So I'm gonna monitor this closely. I'm going to put a close position here around $3 and see if I can kind of double up on the profit. What I need to have happen is price needs to get to 546 or so, or price needs to dump back down to try to fill the gap at 537. If that happens, I get a $2 to $3 move. Let me see, from $1.48, let me see if I can just make $2.48 credit on the day. I might get more than that, but I'm just going to go ahead and set my limit ahead of time and see if this will fill. So that will be a $2.48 credit. If I win on the trade, I make $100, and we'll see what happens.
Okay, fair
so
enough.
I'm in with something. At least I've got some skin in the game, and it's a small trade, but I'm hoping that there's enough volatility to take us either 1 all the way back down to 537, or 2 up above the highs at 545, and maybe give me an extra $1.50 movement. But we'll find out.
Yep, we're getting a little bit of movement here back and forth right now. I'm trying to audience. I'm going to ask a favor of you guys. If you have any information, please feel free to share it. We just had this. Fed officials' median view of the Fed funds rate at the end of 2024 is 5.1%. It currently sits at 5.25%. So 5.25 to 5.5. So they do expect some rate cuts as an average. So interestingly there, perhaps that's a little bit of the volatility here this morning. And again, if you find anything, please feel free to share in the chat. I'll try and pop your message up so everyone can see it.
Let me see. Let me just go to some real-time news here. Projections: 4 out of 19 saw no cut in 2024. 7 saw 1 cut. 8 saw 2 cuts. So we have a dissenting Fed for the most part. They can't get on the same page, but somehow they all say the same thing. That makes perfect sense, right?
Right. And so that's interesting. I've seen a little bit of movement, but nothing incredibly violent either direction just yet. S&P is giving back not too much, 0.2% of its gains today.
Yeah, it just came back to retest the opening low. Yeah, it'll be interesting, man. I mean, usually we do see a $3, $4, $5 move. I think I went back to this with Frank earlier this week. I mean, we saw like $8 to $9 move up and down last. May 1st was the last FOMC. That was like a $4 to $5, $6 move, and then we had a little push higher. It was like an $8 swing from low to high in the day, and it smacked it all the way back down to pretty much right where it started. So that was for $15, you go 8 up and 7 down. That's a lot of volatility in a single day, and I'm hoping that today kind of matches that, where we've gone up from a close yesterday to a $7 push from close to high. Yeah, $7, but do we crash back down $6 or $7? Do we rally up, $3, $4, $5 extra dollars? I don't know. We'll find out. I mean, look, you don't have a crystal ball, nor do I. I trade price action on days like this, or I stay out, or I'm managing the portfolio accordingly. But there's a lot of wild stuff. Just be careful. The other thing that I did this morning is I also started dabbling with some micro futures and Ethereum and Bitcoin, just because if we have that official ETF for the Ethereum side, just like with Bitcoin reaching new highs, Ethereum all-time highs are at 4,800, roughly 4,880. And that would be like a 30+% upside. So I took a couple of stabs at some micro futures on Ethereum, and I'm holding those out there for if I'm right, I'll make $300-$400 on a couple of trades. But I'd like to double and triple that and kind of dollar cost average into those micro futures. But other than that, I think it's going to be a little bit noisy here, Nick. Probably just staying between a tight range on the SPY, 541 to 544. But I do think that it'll be all eyes on Powell at 2:30. Maybe he can say a couple of things. Usually it's a combination of what he says to the Q&A, and the market just kind of runs with it. An easy way that I see trading this kind of every single FOMC is if you turn this into a Heikin-Ashi candle, it tends to eliminate some of that 5-minute candle noise. You let price do its thing, let it close. If it stays red, you're looking for red. Now I do know that if I go back to regular candle here, if it stays red and closes below 541, chances are we're going to have a little bit more pressure to the downside. If I'm sitting here right now staring at red Heikin-Ashi candles, and all of a sudden this goes green, if I want to look at that long position and go green, I could take that trade as well. Just look for a little bit more confirmation instead of getting some of the very quick noise you can see with some candlesticks. But it helps to read candles as is and wait for closes. But Heikin-Ashis are pretty easy to take out some of that noise.
Sure. Yeah, that is a good point too. I sometimes will pull that up for charts that are more noisy. Like TLT, for example, on a daily chart can sometimes be really hard to look at. It's so choppy. But if I switch over to, where is it?
Right above, you got it right there. Yep.
Yeah, see, like you can smoothen out the chart a little bit, make it a little easier to look at. Speaking of TLT, again, thought process for me on this one is that we're sitting at a level of resistance here at right around that 93.30 level, let's call it. If we again get some follow through here today and we do see price break through the highs, I will be looking for a chance to sell calls. If we get a clean, big solid break, I would say if we rally into the close today, I'll probably just take that as an opportunity to set a take profit essentially and get paid to do so. So I'm fine with that as a potential option. Yields are down 2% on the day, bouncing just slightly off of this, and then the 2-year and the 10-year, same kind of story. You mentioned Bitcoin, Ethereum. It's so funny to me sometimes, Chris, when people who are the crypto super fans, they hate to admit that their beloved thing is susceptible to the same winds that other markets are. I mean,
Totally.
Yeah, right. Bitcoin is
it's
just
not immune at all.
It's not immune at all. There's no it is incredibly correlated to other risk assets. It is not safe from traditional finance as much as people would love for it to be. So, I mean, now it's an ETF. At this point, it's practically a penny stock.
Well, and you got to wonder too. I mean, I don't know if these approved ETFs are kind of sucking the life out of just the spot market, the futures market. If it's just going into like the buy and hold scenarios now, the price action has been a little bit different. Obviously, Bitcoin was pumping on the pending approval, and then it happened. We had the pullback, and that was a good opportunity to buy a dip. So I'm wondering if Ethereum does the same thing. If they approve it, it dips hard, and then there's another rally to the highs again. But like I said, little micro futures is pretty solid. I want to address one question. I think Jake was asking, what do you think I think about the yen crosses the dollar yen? I'll say this, like I've said it for months and years. I hate the yen. I think right now the yen is one of the dumbest currency pairs to trade, unless you want to scalp it, just because you're waiting on a central bank to have some type of massive manipulation or intervention, or you're waiting for what is going to be more troubling is going to be this massive deleveraging and unwinding, which we saw back in 2022, which we saw back in 2020, which we saw in the end of 2021. That's the carry trade unwinding. And if the yen's going to get significantly stronger over a 3 to 6 month period, it's going to have to be with trouble. It's going to have to be with risk off trading. And right now, I just don't see that happening. I think there's too many positive signs happening. The Nikkei is up for the first time in 34 years to all-time highs. The yen is arguably still weak. The BOJ has no real end in sight. They just came off negative interest rates. But you're just seeing way too much intervention manipulation on the yen basket, and I think it's almost impossible to know what it wants to do outside of look at the higher time frames like a daily, weekly, and look for something so obvious. If I'm looking for yen strength, it's going to have to be just a massive topping pattern, or some type of like really obvious way to place my trade and kind of position for it. I want to bring a couple things in here, Nick. So I'm just reading this, Fed projections. So we have the 4 to 19 saw no rate cut. That was we went through that divergence, but it shows here policymakers see end of 2024 PCE inflation at 2.6 versus 2.4. So actually, the forecasts are going slightly higher for PCE inflation, and then you go to your PCE and core PCE 2.3 versus 2.2. So those forecasts are slightly higher than expected, and you got to wonder, okay, so inflation came out slightly better than forecast today. Market got really excited, but here we are projecting by the end of the year that PCE and core PCE are going to be slightly higher, not by a lot, but enough so that they're not below 2%. They're not near the target that the Fed's been talking about and just trying to reiterate over and over again, 2%. I mean, we're a long ways from it, dude. 3.3, 3.4. We're a long ways from 2%.
Yeah, and we've been hovering at this level for many, many months too. I mean, we've not really broken under the threes and stayed there for a while. And not to mention, if they see inflation going to that speaks as well to their expected rate cut plan. To some degree, if it's like if they see inflation coming down less than what the market kind of consensus is, they're the ones who make the decision, not the market, so that's the interesting dynamic there as well. No huge move, but again, I would imagine that even if you do see some movement, Chris, in the precursor to Jerome Powell speaking, unless it was just a bomb drop, probably some volatility both directions just while we wait for the big thing. But when he speaks, I mean, there is the potential always for huge moves in either direction. So we will see what he has to say. It doesn't take much. I mean, there was one meeting, Chris, where I had to hop off to do a podcast session, and Frank, I left him because I was like, there's nothing else happening, but Frank, just stick around. Sure enough, like 30 minutes later, after I get off the podcast, the market just made this huge drop, and it was just like, what in the world has happened? And there was one question at the end of the press conference that he slipped something, and the whole market freaks out. So there's always that X factor, that unknown potential.
Can you just imagine for a second having that type of, it's power, right? It's like if he says the right thing or the wrong thing, he maybe improvises in any way, shape, or form. It's like, man, that guy can 100% rock these markets if he wanted to. I think he's done a fantastic job talking out of both sides of his mouth and making sure that the market has, for the most part, just remained steady. We survived a big deleveraging in 2022, right back to where we, all-time highs. Everybody celebrated again. And again, it's like, what is his motivation? I really think Jerome Powell doesn't care that we're at all-time highs. I think he cares that the Fed doesn't have to be reactive and backstop something worse. That's what I think is good right now. So that's arguably that like soft landing, no landing. But as we talked about this week, we got I feel like it was more doom and gloom for me to be like, you know what, October 2024, that's 2 years into this inverted yield curve. That's something I'm now aware of, that's on my radar. And so I think it's going to be really important how we maybe survive the summer. And typically you have Jackson Hole in August, you've got the September effect, but October, November, December this year, to me, is going to be the most telling sign of where we're going into 2025. If we have a bad Q4, I think 2025 is going to roll that into something worse. If we have a good Q4, then I'll still be short in 2025, most likely.
That makes a lot of sense, Chris, because the Q4 is so pivotal to especially companies like like Amazon and some of the big game changers in the consumer side of things. Speaking of Amazon's down on the day, you get these big companies that do a lot of their sales. I mean, even in our small business world, in November and December and October, those are big months for us too, because those are like consumer times. A lot of people have holiday shopping that they're doing, and so in terms of an outlook for the market, those are really pivotal times. You want to see smashing earnings reports, and if you don't, again, market will freak out a little bit. Guys, we've got just about 15 minutes to go here before the press conference. We will be loading up that video footage so we can tune in and react live to that. Currently, S&P 500 had a little bit of a dip, currently not moving too much, but still waiting for the main event. The Russell's up 2.5% today. The Dow is just about flat on the day, which, again, completely erased its gains here this morning. I looked into it, Chris, just for fun. UNH, some of the big names in the Dow Jones down 0.93%. You have Amazon down today, as I just mentioned. So some of the contributors to this underperformance from the Dow Jones, as you had mentioned earlier, were from some of those price weighted names. So just something to think about. The NASDAQ, again, exploding higher with no question being led by the semis and technology, software, all three of those up big today, and rightfully so. I mean, if you're going to see rate cuts at some point, those things are going to celebrate it. Same thing with real estate. Real estate's up here today. Financials modestly higher.
Look at your small caps, Nick. That's probably the sneaky winner today. Is the Russell is ripping. It's actually up like over 2% for the day versus the other one. So
yeah,
that's a big plus for the small caps, to really show like, hey, this rate cut stuff. I mean, and if you zoom out on the Russell and you go to that daily or weekly chart, to me, this is where this is where a lot of old school value is sitting, because there's that very true correlation of only so long does large cap outperform small cap, and we're at one of the most outperforming ratios that we haven't. It's been so extreme. Like, we go back to like 2001, 2002 was the last time that large cap outperformed small cap to this degree. And so for me, we're talking about the Dow Jones hitting all-time highs, which has already happened. The SPY hit all-time highs, which already happened. NASDAQ hit all-time highs over and over again. We've seen these hit all-time highs. The Russell has still been chop suey in this area, but if you stretch that up, there's another, I want to say that's close to like 17 or 18% to the upside. Let me see if I go just IWM for a second.
19% even.
19%. So if we get to those highs, therein lies a pretty good rally. And the reason I bring that up is, if you want to see the power of the Russell, go back to Q4 of last year when this thing ripped over 30% and it was 3, 4, 5, 6% better than all the other indexes.
Yep.
So I mean, if it's going to get the broad market push, it really does have a huge performance potential. And I that's why I'm positioned the way that I am. It's like, I'm going out to like January of next year. I'm looking to see if the Russell can catch up this year and try to time that trade where it's like, I give myself enough time, see if the broader market wants to keep poking higher highs and the Russell plays catch up. Maybe that's the case. Again, it's an option trade. We'll see if it's right or wrong. We're right back where we started, man. I mean, we're 10 minutes away from the press conference to kick off here. Dollars had a bit of a wick to the downside. Do you want to show your full graph? Let's show all the charts and just see. I think there's just a bunch of noise we've looked at here the last 19 minutes.
Let me pull it up. Got our all markets view now. So there you go.
Yeah, just a lot of wicks.
Yep, a lot of indecision. Got the dollar bounced a little bit, came back down. Pound and euro dropped and then bounced flat for the last hour or so for most things. But again, probably just nothing dramatically different from the dot plots than what people were thinking. But now on to the press conference, and is this enough? That's the question. Is, you mentioned it earlier, Chris, is here we are. We've been in this game for a long time with inflation not trending lower. Now you might say, well, today was a good start, and that is true. It's come down a little bit. It's moving in the compass is pointing in the right direction, but there's not like a suspended trend. I mean, take a look at Europe cut rates, right? Europe cut rates, and their inflation has come down, and they've been in a 2 handle for a while. Here's 2.6, 2.4, 2.8, 2.9. I'm talking about Europe's inflation rate. Inflation rate for Europe was 2.6. Yeah, they started cutting rates because it's seemingly staying below that 3%. It's not a roaring threat, And then here we go. U.S. inflation can't seem to even crack below 3s. It doesn't mean that it won't crack 3s, but the Fed has made so many points over and over. We're data dependent.
Yep.
Once you actually see the inflation come down, then the market's going to rip higher, I think. And the question will be then, is it ripping higher and wrong about ripping higher because now inflation is falling because the economy's cracked? Or is it the true Goldilocks? Inflation's come down, the economy's going to hang in there. That's the next question. And, by the way, Chris, if that happens, if inflation comes down, but the economy hangs in there, Russell to the end, that is the growth plus good inflation story. That
I want to see if I just did a comparison. I'm trying to, do we have that on the EDGEFINDER? If you did like Russell over NASDAQ, could you see just even if like the last like 5 years or 10 years, I feel like the performance is just so wide. It would be a pretty classic reversion to the mean, or just give the Russell a chance to catch up. It'd be small cap catching up.
We don't have it on the EDGEFINDER, but I can do it on TradingView really quick just for.
Okay. Just doing like two line graphs and overlay.
Yeah, let's do it. SPX versus IWM. Let's do line and line. Okay. So here's your weekly chart.
There you go.
S&P is the white, the Russell is the orange.
Can you throw the NDX on there as well, or the Qs?
Yeah.
Because the Qs will be even higher.
All right, there you go. Qs, S&P, and there's IWM in orange. And not usually the indices, during a bull market, usually the NASDAQ's running higher than the others, but usually the Russell and the S&P are hanging together at least.
Yeah.
And, you can take your pick. Most of the time, those two things are moving at least similarly. There are times there's a point where the Russell's actually outperforming. This is 2003 to like 2007. Obviously a good growth period like that. So if you enter into a growth period, there might be the catch-up trade, right?
Yeah. And and again, there's no guarantee because, like I said, we're staring at about 20 years of underperformance on the Russell. But when it has its moments, and this is where we've kind of we've seen the reality that we're at the halfway point of the year, right? And having very few stocks and have high concentration, and we're carrying these market cap weighted indexes to all-time highs. The Russell hasn't done anything. Now the Dow is starting to show divergence because of those top 30. Like, I mean, if you take United Healthcare, dude, it's getting beat up like crazy compared to some of the, I mean, the bigger holdings in the Dow have been poorly performing. So anyway, point is, it's an old school correlation, but I do think there's merit in it because, oftentimes these things are around for a reason. There's a reason there's a 30, 40, 50, 60-year correlation with these things.
Yep.
Same thing with equities and bonds. It's like at some point these rhymes over these years are going to make some sense. And I mean, you bring up a great point. If inflation, and for the US it is certainly sticky inflation, but if we can break that sub-3 inflation and start pushing lower, month after month, I do think that is truly what this Goldilocks is ultimately looking like, to blow these markets up and like blow higher, even and like the top is off.
Yep.
We've hit the top, 24, 25 times, but if we blow the top off and it's another, 10, 15% to the upside, it's scary, but it's also the market can remain irrational longer than traders remain solvent.
yeah.
But
Yeah.
man, it'd be spot on if we do
Well,
see
the
the
Russell
inflation
would be
data dip sub-3, the Russell would be a great catch-up trade for sure.
Yeah, the Russell would be the play if you get a trend of inflation to the downside that forms, but you
Yep.
also keep the jobs figure okay.
Yep.
Those are the two variables, and that's what the EDGEFINDER is programmed for, specific. For the Russell to get a great score on the setups. The thought process on the Russell is economic data hang in there, inflation come down. It's going to be
Correct.
rare, but for the EDGEFINDER to give it a really bullish score, that's what it would have to see. It would have to see inflation statistics, healthy, looking okay, improving, headed in the right direction, and growth metrics, GDP prints, and PMI numbers and employment numbers coming out hot. That is specifically how it is programmed. That's a great opportunity with 5 minutes to go, guys, to remind you that our 25% off sale is ending soon. If you guys have not picked up a copy of the tool, 25% off if you use the first link in the description, or we'll drop the link here in the chat. If you guys haven't picked up a copy of the EDGEFINDER, again, it is 25% off right now. If you click this link, speak with a rep, you get 25% off the EDGEFINDER before that sale ends today. Get yourself a copy, trade with data, use the same tools that we're using each and every day to find trade setups in the market. And again, Chris, we're counting down here. 5 minutes to go before we hear from the man himself. Let's take a look at the heat map. I'm just curious. So dude, Apple is insane. Apple's up 10%. And I'm gonna be the first one. Call me a bear, but I just don't like Apple 10% up in a week with no like grand slam new products. That's my opinion.
Oh my, I mean, dude, the last 48 hours, that is insane on Apple, outside of the fact that maybe this is the market's admission that, hey, look, we got it wrong at the beginning of the year for whatever reason, right? It's like this is the market playing catch up with one of the most competitively advantaged stocks that we have, the number one stock in the world for so many years. And all of a sudden the market's like, well, you guys are having a problem with China and you haven't innovated. Well, all they had to do is talk about AI. And again, I read the information on the WWDC or whatever. People were disappointed about their AI talk and the space. And Elon Musk is being vocal about, if you do this with OpenAI, I'm going to ban it for my company. I mean, again, it's drama, but look at price. This is Apple catching up in a big way, where the market hated it at the beginning of the year. And now, I mean, this is one of the biggest rips that we've seen. I mean, for a stock that essentially is a safe haven tech stock, this thing's up 33% in a matter of 2 months, man. That's impressive. So
It really is.
I'm just glad that I was long, dude. I own this thing at like 167.
That's awesome. I got
Yeah.
caught in the camp of I'm going to buy it at 155, and I missed out on the
Okay.
155. I got, because it's a company I think I want in my portfolio, but I wanted it at the right price, and at that time, and to be honest, still I'm a little bit like, okay, the revenue for Apple, I would like to see revenues growing. I mean, I know you've had revenues in their services, specific sectors within the company have been growing. That's good, but I'd love to see growth on the numbers for this company. You've had pretty stagnant revenues for the last few years, but maybe AI is going to take them there. I don't know. We'll have to see, and maybe those new products are going to be a game changer for them. But we'll have to see. Guys, we are just about 2 minutes to go here, or even less now, from the press conference. James has it loaded up for us. Once we have Jerome Powell speaking, we'll take over the screen so we can watch it. Chris, you going to hang around, or you want to hop off?
I'll hang out, man. I'll hang out because I want to see what happens with the I'm in, dude. I'm in for the next 90 minutes because I want to see if these trades, these Euro DTEs give me something by the end of the day.
Okay, sounds good. Yep, we're getting close here, and as soon as we have that feed, we'll pull it up on the screen so we can all relish in Jerome Powell's
let's just
speech.
bask in his greatness.
Yes, exactly. The man himself.
One thing I want to note real quick on the SPY, I'm getting some gamma levels printing up around 545. So this may be calling in some levels institutionally where we can start breaking some highs on the day and get up to 545. So that's just what I'm seeing in intraday right now.
542.78 on the SPY. SPX is making a push higher. It quickly erased any sort of pullback that was there. You've got the Russell doing sort of the same thing. NASDAQ back towards the highs. Gold catching a little bit of a bounce as well. TLT doing its thing. Bitcoin up 2.77% on the day. Volatility everywhere, that's for sure.
Yeah, definitely. Open the floodgates. That's what today's type of trading days are all about. Just everything wants to move.
Yeah, it has the potential too with PPI tomorrow, just continued volatility this week. I mean, we'll probably see some wild swings one way or the other. And I should mention with the PPI tomorrow, you want to also watch out to make sure that producer price index doesn't come around the corner and spook the same, hype that came out today, right? If you get a really hot producer, that happened the other day, one of these other months, there was a producer price index that came in really hot, and then CPI came in and cooled it all off. So you can get the other way around as well. So we'll have to see what happens with that tomorrow. But we have a feed, but Powell's not yet at the stand. So as soon as we have that, we'll pull that up for everybody.
Taking his sweet time.
Keeping us all on our toes. That's all he's doing. He's a likable guy, really. I do actually like Jerome Powell. I think he's a nice old man.
It's been fine. I like him better than Yellen. I mean, Yellen's press conferences were terrible to listen to.
Yeah, I agree.
Just like a bridge troll.
Oh, here he is.
All right, there he is, the man.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, Private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and then hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher, 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Timmeros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings like the one that we saw this morning make a September interest rate cut possible?
So as far as the SEP part of that is concerned, As you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I don't really, I can't really distinguish between two of these. They're so close for me. These are very close calls, but we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around one or two. So I think I would look at all. I look at all of them as plausible, but I'd look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly more good inflation readings will help with that. I'm not going to be specific about how many, because really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that, and we see today's report as progress and as building confidence. But we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't, most people don't. And I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, kind of first level translation to PCE, we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
John Allen. Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and you know that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand. And that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. How can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year. And as I mentioned earlier in the, what did we take away from this? We had really, really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter. And what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year, take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. We're at the economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina Smilik, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed. And what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today, we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But I back to your original question of, people have been gradually writing it up because I just think people are coming to the view that rates aren't going to, are less likely to go down to their pre-pandemic levels, which were, very low by recent history measures. Now, we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think that things like the neutral rate are driven by longer run, slow moving forces. And, there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And, my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having, the effects that we would hope for.
Well, thanks, Chair Powell. Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on, we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal. And then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking. And that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had above trend potential growth and high growth, and yet you've had the benefit of inflation coming down really fast actually last year, and you will see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that, though. We're look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market, and your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that, you know, since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but, you know, no one has that as their base case. So no one on the committee does. But so that's you know, that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and you know, that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So I mean, we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, you know, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. I mean, ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, you know, low mortgages. In terms of banks, the banking system has been, you know, solid, strong, well-capitalized lending. You know, we've seen good performance by the banks. We had the turmoil early last year, but you know, banks have been focusing on bringing up their liquidity, bringing up their capital, and having a risk management plans in place. So the banking system, you know, seems to be in good shape.
Chris.
Thanks, Chris Rugaber at Associated Press. I was wondering if we can. On inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, you know, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, you know, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, you know, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and you know, we've taken some signal from that. But you know, and of course, housing services, you're continuing to see high readings there. To some extent, that's you know, catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, you know, I would say above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, you know, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy? What you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years, and try to pull out the significance to the U.S. economy of 125 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters. And I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably on 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene. Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of a long period of high inflation. It is people who, lower income people at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year. And I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, and particularly the second half of last year, and we continue to see still strong growth or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning of when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward. Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home, but households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago. And we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right, though. We do see the same thing other people see, which is increasing financial pressures on more lower income people. The best thing we can do is to foster a very strong jobs economy, which we think we have done, ultimately to get inflation under control, because those people experience inflation, very directly, very painfully. And once we get inflation under control, rates can come down, which will also improve things.
Victoria. Hi, Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner. And I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken? When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. The labor market, has the ability, has the tendency sometimes to move to weaken quickly. So waiting for that to happen is not what we're doing. We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So and also the fact that we look at all of the whole situation. So, a decision to begin to loosen policy could have several reasons associated with it at a given time. But I would just, we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too. So something like negative payroll numbers would be.
I'm not going to. I can think of things that many things would make it on that list, but I don't think I'll utter them here.
Thank you, Chair Powell. Simon Rabinovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
I don't actually have that kind of mechanical thing in my thinking. I get that, as many good ones as we had bad ones, but no, it's not like that. It's going to be the totality of the data, the labor market data, the growth data. In terms of inflation, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of things because that points to dates, and I just don't think we're not at a point of being able to do that.
Kosuke. Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan and some emerging market are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't actually. It's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, and for our economy, what we're trying to foster is maximum employment and price stability. And we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once? You're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation.
So we're well aware of the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. Or there's another test, which is, an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there. And, we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low. So we have the ability now to approach this question carefully, and that's what we're doing.
And just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
Yeah, we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Evan.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review later or late in the year. In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be communications generally. I'm not going to say that we'll look at this or that particular thing, and all the other details. We don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave pretty much everything else to later in the year.
Go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't. There isn't any one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So,
But if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you look at we'd be looking at the aggregate numbers and asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
All right, I'm unmuted. Chris, you're unmuted. All right. Chris, what'd you think?
A big old nothing burger, dude.
What's new about it? You know, that's the standard is
I think that all of that talking and clearly talking both sides has really allowed the Fed to operate in this area of we're going to stay between 2 and 3%, and the Fed doesn't have to do anything. That's kind of where we're at. You know?
Yeah, that's an interesting take. I mean, it moved down a little bit and then it jumped back, and it looked like it was taking out the highs, and now what is the sell off is after the fact. So I don't know. It's an interesting event. I thought it was interesting that they pointed towards expectations for inflation staying pretty much higher for longer. But at the same time, so this consensus now is one rate cut for this year. It seems like from the Fed committee. I saw that when I was watching. I pulled up some news, found one rate cut is kind of the consensus now. Again, a weird move here where we're seeing the stock market back and forth. Gold came down. The dollar is up at the same time. Very, very strange there. But yeah, it seemed like a nothing burger because you had conversation in both ways as always. It's, we don't want to hurt the economy. We think we're restrictive enough, but at the same time, we still have to work on inflation. We got progress to make. So
yep.
Kind of the standard Fed meeting these days.
Yeah, and look, it's June, right? So June and July, FOMC minutes in August, September's the next big one. We could be in for a summer of nothing from the Fed. So I mean, data tomorrow with PPI, that's going to get things a little bit more exciting, good, bad, and different. Yeah, really, I think it's just difficult unless you're a futures trader or unless you're just in and out of the market in the first 15, 20 minutes of the day. Everything was contained to about a $2.50 to $3 move today. By the time we opened, it's like everything was tight. Everything was, I mean, Dow was coming back up and it's starting to fade that again. I mean, there's obviously a little bit more price action post press conference now, just shy of that 544 handle, kind of poke the bulls to the upside and just drop again. Look, we only have 35 minutes before closing bell. If this thing dumps, $3, $4, $5, that'd be a bit of a surprise, but it'll probably come right back down towards 541.25 and just bounce there and finish right in the middle. I mean, if it does something bigger, great. If it doesn't, I just wasted $148 today.
Well, yeah. What'll be interesting too is it almost is like the data is all that moves the market. The Fed meeting is just this noise. It just back and forth, and I don't know. I thought it was interesting that he kind of downplayed the inflation report this morning a little bit, but at the same time said that it was improvement, but he's like, we're still not, not there. And I don't know, very, very mixed, but kind of the standard, I guess. Consensus is next event is really PPI tomorrow morning.
Sure. And I think for the press conference takeaway today of the, we've been live for an hour and 40 minutes or so. You guys have been live all day. I mean, there were a couple of questions in there of all the Q&A where I was like, that's a good question, but he is just so good at answering.
Man.
He's so good at answering the question without giving any information to anybody. And, and I'm sitting here, we're sitting here watching price, and look, the conference is done. This is the best direction that we've actually had in the last 5 or 10 minutes, is actually watching about a $2.30 drop. on
Yeah,
this. I'm
right.
just watching the SPY on my side. But if I show my screen really quickly, this is what I've been staring at all day. This is the 9:30 to 10:30 range, and nothing
Oh,
is
yeah.
breaking out of it.
Yeah.
So again, what I should have done is nothing. I was like, well, the Fed could pop this thing up. I was seeing some gamma levels up to 545, but Powell just said nothing that the market got excited about. The market got excited ahead of the Fed, right? It was all about and that was a subtle improvement, but again, we're essentially just going to live and die month to month by the Fed right now and by CPI and all the data. I don't know, man. I mean, it is what it is. I'm happy that I'm up for the week. I took a lot of the drama out of the FOMC today. I was already in profit by 10 o'clock this morning. So I'm thinking here for the next 33 minutes, if something wild happens, then sure, I've got some exposure to make a little bit of profit there. But for me to make money, this thing has to dump back down here pretty aggressively towards 539, 538. Otherwise, if it chops around and stays in this range, I'm toast for the day and I just wasted money. But
Yep.
otherwise, it's just it was just a trade. We'll see what happens, but it's noise, man. And crazy day, man. You had all the indexes up. I mean, gold is down, dollars up, Dow's all over the place. Q's broke the highs but faded back in. SPY didn't break out of an hour range all day. So
Yep.
what are you gonna do?
Crazy. Very, very odd day. I mean, as you mentioned, gold completely erased all gains today. Yields telling a story. Yields bouncing here a little bit as we kind of close out the day. That's likely what is driving the TLT position back down, gold back down, and some of the Dow stocks as well. The S&P 500. We'll see if it makes any sort of substantial move. There's one for me, Chris. There's one saving grace on the day. I mean, I'm up on the day still, but wait, what'd you say?
Did you say TLT?
Well, TLT's the one thing that's going
Okay.
pretty well
What's
for
your
me.
saving grace?
The saving grace for me would be if we get a little bit more downside volatility. My calls I could probably work my way out of, but
Okay.
we'll have to see. I mean, I'm kind of good either way. If I take profits, I take profits. If not, I don't. But Chris, I'm sure we'll have you back later on this week. We're going to be, of course, streaming all the major events for the rest of the week. And thank you for hanging out for all this time on the air with us. And I want to just say to everybody who's listening here live with us, make sure you guys go follow Chris on his own social medias. We'll drop the link to his YouTube channel here now so that you can go find him there. You can also find him if you're watching on Twitter. We got a bunch of people watching on Twitter right now. Find him at Real Chris Pulver. Make sure to throw him a follow. And Chris, thank you very much for coming on the show today, man.
My pleasure. Thanks. That was fun.
All right. We'll see you tomorrow.
All right. Thanks, Nick.
All right, guys. And kind of closing out the show here, we've got a little bit of volatility to end out the day. The S&P 500 again selling after the fact, but what a green day overall for stocks. But we'll have to keep an eye on it, guys. We streamed for 7 hours and 16 minutes. That is a world record for the A1 Trading Show. It's the longest we've ever done. To close out the show, I just want to give you a last call. Remember that the EDGEFINDER, if you're a regular stream fan, the EDGEFINDER 25% off sale is ending. If you have not already picked up a copy, 25% off. Use the link being dropped in the chat right now. Speak with a team member if you want access to all of our different market data. This includes our top setups algorithm. This includes our data scanners for things like gold and S&P and indices. It also gets you access to our commitment of traders data, which is one of the most popular pages on the tool. Get access to our retail sentiment data, all sorts of good stuff. The put call ratio, we got a million different tools and features here. If you don't have a copy of the EDGEFINDER right now, it is a one-time purchase. You don't have to pay every month or anything like that. And if you use this link that's just been dropped in the chat for you, you can currently get 25% off of the product. Again, it's a one-time fee. It's discounted right now. If you click that link, you'll be connected to a real person on our staff who can help you if you have any questions. So if you have a few questions about the tool and you want more information, you can always chat with a representative by clicking that link. They're standing by to answer and get you set up with a copy if you're interested. With that said, thank you very much, guys, for tuning in to today's live stream. We'll be doing it again. There I go. I'm floating away on the moon here now. There I go. And thank you guys for watching. Have a great day. We'll see you next time.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.